Okay, we'll start. So in the last class, that is yesterday, we completed introduction to GST, then input tax credit also majorly we completed, and only the circulars are left which we need to discuss. And in this connection, already I explained this circular little bit. Whenever we are replacing some goods or parts during warranty period, then in that case, can we take ITC on those goods purchased for replacement during warranty period? Yes, we can. And just because we are taking ITC, when we replace it during warranty period, will it become supply? No, it will not become supply. First of all, why this discussion will come into picture? Reason being, in case of 71C, we have one point. Disposal of business asset on which ITC is availed. Here we are buying the part or we are buying the goods on which ITC is availed, and when we are replacing it during warranty, we are not getting any amount, which means that it may come under disposal of business asset on which ITC is availed. For that reason only they are giving this clarification, telling that no, it will not become supply under 71C. So please look into page number 116, page number 116, related to circular on replacement of part or goods during warranty and applicable rate of GST and additional warranty charges. Usually goods sold are under the condition that it will be replaced or repaired on account of defects during warranty, correct? Any product if you buy, they will be giving you a standard warranty for 1 year or 2 years, like that. Reversal of ITC shall not arise even if such replacement of parts or goods is without any consideration. So whenever I am using from my stock some parts and I replace it, for example, you purchased a two-wheeler and what happened, this horn is not working. You paid for it, but it is not working, or the light is not working, or the bulb is not working. Then what you will do? You will give it to the service center and they will replace it. Replace it based on the stock which is there with them, correct? Now when they are replacing it, are they charging any money or they are not charging any money from you? They are not charging any money, which means that whether you need to reverse the ITC, because when you purchase the stock you would have taken the ITC, whether you need to reverse any ITC in this case, no, you are not required to reverse any ITC. That is this point. Reversal of ITC shall not arise even if such replacement of part or goods is without any consideration. Even don't invoke 71C, that disposal of business asset on which ITC is availed, that point also don't invoke. Sometimes we will charge some consideration also. For example, depreciable parts are there. Depreciable parts means this brake shoe in the sense like your two-wheeler, four-wheelers, etc. will have a brake shoe, and whenever we excessively apply the brakes, the brake shoe will be worn out, and therefore when you give it to the service center, they will replace the brake shoe. But when they replace the brake shoe during the warranty, but you used it now for some days, say 6 months you used, means you don't have to pay the full price of that, but at least you need to pay some 20% or 30% of the amount. Are you understanding this? Why you need to pay that 20% or 30%? Because you used it, it's depreciable item, you used it, and therefore you have to pay some 20 or 30, means some money they will charge for replacement during warranty period, agreed or not? See there, if any consideration is charged with respect to such replacement, then it is supply under 71A and GST is payable on such consideration. Reversal of ITC shall arise or reversal of ITC shall not arise even then? Never. ITC is not a problem, you can enjoy the ITC. Whether you are charging consideration or not charging consideration, that is relevant for ITC. But if you charge consideration, it will become supply under 71A. If you are not charging consideration, then it is not a supply. Simple. Okay. Now look into this issue number 1. Sleek, like that one company which is doing modular kitchen. So nowadays lot of families wanted to convert their kitchen to modular kitchen with full of cabinets, drawer, etc. and all, because they wanted the kitchen to look good. And for that purpose they go for this modular kitchen concept. And this modular kitchen supplier is providing the basically interior, that is a part of interior decoration, because they will be making the cabinets like all rectangle square boxes, and they will keep it, and they put the plywood, doors, handles, etc., etc. Correct or not? So basically it is an interior decoration only, and for which the customer will pay a consideration of 8 lakh plus GST 18%. And what happens, sometimes this cabinet drawer is there na, that pull one. So like this cabinet drawer, when you are using it, there will be some wheels inside. That wheels will be broken, because what will happen, mom will have some anger on dad, so she will pull like this, or she will just push like this, so definitely it will be broken. But they will be providing a 1 year warranty. So during that 1 year warranty, if something happens, they will replace. But the problem is that wheel alone they cannot replace. The entire hinge they need to replace. For that purpose, they purchase the parts. Parts purchased by Sleek for replacement to customer during warranty period of 50,000 plus 6,000 rupees GST. Now what they are doing, they are basically doing free replacement during warranty period. Is it supply or not a supply? Not a supply. Not a free na, it's not a supply. Now that 6,000 rupees they can avail ITC, or they need to reverse the ITC? Avail ITC, they don't have to reverse the ITC. So ITC of 6,000 rupees they can avail, and ITC of 6,000 need not be reversed. Is it clear? Why I am giving you the examples is that maybe on this circular they can create some questions and they can ask. That's why we are discussing this. Then suppose if they charge money pa here for this replacement, if they charge money, then it will become supply. Even then the ITC will remain same. Very good. Then issue number 2. There is a car manufacturer. That car manufacturer is giving the car to the dealer, selling the car to the dealer. And you or Mr. X purchase the car, and now for car definitely there is a standard warranty of 3 years, like that standard warranty will be there. Sale of car including warranty for 3 years, and you paid 15 lakhs plus GST, and the dealer paid 12 lakh plus GST to car manufacturer. Okay, now what car dealer will do, will provide free after sales service. This free after sales services, is it really free? This free after sales service, is it really free, or they will get money for this? The dealer is doing na, even two-wheeler also you buy and you get a free after sales service, means free service is there, first service, second service free, like that. Is it really free, or they will get money for that? They'll get money for that. From whom they will get money? From the manufacturer. Is it clear? So means they are not going to charge anything from the customer, but they are going to charge money from the manufacturer. So then replacement of parts, sometimes during warranty, say for example, this reverse parking sensor may not work. Usually when the car you take on reverse, so that beep sound will come na, so that if you are hitting something, so the beep sound will increase. Okay, so this is called as parking sensor. Sometimes the parking sensor may not work. So at that time what they will do during servicing, they will replace, because it is covered under warranty na, so they will replace, like that 2,000 rupees worth of part they have replaced. Understood the facts of the case? Respond. Now what happened, look into situation 1. Dealer procured the parts, but dealer what they are doing, there are multiple ways they can do. That's what I have given, situation 1, situation 2, situation 3 and situation 4. 4 different situations may happen. Now some car dealers what they will do, they will buy the part from the market and they will replace the part. Example, Maruti Suzuki. Maruti Suzuki what they will do, so their parts are extensively available in the market. So therefore the service center will buy the part from the market and they will replace it. Okay. Now Lanson dealer purchased part for replacement by third party and charge consideration from manufacturer. So what dealer is doing, he is buying the part and replacing the part, but for that part how much ever they have purchased and replaced, that much money they are recovering from manufacturer. Okay va? Now you are dealer, I am manufacturer. Now tell me what you will do first. You are dealer. What you will do first? First you will buy the part from the market, 2000 rupees. Let's assume 18% as the GST. Means how much? 2360. 2000 into 18%, 2360. In that, can you take 360 rupees ITC? I want you to focus. Please listen. You are a dealer. You are buying a part by paying 2360 rupees. You are buying. Means can you take the 360 rupees as input tax credit? Yes. You are only buying now. So you can take ITC of the 360 rupees. Are you with me? Now, what you will do next? You are doing free after sale service. How much? 3000. So, how much you will recover from me? 3000 or 5000? 5000. Why 5000 you will recover from me? 2000 rupees part you purchased. Actually, that who should have done the replacement? Manufacturer. You are a dealer. So, what as a dealer you should do? You should have asked me, but you yourself purchase the part and replace during the warranty period, which means that you should recover the 2000 rupees also from me and you will recover 3000 rupees also from me. So, you will raise a invoice for how much to me? 5000 plus 18% GST, that is 5900, and 900 rupees you will pay GST to government. Understood, pa? From your perspective, you understood. Who are you? Dealer. Now read the dealer point of view. From dealer point of view, because in exam they can ask either from dealer point of view to answer or from manufacturer point of view to answer. Suppose if it is from dealer point of view, invoice for recovery of cost from manufacturer, how much? After sale service 3000, replacement of part 2000, total 5000 plus GST 18%, so 5900 rupees. Now, how much GST you will pay to government? 900 rupees. Thereafter, you are procuring a part from the market for 2000 rupees into 18%, 360. That 360 rupees you will avail as ITC and adjust against this 900 rupees. Understood? Then, is there any reversal of ITC that you need to do? No, you don't have to do any reversal of ITC, even though you are replacing the parts freely. Got it? Next, from my side, can you tell me, per manufacturer side, what I am doing? I am not doing anything. I am just paying you 5900 rupees. Correct? Means that is a inward supply for me. Can I take that 900 rupees as ITC? Yes. I don't have to reverse anything because you raise me invoice for 5900. I will pay 5900 to you. That 900 rupees I will take ITC. So manufacturer shall pay 5900 to the dealer towards invoice raised by the dealer. ITC of 900 rupees can be claimed by the manufacturer. Clear? Then, situation 2. This situation 2, some dealers what they will do, they will not buy from the market. Parts and all will not be available in the market and they will not buy from the market. Example, Tata. What they will do, they will raise a request for the part from the manufacturer. They will raise a request for the part from the manufacturer. Till the time manufacturer send the part to the dealer will not do any servicing. That's why you would have heard of in Tata, the service is very poor like that. Okay. Tata cars and all, car is good. Car is amazing. Really the build quality of Tata Motors car is very good. But the problem is with the service centers. Why? Because they follow this model. What they will do? Parts they will not keep. Neither they will buy from the market. They will raise a request to the manufacturer. Till that point of time, our car will be sleeping in the service center. You understood? Now, in this process, you tell me as a dealer, from dealer point of view, you are a dealer. From your point of view, tell me what you will do. You will buy the part from the market or you will not buy the product. You will not buy the product. Automatically, you will get that product from the manufacturer. So, how much you will recover from manufacturer? 5000 or 3000? Why not 5000? Because part you are getting from the manufacturer. So, therefore, how much you will recover from the manufacturer? 3000. So, 3000 plus 18%. How much invoice you will raise? 3540. So, what is your liability? 540. That's it now. Yes or no? So, see from dealer point of view, invoice for recovery of cost from manufacturer, after sale service 3000, GST 18% 540, invoice value 3540. Done. Now from my side you tell me, from my point of view, manufacturer point of view, first dealer raised invoice for 3,540. Can this 540 the manufacturer take it easy? Yes. Now who is buying the part? Manufacturer. Manufacturer is buying the part. Can manufacturer take it easy on the part purchased? Yes. So manufacturer will pay 3,540 to dealer. ITC of 540 can be claimed by manufacturer. Also manufacturer purchase a part for 2,000. So on that 360 rupees can be taken as ITC by manufacturer. Whether manufacturer is required to do any reversal of ITC? No. But manufacturer is not replacing, dealer is replacing. Whether manufacturer is replacing the part during warranty or dealer is replacing the part during warranty, no one is required to reverse the ITC, whomsoever purchase it. Let manufacturer purchase it or dealer purchase it, they are not required to reverse ITC. That is this circular. Got it? You understood second situation also? Then third situation. In third situation, what will happen is that this is like almost all two-wheeler dealers will follow this. They will maintain the inventory of the spare parts. You would have observed. Dealer, that is service center itself, will maintain a inventory of some spare parts. They will maintain the inventory of spare parts. So any product damaged, like any part needs to be replaced, from the inventory they will replace it. Okay, that is the situation. Carefully listen. 100 number of spare parts supplied by manufacturer to dealer. So I have sent you 100 numbers of a spare part. For example, spark plug. Spark plug, 100 numbers of spark plug I have supplied to you. Okay, wow. Each spark plug is how much? 2,000. 100 into 2,000 will be 2 lakhs. So I will raise an invoice to you for 2,36,000. Are you with me? I will raise you invoice for 2,36,000. Now what you will do on this 36,000? You will first take ITC. Okay, va? Then out of that 100 numbers of parts, you will take one spark plug and you will replace during warranty, which means you will pay me for 100 numbers, 99 numbers. You will pay me for 100, 99 numbers. 99 spark plugs only you will pay me, or entire 100 spark plugs you will pay me. Because I raised you invoice, not 100. Because out of that 100, one spark plug you have taken and replaced during warranty. Actually, who should have done that replacement during warranty? Manufacturer. But as a dealer you are replacing, which means you will not pay me for 100 numbers, you will pay me only for 99 numbers, which means what should I do? I gave you invoice for 100, but you are going to pay me only 99. So which means I need to give you one document. What is the name of the document? Wow, super, very good. Credit note. So therefore manufacturer should give a document called as credit note to the dealer. You got it? Based on that credit note, what you will do? You will reverse the ITC. Means I will give you credit note for 2,360 rupees. That 360 rupees you need to reverse ITC. Why you need to reverse ITC based on credit note? Simple pa. When liability of manufacturer get reduced, even the ITC of the recipient also should get reduced. Now, what is the entry for this credit note? Like it is like a sales returns pa. It is like a sales returns. Sales returns, what is the entry? First sales entry is what? Dealer account debit. To sales, dealer account debit 2,36,000. To sales 2 lakhs. To GST payable 36,000. Clear? And next, from your point of view, so what is the entry? Buyer. Purchase account debit 2 lakh. ITC account debit 36,000. To manufacturer 2,36,000. This is the sales entry. Are you with me? Now sales returns entry from my side, manufacturer's side. Sales returns account debit. Correct? Sales is credit, means sales returns will be debit. Sales returns account debit 2,000. And to dealer account 2,360. Then the 360 is what? My liability gets reduced. GST liability shows a credit balance. Okay, I'll write this. Because orally when I explain you may not be able to understand. Say this. First, sales entry. Sales entry in the books of manufacturer. in the books of manufacturer. In the books of manufacturer, what is the sales entry? Sales entry. No need to make note, just listen. Sales entry is what just now I told you. Dealer account debit. Dealer account debit. How much? 2,36,000 to sales account. How much? 2 lakhs. And to GST payable account. What is a GST payable account? 30. So dealer account debit 2,36,000 to sales account 2 lakhs to GST payable will be 36,000. Now, what will be the entry in the books of dealer? In the books of dealer. In the books of dealer, what is the purchase entry? If manufacturer is selling, then dealer is buying. So what is the purchase entry? Purchasers account debit. How much is purchase account debit? 2 lakhs. And they will take ITC, correct? As a dealer, you will take ITC. ITC account debit 36,000 to manufacturer. To manufacturer, how much? 2,36,000. Clear these 2 points? Now, what is the sales returns entry? Sales returns entry. So, because the dealer is not going to pay for 100 parts, the dealer is going to pay only for 99. So, then for one they will be getting a credit note, they will be giving a credit note, that manufacturer will give a credit note. So, therefore, what we need to do? Sales returns account debit. How much? 2,000. Why? One part. One part. So, sales you credited 2 lakhs for 100 part. For one part it will be 2,000. Is it clear, pa? But to dealer account, how much? 2,360. What is this missing 360? GST payable, not ITC. GST payable means liability, shows credit balance. Now we are reducing. So because of credit note, what happens to the liability? Reduces. GST payable account debit. So because of giving credit note, what will happen to the supplier liability? It will get reduced, because liability shows a credit balance. When you make a debit, it will get reduced. Is that clear? Now, in the books of the dealer, you see purchase entry, okay. What is purchase returns entry? Purchase returns entry. Manufacturer account debit. How much manufacturer account debit? Manufacturer account debit 2,360 to purchase returns. To purchase returns 2,000 to ITC account. ITC shows what balance? Debit balance, because it's an asset. Now the asset is getting reduced. So 360. Now tell me, what is the consequences of credit note to the supplier and to the recipient? What is the consequence of credit note to the supplier? Liability gets, you got it. What is the consequence of credit note to the recipient? ITC gets, means ITC needs to be reversed. Is that clear? So now, therefore, coming back to this story, so what dealer will do, pa? What dealer will do? As a dealer, you will first get the invoice for 2,36,000, correct? Please check the book. As a dealer, first you will get an invoice for 2,36,000 and you can claim the ITC of 36,000. And thereafter, you need to reverse the ITC. First you will get thereafter you need to reverse the ITC to the extent of 360. And invoice for recovery of cost from manufacturer after sales service 3,000 and GST 18% 540. So invoice value will be 3,540. Is it clear? And what will be the GST payable by the dealer? 540 rupees. Understood? Because part you have taken from your inventory, but you will recover only the after sales service charges from me. Now, Manufacturer point of view, tell me, first what manufacturer will do, will raise an invoice for 2,36,000. Thereafter, they will be giving a credit note because of which the liability gets reduced by 360 rupees, correct? And as dealer raises invoice for 3,540, this 540 can be taken as ITC by the manufacturer. Understood? Then situation 4. Now what happens? Dealer, rather than issuing credit note, one more thing also he can do. Please listen. You will take from the inventory and you will use. So rather than giving a credit note to you, I will not give credit note. Instead, that one spark plug you use na, that spark plug I will replace. You understood? I will refill the stock. You got it? I first sent 100 pa, on my behalf you used 1 and you replaced during warranty. Now only 99 is there in the inventory, so that 1 I will refill. When I am refilling this 1, then what is the treatment? Simple, you are getting it for free, correct? You are getting it for free, so there is no credit note, nothing. So you will just recover only the 3,000 rupees from me. And what is my case? I will also just send that 2,000 rupees worth of part to you under delivery challan. There won't be any GST implication. Say this. Dealer replaces the part during the warranty period out of his own stock and get replenishment of the said part from the manufacturer without any consideration. From dealer point of view, is it supply or not a supply? Not a supply, but the movement of goods should be under the cover of a delivery challan. Manufacturer is required to pay any GST? No, and even they are not required to reverse any ITC. Clear? This already yesterday itself we discussed. Amount paid for additional warranty. What is the treatment? If it is at the same time from the same dealer, that additional warranty will be treated as composite supply and taxable based on the principal supply. What is the principal supply? That product. Is it clear? Suppose if it is same time but from a different supplier, or different time from the same supplier or different supplier. In all these three cases, it is treated as a separate supply and will be treated as separate transaction, and the general rate 18% will be applicable. I gave you one example now related to MI TV, additional warranty you paid. That example only I gave. MI manufacturer is selling the TV to the showroom. Television is 28% and they are selling to showroom as well as to their own showroom as well as to a third party showroom, Chroma. Now a customer Mr. Z purchases from the MI showroom television plus paid for the warranty also. Situation 1 you see. MI retail showroom sells television along with extended warranty for 28,000 to Z, 26,000 television, extended warranty 2,000. Now what will happen? Same time, same person, correct? At the same time from the same person. So what is the treatment of this additional warranty? Treated as composite supply. So the 2,000 also taxable at what rate? At the rate applicable to TV. What is the rate applicable to TV? 28%. Are you with me? Situation 2. Suppose if the showroom sells TV for 26,000 and after 1 month he paid the 2,000 rupees for extended warranty. Same person but a different time. So the 2,000 will be treated as a separate supply and it will be taxable at 18%. Is it clear? Situation 3. Chroma sells television for 28,000 to Z. Mr. Z pays 2,000 rupees to manufacturer for extended supply. Now, again, it is not a composite supply because they are paying for TV to one person and extended warranty to another person. So, due to that reason, independent supply 18%. Chroma sells television for 26,000 to Z and after 1 month sold extended warranty for 2,000. Again, the same story. It will be treated as separate supply. Got it? Then one more clarification, last clarification, that is related to return of expired medicines. Carefully listen. Generally, medicines and all will have a expiry date. And I am a manufacturer of medicine, pharmaceutical company. I will be making the medicines and sending to you. You are a medical shop owner. Now what happens here, when I am sending you the medicines, it has a expiry date. Say it has 1 year expiry date. Today I sold it to you and within 1 year it will expire. I sold it to you on say 2nd of March. I sold it to you on 2nd of March. 1 year it will expire. Means next year by 2nd March it will expire. But for this financial year, by when the credit note to be issued? By 30th November. Again I am repeating, concentrate. 2nd March 2025 I sold pa. 2nd March 2025 I sold. What is the financial year? 24-25. 24-25. 2nd March 2025 when I sell, what is the expiry date of this medicine? What is the expiry date of this medicine? 2nd March 2026. Correct? Now for this financial year 24-25, by when I need to give the credit note? What is the credit note time limit? How you know, sir? We discuss ITC time limit now. What is the ITC time limit? 30th November of succeeding financial year or date of filing annual return, whichever is. The same time limit is even applicable for issuance of credit note. 5 places the same time limit copy paste pa. What are the 5 places? Number 1, time limit for availment of ITC, time limit for issuance of credit note, time limit for rectification of GSTR1, time limit for rectification of GSTR3B, and time limit for rectification of GSTR8, that is TCS return. In these 5 places the time limit is same. What is the time limit? 30th November of succeeding financial year or date of filing annual return, whichever is earlier. Don't worry, I have summarized it at many places, so you don't have to write, just listen now. 5 places it will be same. What are the 5 places? Time limit for availment of ITC, issuance of credit note, rectification of GSTR1, rectification of GSTR3B, and rectification of GSTR8. So for credit note also the time limit is same. What is the credit note time limit? Credit note time limit is 30th November 2025 or date of filing and return, whichever is earlier. But actually he is speaking here by 30th November 2025 we should have given the credit note, but the medicines will expire only on 2-3. So thereafter they will return the medicine to the manufacturer, correct? But at that time credit note cannot be issued. Why credit note cannot be issued at that time? Because the time limit to issue the credit note is over. Are you with me? First I sold a medicine to you on 2-3 and expiry date is 2-3-2026. After expiry date what you will do? You will keep it and sell at a discounted rate. No, no. People will die pa. Okay. You will return that to me. When you are returning that to me, can I give you a credit note for sales returns? No. Why I cannot give a credit note to you for sales returns? Because the time limit to issue the credit note is over. If it is within the time limit for issuance of credit note, no problem, I will give credit note to you, because of which my liability gets reduced and you will reverse the ITC. But the problem here is that the time limit for issuance of credit note is over. So then what they should do? Simple. You return it to me, treat it like a sale made to me. Rather than treating it as purchase returns, you treat it like a new sales. Means you raise the invoice to me, so that first at the time when you purchased you have ITC. Now when you are selling to me, it will be like a liability. So your ITC and liability get set off. Is it clear? First you purchase from me. Now you are returning. When you are returning, I cannot give you a credit note. Instead, because time limit is over, instead you give me a sales invoice. You give me sales invoice, means you created a liability and you have the ITC. So these two will get set off. Is it clear? That is what they are telling. Drugs or medicines which are expired shall be returned to supplier. Usual trade practice in pharma sector. Option 1, supplier may issue a credit note treating it as sales returns, thereby liability of supplier gets reduced and recipient shall reverse ITC. Is it clear? That is a normal option. Second option is what? However, if credit note cannot be issued on account of expiry of time limit, just now I said, then recipient can treat it as fresh supply made to supplier and the supplier can avail ITC on receipt of such expired medicines. Now what I will do with that expired medicines? I will resell. Manufacturer, what I will do? I will destroy. When I destroy, what will happen to the ITC? Reverse. So, if such expired medicines are destroyed, then ITC shall be reversed as per 17 subsection 5. Is it clear? So, please go through this example, you will understand. Just go through, read it once. Clear? Means for what amount you will raise me the sales invoice for? Whatever amount at which you purchased it, for the same amount you will raise a sales invoice on me. Is it clear? Pa, you understood or not, pa? Okay. But this is one old circular, not important and all. It is one old circular. They have not tested it yet in exam. That's the reason why I have included, because almost everything that is there in study material I should include it. So that's what I am including and I am discussing. But some may be asked, some may not be asked. Okay. Now we are moving on to the next chapter. We completed ITC fully. I said half an hour it will take. We completed this. Now we are moving on to payment process chapter. Kindly take page 159. Page 159. Payment process. Okay. See there. Section 49 deals with, in this chapter there are only two sections. One is section 49, which deals with various electronic ledgers, and another one is section 50, which talks about interest on account of delay in payment of consideration. Okay. So look into section 49. What does it say? Section 49, electronic liability ledger, electronic credit ledger and electronic cash ledger. These are the three ledgers which will be maintained by GST network on behalf of every registered person. Already we discussed this, correct? And what will be there in liability ledger? Our liability will be there. What are our liabilities? Total our liabilities are divided into 5 parts. T, I, P, F, O. T for tax, I for interest, P for penalty, F for fees, O for, so therefore total 5 dues. So in liability ledger there will be 5 dues. Thambi, tukkum varda? 9:30 da time. Okay. So if you feel sleepy, no, you sit in the last row and sleep. I don't have any problem. But don't sit in the entry and front row and sleep, please, pa. Because I am getting disturbed, pa. I am also under medication. I am taking painkillers and etc. and all. Samya tukam varu. Seriously, if you leave me, no, here itself I will sleep. That much sleep, because painkiller will always give sleep. But even then, class is important, career is important, my life is important. You understood? So therefore, for me this is divine, God. Teaching is God for me. And always a fear will be there that I need to do the best. Otherwise, you know, because I am playing with the life of the students, and just because free you are coming, or because of me you are coming. Correct? Which means if it is free, any person who announces free will go. No, many people tried like that. Many people tried like that, free announced, they will announce, but that attempt only, thereafter they make commercial and they charge money, etc. and all. But this is my 10th free batch, pa. You understood? I am continuing. And for what reason you came, we will go there. 4 days, we will try to learn something so that other subjects we can revise later point of time and we can be successful in our exam. For that reason only you came, means what is that? Trust. What I earned from you is that trust. I did not collect money from you, but I collected trust from you. So that fear is there in me. If I sleep, if I am not taking classes properly, then I am pledging your life at risk. Correct? So when you have fear here, you will not get sleep. Got it? What is that fear? Exam fear. Okay, I have to complete somehow I need to clear, and because this is like, it's not like if not May, September, if not September, then January, not like that. So if you have that fear, you will not get sleep. Control. So that's where, you can stand up, go in that corner, and you can stand for some time and listen when you are getting sleep. Or you feel like, you wanted to chew some bubble gum or chocolate, it's okay, you do something, but ensure that you are killing your sleep and sitting in the class. Online students, seriously, they don't have anything in control. By this time, 9 o'clock they will sit, and 9:30 like this they will come, mobile will be here, and 11 o'clock, the mobile will be like this and they will sleep. You understood? This is how it happens. And because they sleep in the class, night they will not get sleep. Night time what they will do? Okay, we will watch one Netflix or we will watch some series, and we will sleep like that. They will think it will go up to 3 o'clock. And again they will sleep at 2 o'clock or 3 o'clock. They get up for the class, again in the class they will sleep. Edhuk in the polappu? Okay. Those who are watching, I am telling you only. Okay. So, edhuk? Why? And so, you are sitting in the class. Definitely, you also will get sleep. Getting sleep is because of many issues. There are many reasons. Maybe previous day night you did not sleep properly, or if you are under some medication, or if you are not feeling well, or even if you feel like, okay, I know everything, because of that also, or you are lazy, any reason. But we should kill that sleep. How to kill that sleep? You only should decide. So stand for some time, just walk, take the book, stand in that corner, stand in this corner without causing disturbance to anyone, and you listen. I don't have any problem. Is it clear? Understood? Because every time, every minute is precious at this moment, because exam is nearing. Few days only, not few months, few days. Okay, keep that in mind, pa. Okay, come on. So therefore, electronic liability ledger, electronic credit ledger, and electronic cash ledger. These are the three ledgers. Who will maintain these three ledgers? GST network on behalf of every registered person. And what are all the dues that will be there in the liability ledger? 5 dues. What are those 5 dues? T, I, P, F, O. T for tax dues. I, interest. Why interest? Because if there is a delay in payment of tax, there is a delay in payment of tax, means you have to pay the interest. Delay in payment of tax means beyond the due date if you are paying. Then next, P, penalty. Why penalty? You contravene some provisions of the act. Some provisions you have contravened, that you should have given the address, updated address in registration, but you did not give, or you tried to evade the tax. Evade the tax means you tried to escape from payment of tax. Any reason, you have to pay penalty. Then next, fees. What is that fees? Late fee. For delay in filing returns, you have to pay a late fee. O for others. Others means any other amount which you need to pay to the government, that will come under others. Got it? So these are the 5 dues that will be there in the liability ledger. And electronic credit ledger, electronic cash ledger. So credit ledger, how money will come into credit ledger? Whenever you avail the ITC. How you will avail the ITC? GSTR 3B, or one other way also you will avail the ITC. ITC 1. What is ITC 1? In case you are newly getting registered on the closing stock, the GST paid can be taken as ITC is there, na? That is ITC 1. You can see here how the credit ledger gets an inflow. Either ITC through GSTR 3B, or ITC 1, or ITC 2. What is ITC 2? Transfer of ITC. Transfer of ITC. That is, I am transferring my business to you. You are purchasing the business. So, therefore, that way also you will get the ITC. Or ITC 2A. What is that? Single registration getting separated into multiple registrations. Or sometimes any refund granted to you. You would have paid some excess tax. That excess tax they will grant as a refund. That money also will be coming into electronic credit ledger. Got it? So what are the various ways through which you will get money into electronic credit ledger? Either you avail ITC through 3B, or ITC1 or ITC2 or ITC2A or refunds. Whatever balance that is there in the credit ledger can be used only for payment of tax dues, cannot be used for payment of other dues. Is that clear? Means, can the credit ledger balance be used for payment of interest, penalty, fee and others? No. It can be used only for payment of tax. What about the balance in cash ledger? Can it be used for payment of both tax dues and other dues? Yes, very much yes, it can be used for everything. And whatever money that comes into cash ledger, how it will come into the cash ledger? Whenever you make a deposit. So you have to deposit the cash into the cash ledger and through challan. Then sometimes the TDS and TCS will be deducted by the other person. When you make supply through e-commerce operator, the e-commerce operator will deduct TCS. When you make supply to one person, so government department or PSU etc., that government department or PSU will deduct TDS. So this TDS, TCS deducted by the other person will also be reflected into our electronic cash ledger. Plus excess tax if you have paid, you will get a refund. That refund also will be coming into the electronic cash ledger. Is it clear? Three inflows into the cash ledger: deposit through challan, TDS, TCS deducted and refunds. All these amounts which come into the cash ledger will be used for payment of any liability. Any liability, it can be tax or others. Understood pa? Which means the outflow of credit ledger and cash ledger is the inflow into the liability ledger. Clear? Now, we need to understand the form numbers now. Electronic liability ledger form number is what? PMT1. Electronic credit ledger is PMT2. Electronic cash ledger is not PMT3, it is PMT5. And deposit challan will be PMT6. So total 4 forms you learned now. PMT1 and 2, liability ledger, credit ledger. 5 and 6, cash ledger and deposit challan. Then look into the second point. Whatever balance in the credit ledger and cash ledger, you will be after payment of tax, interest, etc., you can get it as a refund. You can definitely claim refund with respect to this balance in the cash ledger and credit ledger. Got it? And now we are discussing some special points related to electronic cash ledger. What are the various modes of deposit into electronic cash ledger? How you can make deposit into cash ledger? How you will make deposit into cash ledger? Either internet banking, total 6 modes pa, try. Internet banking, super. Credit card, debit card, super. UPI, super. 3 more. NEFT, RTGS, next. Sir, NEFT, RTGS, internet banking, same only, sir, no, different. NEFT, RTGS is offline. You will go to the bank, you will fill in the challan and you will pay. That is what NEFT, RTGS is. 2 more. That's what challan. That is over the counter cash deposit. Over the counter, you can go and you can make a cash deposit. Cash means either cash or check or demand draft. Is it clear? Cash means even income tax also. Cash means don't think cash only. Cash includes check or demand draft. So cash or check or demand draft. Okay. Then last one more mode, IMPS. Okay, IMPS. So through IMPS also we can make, that is through mobile banking. Through mobile banking also you can do. See this modes of deposit. So what is the deposit challan? PMT6, internet banking, debit card, credit card, NEFT, RTGS, cash deposit over the counter. But for cash deposit over the counter there is a limit. How much cash deposit you can make? 10,000 in a tax period. Beyond that can you deposit? No. UPI and IMPS. Then sometimes it happens in reality also for you many times that your account will get debited, but the shopkeeper will tell, I have not received money, again you need to swipe the card. Many times you will fight with the shopkeeper and all, that already I got a message that money got debited, like that. Even in case of internet banking it happens. Sometimes the money will get debited from our account, but it will not be reflected into the GST account, because of which should we again pay? Sir, 1000 rupees, 2000 rupees means we will again pay and we will get the refund. But if it is GST payment, it will be 15 lakhs, 20 lakhs, 30 lakhs like that. Where from we will be able to pay that again? Cash flow will get affected. So no need to pay again. Just intimate to the payment gateway. You would have selected one payment gateway through which you have made the payment. You intimate the payment gateway through the portal, through PMT7, so that the portal, GST portal, will recover the money from the payment gateway and it will be credited into the cash ledger. Is it clear? You don't have to speak to the customer care, etc. and all. Just one form we need to file. What is that? PMT7. Read that. When payment is debited from bank account but not credited in cash ledger, then communication to payment gateway shall be made through GST PMT7. Then there is one more form, PMT9. For what purpose? Transfer of balances between the minor heads and major heads in the cash ledger. So carefully listen. So our cash ledger, electronic cash ledger, if you see, so electronic cash ledger, the moment you see electronic cash ledger, there will be a table like this. 1 second. There will be a table like this. Total, how many cells are there? 20 cells. How 20 cells? 4 major heads. What are the 4 major heads? IGST, CGST, SGST and cess. These are the 4 major heads. What are the 5 minor heads? For each major head, there will be 5 minor heads. Tax, you can sit visible. Tax, interest, penalty, fee and others. TIPFO. Okay. So which means 5 by 4. How many cell matrix? 20 cell matrix is there. I made a mistake here. What is that mistake? By mistake, I deposited into IGST instead of CGST. Or by mistake, I deposited into CGST instead of IGST. Some mistake I did. Now how to rectify this? Can I shift the balance from one cell to another cell? Yes. For that I will use PMT9. Okay. So this is how the ledger balance is, and here what happens is that I wanted to shift some amounts. I need to select the major head, means which major head I need to shift from. Minor head, in that major head, that is IGST, say interest, I need to shift. So major head will be IGST, minor head will be interest, and to which major head and minor head I need to shift, I need to mention here. Is it clear, pa? Like this I can shift the balances between one cell to another cell using which form? PMT9. For transfer of balances between major heads and minor heads in ECL, form GST PMT9 is notified. Not only this, one more purpose is also there for PMT9. We can shift the balance from our cash ledger to another cash ledger of the distinct person. Means, for example, I am a registered person. I have registrations in 2 states, one in Tamil Nadu, another in Andhra Pradesh. Now, which means both are registrations of the same person, distinct person. Now, from the cash ledger balance in Tamil Nadu, can I shift the balance to cash ledger in Andhra Pradesh? Yes, it is possible. We can do that. But very, very important here is that you cannot shift the SGST balance directly. You cannot shift the SGST balance directly, and you cannot shift CGST, IGST balance to SGST head also directly. Is it clear? That is, carefully listen. Here, CGST I have some balance. Can I shift it to CGST? Yes. Can I shift it to IGST? Can I shift it to SGST? No, not possible. Okay. Then same way, I have IGST. Can I shift it to CGST? Yes. Can I shift it to IGST? Yes. But I cannot shift it to, clear? Then, sir, I have SGST balance. Can I first of all take that? No. Then what is the alternative? Carefully listen. First you shift the SGST to CGST or IGST using PMT9. Just now we saw from one head to another head we can shift the balances. Am I right? So within the cash ledger of Tamil Nadu registration, first transfer from SGST to CGST or IGST. Now it goes to CGST, IGST. Am I right? Thereafter you send it to Andhra Pradesh cash ledger. Okay. Again in that, which heads you can send? CGST, IGST. Once you send it there, again you take PMT9 for Andhra Pradesh registration. You take PMT9 for Andhra Pradesh registration and you shift the balances back to the SGST. This is the only way. Direct transfer not possible. But this you don't have to write in exam. This loophole what I told you don't have to write in exam. What you need to write in exam is that SGST balance cannot be transferred to a distinct person, because what is there in the rule, that only we need to speak. Okay, SGST balance cannot be transferred to distinct person. CGST, IGST balance cannot be transferred to SGST head of a distinct person. Is it clear? So SGST balance cannot be transferred. CGST, IGST cannot be transferred to SGST of a distinct person. So tell me, what are the two purposes of PMT9? Number one, to transfer the balance between minor heads and major heads. And second purpose, to transfer the balance from electronic cash ledger of one distinct person to electronic cash ledger of another distinct person. Are you clear? Then these are the points we have with respect to cash ledger. Now look into credit ledger. Special points with respect to credit ledger. Now if I have some excess balance in the credit ledger, what can I do? I can either carry forward and set off against the liability. Can I get the refund from the credit ledger? Generally not possible. Only in two cases it is possible. Only in two places I can get refund of balance from credit ledger. Refund of balance from cash ledger, any restriction? No restriction. Always I will get. But refund of balance from the credit ledger only in two cases. What are those two cases? Number one, zero rated supplies. What are zero rated supplies? Export of goods or services, supply of goods or services to SEZ. Then inverted tax structure. What is inverted tax structure means? The tax rate on output is less than the tax rate on input. For example, I am purchasing cloth. Cloth is 18%. And using that cloth I make a defense uniform, and that defense uniform rate is 5%. Cloth is 18%. Uniform is 5%, which means my output tax is less than the input tax. Correct? That is, tax rate on outward supply is less than the tax rate on inward supply. Then in that case also I will get the refund. What is this name called as? Inverted tax structure. So tell me, what are the two cases we will get the refund from the credit ledger? One is zero rated, another is inverted tax structure. That is, tax rate on output less than the tax rate on inputs. Then next one, refund to the original sources ledger. What is this? Sometimes by mistake I have paid the tax. When I paid the tax, I will request for a refund. Now they will refund into the respective ledgers from which I have made the payment of tax. Okay. For example, say this. Say for July month, no need to write, just simple explanation only. For July month, I have paid 40 lakhs as tax. This is my tax for July month. Okay. How I paid 40 lakhs? Fully from cash ledger, partly from credit ledger, and partly from cash ledger. Partly from credit ledger, partly from cash ledger. So from credit ledger, I paid 30 lakhs. And from cash ledger, I paid 10 lakhs. Okay, va? Now, in this 40 lakhs, say 1 lakh is paid in excess. 1 lakh is paid in excess. Okay, va? Now tell me, how I will get the refund of this 1 lakh? How I will get the refund of this 1 lakh? Into my bank account fully? No. No. In proportion to the way in which it has been paid from the ledgers. What proportion we paid? What proportion we paid? 3:1. So out of this 1 lakh also, 3/4 will go to credit ledger, 1/4 will go to. Is it clear? Are you understanding? So whenever we pay the tax in excess, that excess tax, when we pay it in excess by mistake, when we claim for refund, can we claim for refund? Yes, we can claim for refund. It will be credited into the respective ledgers. Okay, so you read this word. Where a registered person has claimed refund of any amount of tax wrongly paid or paid in excess, for which debit has been made from credit ledger. Debit has been made from credit ledger. Then the said amount, if found admissible, proportionate amount debited from credit ledger shall be recredited to electronic credit ledger. They use the word proportionate amount. Means if we have paid fully from credit ledger, fully it will come back into credit ledger. If we have paid partly from credit ledger, that proportion will come back into credit ledger. For that, we have a refund order. What is that refund order? Form GST PMT 3. So therefore, to give the credit back into the credit ledger, this 1 lakh into 3/4. What is 1 lakh into 3/4? 75,000. This 75,000 will come back into credit ledger. For that purpose, they will pass one order. What is that order? PMT 3 order. PMT 3 order. Now, forms we will see. You can sit, pa. Enough. Oh, into okay. Fine. PMT 1. What is PMT 1? Liability ledger. PMT 2, credit ledger. PMT 3, this refund order for refund into the electronic credit ledger in case of excess payment of tax. Then PMT 4 we have not discussed yet. PMT 5, cash ledger. PMT 6, deposit challan. PMT 7, money got debited but not credited. We will make a complaint. That is PMT 7. PMT 8 we don't have. That form itself is not there. PMT 9, transfer of balances between minor heads and major heads, or one cash ledger to another cash ledger of the distinct person. Clear? Now we are discussing one more form, PMT 3A. What is this PMT 3A? Sometimes we will be claiming the refund from the electronic credit ledger. When we claim the refund from the electronic credit ledger, our credit ledger balance will be reduced. And this refund what we claimed is erroneous. Erroneous means wrongly claimed. So it will be paid back. It will be paid back. When it is paid back, should the ledger balance increase or not? Yes. So see this. This if you want you can make note. That is recredit into electronic credit ledger. Recredit into electronic credit ledger. Recredit into electronic credit ledger. Say this. First we have a electronic credit ledger. This is step number 1. Some balance. Credit balance or debit balance? Electronic credit ledger shows what balance? Debit balance or credit balance? Credit balance. Some balance is there. What is that balance? Say for example, we have 1 lakh as the credit balance. Okay. Now what you did? You claimed a refund. You claimed a refund. When you claim refund, what will happen to the credit ledger? Debit. Correct? For refund you are claiming from credit ledger means the credit ledger balance gets reduced. So refund claimed. Refund claimed 40,000. Refund you claimed 40,000. So let's take this as opening balance. And when you claim refund, what will happen to the closing balance? 60,000. Okay. I am not following the regular accounting ledger, etc. and all, balance brought down, balance carry forward, etc. and all. I am just giving you an explanation as to how it works. So first there is some balance in the credit ledger, opening balance 1 lakh, and when you claim refund, step number 2, you claim refund 40,000, now the balance will come down to 60,000. Now what you did, step number 3, what will happen? So credit in bank account, how much will be credited in bank account? 40,000. Whenever you claim refund, that money will be credited into your bank account. But is it genuine refund or not? No, erroneous refund. So therefore, step number 4, erroneous refund of 40,000, erroneous refund of 40,000 is paid along with interest. Why paid along with interest? You have wrongfully claimed means you will be required to pay the interest. Is paid along with interest. To whom you have paid? To government. To government you have paid. Now what is the next step? Step number 5, last step. Electronic credit ledger. Now what is the opening balance? Opening balance 60,000. Now there will be recredit for what? 40,000 using PMT 3A. Why recredit 40,000? Because you paid now that refund back. As you paid the refund back, there will be recredit. So therefore, the closing balance will be 1 lakh. You understood, pa? First you had 1 lakh balance. You claimed a refund, so the balance came down to 60. Again you have paid back that refund along with interest, so the balance will increase. Okay. But to recredit this, they will be using one form. What is that form? PMT 3A. Got it? Now you read, you will understand. Finished? Make note of this. So when a registered person claims erroneous refund of ITC, upon payment of such refund along with interest and penalty, proper officer shall pass an order in PMT 3A for recredit to electronic credit ledger. Okay. In 3 itself there is one more form, that is 3A. 3 is for what? Refund of excess tax paid into credit ledger. 3A, recredit into electronic credit ledger when the erroneous refund is paid back. When the erroneous refund is paid back. Then balance in electronic credit ledger can be used only for payment of tax but cannot be used for payment of interest, penalty, fee and others. Also we know that. Also balance in credit ledger can be used only for payment of GST in FCM but not for payment of GST under RCM. Very, very important point. If I have input tax credit, can I use it for payment of RCM liability? No. I have to use it only for payment of FCM liability. Then what should I do with respect to that RCM liability? I have to pay it through cash ledger. But can I take it as ITC? Yes, because that is also my inward supply. Carefully listen. I have some inward supply on which I need to pay GST under RCM. First I need to pay through cash ledger, but that I can take as ITC. Then what is the use of it? I will adjust it against my FCM liability, forward charge liability. Mainly in the 10-mark computation, this will be helpful. Okay. So keep that in mind. Can we use balance in credit ledger for payment of GST under RCM? No, we cannot. Then balance available in the credit ledger may be restricted for utilization by proper officer. So proper officer may restrict the balance, that we will discuss in next rule 86A and 86B. And look into last point, balance available in credit ledger can be used for payment of tax demanded under section 73 or 74, that is arrears of tax. For payment of arrears of tax, we can definitely use the balance in credit ledger. Carefully listen. Sir, July 2023, I have to pay some tax which I have not paid. Please concentrate, everyone please listen. July 2023, I have to pay some tax, but I have not paid tax. Now I want to pay the tax in July 2025. You understood? I have to pay the tax in July 2025. Can I pay the tax using credit ledger, or should I pay only using cash ledger? I can pay using credit ledger. But at that time in 2023, there was no balance in credit ledger. If I had the balance in credit ledger, I would have paid that time itself. Nah, I don't have balance at that time. I did not have balance at that time, so therefore I have not made payment. Then how today suddenly I got the balance? From 23 to 25, I would have made some purchases. So on that purchases, GST paid can be taken as ITC. I have got the input tax credit balance like that. Got it? Can I use it for payment of the arrears of tax pertaining to July 2023? Yes, that's what I am telling. Even though that ITC you have got at a later point of time, still for payment of arrears of tax, you can use the balance available in the credit ledger. Is it clear, pa? Balance available in the credit ledger can be used for payment of tax demanded under 73 or 74, that is arrears of tax. These are some key points. Now, whatever balance that is there in the credit ledger can be restricted by the proper officer. Restricted means what? First we availed ITC, we have not availed ITC. We availed ITC, but after availing ITC also it may be suspended by the proper officer. What are the reasons why it will be suspended by proper officer? Look into rule 86A. Restriction on amount utilization. Restriction on utilization of amount available in the electronic credit ledger. GST officer has power to disallow the set off of provisional credit against GST payable for a maximum of how many years? Means how many years they can disallow? 1 year. 1 year they can disallow. Okay. If he is of the opinion that when he will disallow, means he will pass an order in 86A. When? Read there, first situation. ITC avail against an invoice issued by a supplier who is? Means your supplier is not in existence. Where he went? We don't know. He is not in existence. Or not doing business from the place where supplier has obtained. They are doing business but in a different place. First, we don't know where they are. Or we know where they are, but they are doing business in a place other than the place for which they have obtained registration. Then you availed ITC, you have not availed ITC. Availed ITC, that may be disallowed for 1 year. Then what will happen in this 1 year? Respond here. What will happen in this 1 year? Your ITC disallowed. What you will do? Okay, my karma, my fate, like that you will think. And then you will find a supplier, na? Or you will ask the supplier to update the address with the GST portal, correct? Then you will get that ITC back. You got it? That is first. Why, sir, again they are torturing us? See, if you tell, he will listen. If we tell, he will not listen. You got it? If GST department tell, he will not listen. But when you are telling, he will listen. So that's why I am removing your ITC. You got it? If you want ITC, go to your supplier. Identify where he is. Or you ask him to update the address. Then we will give your credit back. No, literally it is like blackmail, pa. You understood? Blackmail. They are doing a blackmail. Okay. And so what they are telling is that your supplier is not in existence, or your supplier is doing business from a place different from the place where they have obtained registration. Your ITC will be suspended. Again, as and when he rectifies that, it will be made available to you. Already some points like this we discussed. Supplier mistake, recipient is penalized. Where? Yesterday, section 38. What is that section 38? First of all, it will not come in 2B. But what is the difference from that to this? In that, first of all, it will not come in 2B. I mean, it will come in 2B under ITC, not available. Correct? But here, it came in ITC 2B under ITC available and you took the credit, but thereafter the department is disallowing. Understood the difference? In section 38 yesterday we discussed some points. Supplier is a newly registered person. Supplier did not file GSTR 3B but filed GSTR 1. Liability in GSTR 1 greater than 3B. ITC in 3B greater than 2B, or not paid 1% through cash ledger, or there is a demand notice and the demand is outstanding continuing. He defaulted in payment of tax and the default continues. Correct? Yeah, respond ayya, mudilappa. So in these cases, what has happened? It will come in to be under ITC not available. Means can you take the ITC or you cannot take the ITC? You cannot take the ITC. But what is the difference from there to here? Here it came in ITC available, you enjoyed the ITC, but that enjoyed ITC which came in credit ledger got suspended. So don't get confused between these two. Got it? Now, so what is the first reason, pa? First reason, 86A. What is the first reason? Supplier is not in existence or not doing business from the place where they have obtained registration. Second reason, recipient is not in existence or not doing business from the place where they have obtained registration. Sir, I am there, sir. Why not in existence? See, not in existence means in the eyes of GST department, you are not in existence. Means they are unable to locate you. Like Swiggy delivery boy standing outside our house and he will call us. Sir, where, sir? We will ask, where are you, sir? Sir, and what is surrounding you, sir? I came to the location you gave, sir. And surrounding, one car is there, sir, one bike is there, sir, one gate is there, sir. Everywhere car, bike, gate only will there. And we will go to the gate and we will tell, pa, turn your backside, I am here only, okay, give. Like that, people will find it difficult to identify the address. There are certain areas which is very difficult to identify address. Go to Saukarpet, you know, where to find? If you know the address, exact Google Maps, longitude, latitude also, no one can find. Only a person who have been to Saukarpet regularly, that Paris corner, they will only know which place what is there. But otherwise, no. If you go suddenly, you will not be able to locate. Same way, T Nagar, that Pondi Bazaar area, and Pursevakam. These are all certain areas, and Ritchie Street. These are all certain areas where there are many shops and they will be unable to identify where you are located. That is the meaning of not in existence. Or you are doing business from a place different from the place where you have obtained registration, means you have relocated to a different address. Because you might be into rental premises and one property owner will tell, no, you need to vacate the premises, so you will look for some other premises, but you might forget to update the address with the GST portal. That is why they have brought in this. Got it? Next, third point you read. ITC availed without means you have got the invoice, but you have not yet received the goods, but you took the ITC. Then also the ITC will be suspended. Fourth point, ITC availed against the invoice for which supplier did not pay tax to government. Sir, if he has not paid tax to government, you need to reverse the ITC na. What if you are not reversing the ITC? They will suspend that ITC. Is it clear? You will tell, I will reverse, sir. By November 30, if you reverse, no interest. Hey, napa, yesterday only we discussed pa. Section 41, if supplier not filed GSTR 3B by September 30th, the recipient should reverse the ITC by November 30th. If reversed, no interest. Thereafter, interest will be 18% na. So you are prepared to pay the interest. Because 18% only on ITC component, you are prepared to pay. Okay, I will pay the interest. But you cannot enjoy the ITC because rule 86A will come into picture and it will say, if you are not reversing, I will reverse. Okay, means I will suspend the ITC. You cannot utilize it. Understood? That is this. ITC availed against invoice for which supplier has not paid tax to government. Invoice or debit note against which ITC availed is not in existence. What is not in existence? Invoice is missing. So then when the department identifies that the invoice is missing, then also they will suspend your ITC. What are the 5 cases where they will suspend your ITC for a period of 1 year? Supplier not in existence or not doing business from the place where they have obtained a registration. recipient is not in existence or not doing business from the place where they have obtained registration. ITC availed without actual receipt of goods. Next, invoice is missing or supplier did not pay tax. These are the 5 cases. Now what will happen whenever they suspend our ITC? We need to follow up with the supplier, or whatever mistakes that we did, we need to rectify. For example, we are not in existence or not doing business in a place where we have obtained registration. Update our address. Suppose if invoice is missing, get a duplicate invoice. Suppose if the goods are not actually received, receive the goods. Got it? Suppose supplier not paid the tax, follow up with the supplier and ensure that he is making the payment. If all these things happen, then they will release our ITC. Means it is like frozen. The ITC will be there, but you cannot use it. You understood? Like FD pa. In your bank only money is there, but it will be in the form of FD, fixed deposit. You cannot use it. If you break it only, you can use it, but you cannot break it. You understood? Like that. Here ITC is there, but where? Credit ledger only. Yes, but it will be frozen. Means you cannot use it. When it will be unfreezed? Whenever we comply with this. Whenever we comply with this, it will be unfreezed, or on expiry of 1 year, it will be unfreezed. Is it clear? In this 1 year, whenever you comply, it will be unfreezed. Or after 1 year also, it will be unfreezed. Understood? Because I have power to suspend only for a period of 1 year. So see there, upon expiry of 1 year, from the date of restriction, the registered person shall be able to debit input tax credit so disallowed, subject to any other action that may be taken against that person. Okay, means maximum the suspension will be for a period of 1 year. Then look into the next one, Rule 86B. What is this Rule 86B? So payment of 1% of your liability through cash ledger, even though you have sufficient balance in the credit ledger. What happened? During 2019-20, lot of purchases we have made. Correct? COVID came out of syllabus. We never knew that there will be something called as COVID will come and the lockdown will happen. All these things, no one was prepared. Suddenly it came. But we made lot of purchases as a trader and that stock is with us. Then suddenly Modi ji announced lockdown. So first lockdown, second lockdown, third lockdown, etc. and all. Where we all shut our shops. And what we did? Nothing. Clapping, lighting lamp, etc. and all. Correct? No economic activity. So no liability. Correct? No liability pa. Thereafter restricted lockdown. Morning 2 hours, evening 2 hours, like that. Means our liability will be very less. Correct? Compared to our ITC. Lot of stock we purchased. All ITC is there. But our liability will be so small. Which means we will use ITC for payment of our liability. Then government 1 rupee also they will not receive. Already all the reserves of government got over. And thereafter also if the government is not generating revenue, how they will spend? Because they spent. Lavishly they spent during that time. I should not call it as lavishly. Purposively only they spent. Because they have constructed lot of hospitals, like temporary hospitals, vaccinations, free vaccinations they provided. Means they have to pay for the vaccination, but they gave it free for many people in government hospitals, and they have given vaccination even to many countries also. You understood? So like lot of money we have spent during the COVID time, government spent. So what is the revenue to the government? There is no revenue to the government. Understood? That's why they are telling, even though you have credit ledger balance, definitely you will have, because more ITC is there. But you have to pay at least 1% of your liability through cash ledger. Simple pa. If I beg 1 rupee from all of you, I will definitely get some 600 rupees, no, 500 to 600 rupees. Enna pa? Ayya, amma, 1 rupee, like that. If you are giving also, I'll get a major money, literally like that only. This 1 rupee, 1 rupee, 1 rupee, 1%, 1%, 1%, 1%, from many people will become a big money. You understood? For that purpose, they brought in this. Okay, sir. Now COVID over na, sir. Then why they are continuing? They liked it. I mean, not begging. This 1% collection, they liked it. So they are continuing with it. Okay. So for bringing the provision only, there will be reason. Why we continue, there is no reason. Okay. Income tax also same story, GST also same story. Restriction on utilization of amount available in electronic credit ledger, Rule 86B. When Rule 86B is applicable? Come on. Turnover in a month exceeds 50 lakhs. What turnover? What turnover? Taxable, exempted, non-taxable. What turnover? Turnover excludes exempt supplies, zero rated supplies. Even exempted supplies will be having non-taxable. So total 4 supplies we have: taxable, exempted, non-taxable, zero rated. Okay, what and all is excluded? Exempted excluded, zero rated excluded, non-taxable excluded. What is left? Then directly they can give na. Napa. So rather than telling all these things, they can simply say taxable turnover in a month exceed 50 lakhs. Correct? So taxable turnover in a month exceed 50 lakhs. Not total turnover, taxable turnover. And turnover includes taxes or exclude taxes? Exclude taxes. Then what we need to do? Pay 1% of our gross liability through electronic cash ledger, even if there is balance in credit ledger to pay. Okay. This is about Rule 86B. Now every time you do the computation related to the 10 marks question, computation of net GST payable, check for this. If you have sufficient balance in ITC, means your liability is equal to the ITC or your liability is less than the ITC. You got it? Your liability is equal to ITC or your liability is less than the ITC, means you have more ITC. Then check the taxable turnover in the question. Then check the taxable turnover in the question. If it is more than 50 lakhs, then you have to pay 1% of your liability through cash ledger. Means 99% of liability only you can adjust from input tax credit. Is it clear? 99% of liability only you can adjust from input tax credit. Remaining 1% you have to pay by cash. Sir, RCM anyhow we need to pay by cash na, sir. Will it be counted? No, it is not about RCM. It is about FCM liability. In FCM liability, 99% you have to pay through credit ledger and 1% you need to pay through cash ledger. RCM anyhow you have to pay through cash ledger only, no doubt. Is it clear? Next, to whom it is not applicable? Government and its family members. Pa, I don't have money, pa. How much ever I find also I will not get, pa. Correct or not? If I shift it from one pocket to another pocket, my money only na, pa. Correct? So therefore, government departments, are they getting new money? No. So therefore, in this case, their liability, they have to follow 86B or no need to follow 86B? No need to follow. So to whom it is not applicable? Central government, state government department, local authority, government body, public sector undertaking. That statutory body or public sector undertaking. For these people, Rule 86B not applicable. Means are they required to pay 1% of liability through cash ledger? No. So not applicable to government department, PSU, local authority and statutory body. The above rule is not applicable also in the following cases. That is, such person or proprietor or karta or MD or any of its two partners deposited income tax of greater than 1 lakh in each of the last 2 years. Who? That person or karta or proprietor or any of its two partners or managing director, they have paid already how much income tax? More than 1 lakh. When? Last 2 years. Means already they created a cash flow to government. Correct? That's the reason why Rule 86B is not applicable. Then next, received a refund of unutilized ITC. How much refund of unutilized ITC? More than 1 lakh. In which year? Preceding financial year. Means already they are getting refund from ITC. Now in the same ITC, if you put restriction, it will not be good. So due to that reason, it's okay. Refund of ITC available to whom? Only 2 people na? People who are making zero rated supplies or people who are making inverted tax structure. So that's why for them they are not giving this. That too ITC should exceed more than 1 lakh. Next, paid, carefully listen, paid greater than 1% of total output tax liability through cash ledger calculated cumulatively up to the month in the current financial year. What is this? Listen, during the current year, already I paid more than 1% of liability through cash ledger. So this month, I don't have to comply with Rule 86B. Is it clear? Current year is what? Current year is what? 25, 26. Right now we are in which month? August. So April, May, June, July. Up to April to July, already we paid some money through cash ledger. Clear? Please concentrate here. From April to July, already we paid money through cash ledger. How much money, sir? Say 1 lakh we paid through cash ledger. Divided by total liability including August. Already up from April to July, we paid 1 lakh through cash ledger divided by total liability including August. Okay. So how much? Say the liability, total liability is 90 lakhs, sir. Total liability is 90 lakhs. 1 lakh divided by 90 lakhs into 100. 1 lakh divided by 90 lakhs into 100. 1.11111%, correct? Which means more than 1%. Already we paid through cash ledger. So for August month, no need to comply 86B. Happily you use ITC for payment of your liability. Got it? Full ITC you use. No need to use 99% only. Full ITC you use for payment of your liability. For 99% of ITC we are not using. 99% of liability we are paying out of ITC. Don't get confused, okay? Now, what is the formula? First you need to see amount paid through cash ledger up to the previous month in the current financial year. So we took up to July. Divided by total gross liability up to current month in current financial year. Total turnover up to current month into 100. If it is greater than 1%, if it is greater than 1%, whether Rule 86 be applicable or not applicable for the current month? Not applicable for the current month. What if it is less than or equals to 1%? Rule 86B is applicable for the current month. Can you remember this formula? So with this, section 49 we completed. Now we are moving on to section 50. Interest on account of delay in payment of tax. There are 3 situations where we compute interest under GST. First situation is on account of delay in filing 3B. But when we will pay tax? When we will pay tax? At the time of filing 3B only we will pay tax. If there is a delay in filing 3B means there is a delay in payment of tax. Agree, bruh? Yes? What is the due date by which 3B has to be filed? Regular due date. 20th of the month following every month. Suppose if you delay that by say 20 days, means the tax payment also getting delayed by 20 days, agreed. Then for the 20 days we need to compute the interest. So see the situation 1. Delay in filing GSTR 3B. We need to compute interest at the rate of 18% from the first date after due date till the actual date of payment. And whenever we pay the interest on account of delay in filing 3B, whether we need to compute interest on gross liability or net liability. What is the difference, sir? See, if it is, say 200 lakhs is our liability, total liability, not entire 200 lakhs we will pay through cash ledger. We will pay some portion through cash ledger, some portion through credit ledger. Say 120 lakhs we paid through credit ledger, then 80 lakhs only we pay through cash ledger. If you file the 3B on time, how much you would have paid out of your pocket? 80 lakhs. Means if there is a delay in filing 3B, there is a delay in paying 80 lakhs only. Ayya, if you file 3B on time, ayya, how much you would have paid liability? If 200 lakhs is your gross liability, 120 lakhs is your ITC, balance 80 lakhs is your net liability, correct? If you file 3B by due date, how much you would have paid? If there is a delay in filing 3B also, there is a delay in payment of how much? So interest is computed on 200 lakhs, 80 lakhs. Now you understood. So therefore interest is computed on net liability. Got it? So computed on the amount paid through electronic cash ledger, that is net liability. And what will be considered as the date of payment of this? Whenever you are filing 3B. Whenever you are filing 3B, due date of filing 3B, actual date of filing 3B, actual date of filing 3B. What if question is silent about the actual date of filing 3B? Then the due date of filing 3B itself will be taken as the actual date of filing 3B. Always remember this. Whenever you are identifying the actual date of 3B in the question for the purpose of computation of interest, and you don't have any information about actual date of 3B, then you assume that the due date of 3B itself is the actual date of filing 3B. What is the due date of 3B? 20th of next month itself will be taken, but mostly in question they will give, don't worry, mostly they will give, okay. Clear up to this? Then second situation, carefully listen. Second situation is arrears of tax. Arrears of tax means you have not reported it in the return. For a particular month, return you have already filed, but you did not report the tax in that return, and you paid the tax at a later point of time. You paid the tax at a later point of time. So this is called as arrears of tax, delay in payment of tax. So then interest will be computed at what rate? 18%. So invoice not reported in 1 and 3B of a month, but paid in the another month. So interest at 18% from the first date after due date till the actual date of payment. On what? Gross liability or net liability? Because had you paid on that time, you would have paid full amount. Now also as you are paying that, you need to pay on the gross liability, not on the net liability. Even though you may pay partly from cash ledger, partly from credit ledger, it will be on gross liability. What will be considered as the date of payment? Actual date of filing 3B. Can this payment be made through DRC 3 also? There is one more way through which you can make payment. Either you can make payment through DRC, GSTR 3B, or DRC 3 also is there. If you are not filing 3B, but you want to make payment of tax now, today, actually 3B due date is next month 20th, but today I wanted to pay the tax, you can still pay the tax using DRC 3. So through DRC 3, then date of filing, such form. Understood these two? Can we see one question on this? Take your mighty 50. See this question number 38. Question number 38. PQR Limited have filed their GSTR 3B return for the month of August 2020 within the due date, that is 29/2020. What is the August month ka due date? 20th September. They filed the return on time. It was noticed in October 2020 that tax dues for the month of August 2020 have been short paid by 10,000. Okay, you understood what has happened? You filed the return for August or not filed return for August? Filed return for August, but there is a short payment of tax. To what extent there is a short payment of tax? To the extent of 10,000. To the extent of 10,000 there is a short payment of tax. Is it arrears of tax paid or tax paid on account of delay in 3B? Arrears of tax, correct? How this 10,000 can be paid? The shortfall of 10,000 was paid through cash ledger and credit ledger amounting to 7,500 and 2,500 respectively. Which means how much is paid through credit ledger? 2,500 and cash ledger 7,500. Is it possible to pay the arrears of tax using credit ledger? Yes, I told you that. It is possible to pay the arrears of tax using the credit ledger. That is this point. So balance available in the credit ledger can be used for payment of tax determined under 73-74, that is arrears of tax we can use. So accordingly we used it and we have made the payment. When we made the payment, continue, while filing 3B of October, when October 3B has been filed on 20th of November, understood? So 10,000 rupees is the liability pertaining to which month? August month. Paid in which month? October month. Now, whether we need to compute interest on 10,000 or 7,500? 10,000 or 7,500? Is it on account of delay in filing 3B or arrears of tax? So we need to compute interest on total, that is total amount, 10,000. So 10,000 into, what is the rate of interest? 18% into number of days delay. How many days delay? What is the due date? For this 10,000 pertains to which month, pa? August. August due date is what, pa? 20th September. So you need to count from 20th September. Don't count 20th September, count the next day. So in September, how many days? 30. 30 la already 20 went. So balance 10. 10 days in September plus October 31 days. When they are filing? November 20. Correct? October they are paying by November 20. So till November 20, how many days? 61 days. For 61 days we need to compute interest. You understood how 61 days we got? 20th September is the due date. So 10 days in September, 31 days in October, again 20 days in November, because 20th November only they are paying, filing GSTR 3B and paying. So therefore interest is for 61 days. So therefore total amount, what is the total amount? 10,000 into 18% into 61 divided by, is it a leap year? No, because 2020 might be leap year, but in the numerator February is not there. So therefore divided by 365. What is divided by 365? Total how much? So that will be the interest payable. Are you understanding this? Then second part of the question. What would be your answer if 3B for the month of August 2020 has been filed belatedly on 20th November? Suppose if it is delay in filing GSTR 3B. What is the 3B? 3B of which month? August month. When you should have filed? September 20th. But when are you filing? November 20th. Means delay in filing 3B. Now interest is computed on gross liability or net liability? Net liability. What is net liability? 7,500. So recalculate interest. 7,500 into 18% into number of days is same na. We should have filed 3B by 20th September, but we are filing on 20th November. So same 61 days into 61 by 365. 225.62 rounded off to 226. Then it is better to file the GSTR 3B late. Correct? Yes or no? No. Because late fee who will pay? Your father will pay. You understood? Who will pay? Am I right? Sir, late fee we need to pay. So don't conclude like this and all in exam. Vara marku poidum. You understood? Never. You don't show your talent there. Whatever question is asked, that much only. Don't write. It is conclusion. It is advisable to file GSTR 3B late. Thereby the interest gets reduced. Your costing knowledge you retain in costing only. Okay. Don't bring it in tax. So don't write, because late fee is there. Late fee is there. What is the late fee? For every day delay in filing GSTR 3B, we have to pay a late fee of 25 rupees subject to maximum. Maximum depends 1,000, 1,500 or 5,000. Let's take 25 rupees under CGST, 25 under SGST, 50 rupees. Okay, how many days delay? 61 days. 61 into 50. 3050. In the matter of saving few rupees, you will ended up paying thousands. You understood or not? Next. Then next one, you understood now the interest situation 1, situation 2, respond. Then look into situation 3. What is situation 3? ITC wrongly availed and wrongly utilized. In case when ITC is wrongly availed and utilized, already we learned this yesterday itself. We need to compute interest at 18% from date of utilization till the date of reversal or payment. What is considered as the date of utilization? First you need to see the month in which the balance in ITC falls below wrongly availed ITC. For that month you need to see when the 3B has to be filed or actually filed, whichever is earlier. Is it clear? See there. First we need to see the month in which balance in ITC falls below wrongly availed ITC. For example, December month wrongly availed ITC balance has fallen, means December month you have utilized. Now you check for December month, what is the due date of 3B? 20th of Jan. What is the actual date of 3B? Say 17th Jan. Then which will be taken as the date of utilization? 17th Jan or 20th Jan? 17th Jan. Okay. Then date of reversal. What will be date of reversal? The actual date of filing 3B. Whenever you actually file 3B, then only you will reverse. So therefore that actual date of 3B. Here no actual date or due date, whichever is earlier. Only for date of utilization, it is actual date of 3B or due date of 3B, whichever is earlier. But for date of reversal, always it will be actual date of 3B. See there. Interest at 18% from the first date after utilization of ITC till the date of reversal or payment. Computed on ITC utilized. What is ITC utilized? That is the extent to which the balance in ITC falls below availed ITC. What will be considered as the date of utilization? Actual date of 3B or due date of 3B, whichever is earlier, with respect to the month in which balance in ITC falls below wrongly availed ITC. Got it? But date of reversal will be always actual date of GSTR 3B or DRC 3. So tax can be paid either through GSTR 3B or demand and recovery DRC 3 form. Such DRC 3 can be filed anytime. Okay. Now there is one very important amendment, that is, if you have sufficient balance in the cash ledger, because of delay in filing GSTR 3B, as on the due date of 3B, if you have sufficient balance in the cash ledger, no need to pay interest. Is it clear? For situation 1, there is a relaxation part. For situation 1, what is situation 1? Delay in filing 3B. What is the relaxation there? If you have maintained sufficient balance in the cash ledger, when? Due date of 3B, as on due date of 3B. And because of delay in filing 3B, are you required to pay interest or no need to pay interest? No need to pay interest. That is the amendment. See there. If sufficient balance is maintained in cash ledger by the due date of 3B, interest is not payable on account of delay in filing GSTR 3B. Related to this amendment, one question we will do. So kindly look into Mighty 50. Question number 19. Question number 19. Due date of filing GSTR 3B is 20th of next month. Month is July, August, September. For July, gross liability 8 lakhs, ITC is 3 lakhs. Means what is your net liability? 5 lakhs. That you deposited on 28/2024. What is the due date of July month? 20th August. So as on 20th August, you deposited 5 lakhs. Means you maintain sufficient balance in the cash ledger as on the due date of 3B. Yes or no? But for July month, when we filed 3B, GSTR 3B for all above months is filed on 28 December. Is there a delay in filing 3B? Respond. Is there a delay in filing 3B? Yes, there is a delay in filing 3B. But do we have sufficient balance in the cash ledger? Generally, we need to pay interest, but as we maintain sufficient balance in cash ledger, are we required to pay interest or no need to pay interest? No need to pay interest. For July, interest not applicable as 5 lakhs is deposited by 20th August 2024. Easy. Very, very important question. Definitely high chance of asking this for September exam. Okay. Next month. Not necessarily the same way. They may give it in different way also, but the concept will be same. Okay. Next month, August. August, what is your liability? How much ITC you have? And what is the difference liability? 3 lakhs. Whether you deposited additional 3 lakhs by 20th of September. No. How much you deposited? 2 lakhs. How 2 lakhs? Already 5 lakhs is there. Now the balance is 7 lakhs, means how much you deposited? So, what is the net liability? 3 lakhs. What is the net liability? 3 lakhs. But how much you deposited as on the due date? 2 lakhs. How much is not deposited as on the due date? Which means interest is applicable on that 1 lakh. Is it clear? So, interest is applicable on 1 lakh. From which date to which date? And that 1 lakh when you deposited? 39. So, carefully listen to my question, everyone, listen. That 1 lakh interest is computed from 20th September to 30th September, or interest on 1 lakh is computed from 20th September to 28th December. 28th December. See, if you are not maintaining the balance, you need to pay interest. But the interest computation is from which date to which date? Interest computation is from which date to which date? From the due date of 3B till the actual date of payment. Correct? So, therefore, here, what is the due date of 3B for August? 20th September. What is the actual date of payment? What is considered as actual date of payment? What is considered as date of payment? Actual date of filing 3B. What is the actual date of filing 3B? 28th December. Not that you need to compute interest for 10 days, you need to compute interest for up to 28 December. So, see August 24, interest not applicable on 2 lakhs deposited by 20th September. However, interest is applicable on 1 lakh deposited after the due date. Interest computed from the due date till the date of payment, that is date of filing GSTR 3B. So, the interest payable will be 1 lakh into 18% into 99 by 365, that is 4,882 rupees. Is it clear? How, sir, 99 days? You only count na 20th September. So, how many days in September? 10 days. 30 minus 20, 10 days. Then October, 31 days. November, 30 days. December, and therefore 99 days. You got it? Then September 24 you take, September 24. September 24, what is your gross liability? 6 lakhs. How much ITC you have? So 6 lakhs minus 4 lakhs? 2 lakhs. That 2 lakhs you deposited as on 20th October. Yes, because 8 lakhs already there and now balance went to 10 lakhs, means that 2 lakhs is deposited. Means as on the due date of 3B, whether you maintain that balance? Yes. So, therefore, whether any interest is payable or interest is not payable? Not payable. For September 24, interest not applicable as 2 lakhs is deposited by 20th October 2024. Understood here? So, you may get a illustration like this also. Then come back. One more area is there. With this, we will complete and take break. How to check the balance in ITC for computation of interest under 53. What is 53? This third situation. ITC wrongly availed and utilized. Is there na? You tell me. How to calculate the interest under 53? We need to compute interest from the date of utilization of ITC till the date of reversal of ITC. And what is the meaning of date of utilization? If that particular month you have sufficient balance in ITC, then no need to say, check that you have utilized. Correct? That month in which the balance in ITC falls below the wrongly availed ITC, that month we have utilized. While checking the balance, which balance you need to check? That particular head only, no. If IGST is wrongly availed, listen, please. Listen, very important, not at all tested this and all, definitely it will come, don't take it for granted, listen. So, if the IGST is wrongly availed, we need to compute interest from, we need to compute interest. For checking that interest balance of ITC, we need to check the balance of what? Can we pay all the credits for payment of IGST? Yes. So, check the balance of all the heads, not just the IGST head, check the balance of IGST, CGST, SGST. Suppose if IGST credit is wrongly availed, check the balance in ITC of CGST, SGST and IGST. Suppose if CGST is wrongly availed, for CGST which and all we pay? For CGST which and all credits we use? CGST and IGST. So check for, if SGST is wrongly availed, super. If compensation cess is wrongly availed, only check the balance in ITC of compensation cess, because compensation cess can only be utilized for payment of compensation cess. Okay. Now, we will do one question to understand this. Kindly make note of this. Illustration on computation of interest under section 53, that is wrongly availed and utilized ITC. AB Private Limited wrongly availed, AB Private Limited wrongly availed IGST credit, AB Private Limited wrongly availed IGST credit of rupees 1,50,000. AB Private Limited wrongly availed IGST credit of rupees 1,50,000 in June 2024. June 2024 and reversed in October 2024. AB Private Limited wrongly availed IGST credit of 1,50,000 in June 2024 and reversed in October 2024. Balance in ITC from June to September 2024 is as follows. Month balance in ITC, CGST, SGST, IGST total. So balance in IGST, CGST, SGST and total we have. Month June 2024. The balance in CGST 40,000, SGST 40,000, IGST is 80,000. So how much total? 1 lakh? 60,000. Now what is the wrongly availed ITC? 1,50,000. If you see IGST column alone, you have balance less than 1,50,000, correct? But should we see only IGST column or we should see all the columns? Total. So whether the balance falls below 1,50,000 or not? No. So whether we have utilized any ITC? ITC utilized, ITC wrongly availed is utilized. ITC wrongly availed and utilized. ITC wrongly availed and utilized. How much? 0 ah? Ennappa? Because you have sufficient balance in the ITC. Then July 2024 balance is 30,000, 30,000 and 90,000. Now 1,50,000. Whether we utilized? No. August 2024 25,000, 25,000 and 70,000. Now 1 lakh. So how much is the IT is utilized? Only 30. We should not see the head. Total we should see 30. Then again September 2024 60,000, 60,000 and 40,000. 1,60,000 we have not utilized anything, correct? Now we need to compute interest. So interest on what? Interest at the rate of 18% only on 30,000, correct? And assuming that we are filing 3B, actual date of 3B also, due date of 3B, everything is 20th of next month. So on 30,000 from 20th September 2024, because August month only it has fallen below. Then August month when we will file 3B, 20th of September. So till the date of reversal. What is the date of reversal? October. October means when we will file 3B of October? 20th of November. 20th of November 2024. That is for how many days? Interest at the rate of 18% from 20th September to 20th November. But you understood why 20th September? August month the balance has fallen below. So for August month when we will file 3B, 20th of September. Same way October month we are reversing. For October month when we will file 3B, November month. Is it clear? So that is number of days for which you need to compute interest. 61 days, that equals to 30,000 into 18% into 61 divided by 365. How much? 902 rupees will be taken as the interest. Got the clarity? So should we check the headwise balance or all heads? If it is IGST. If it is CGST wrongly availed, CGST plus IGST. If it is SGST wrongly availed, SGST plus IGST. If it is compensations is wrongly availed, just the compensations is. With this we completed this chapter, payment process. Okay. We'll take a break for 15 minutes and then we will continue with returns. There is another chapter, that is returns. So we are starting with the next chapter, that is returns under GST. See, this returns under GST is a neglected topic, but in this also some MCQs will be framed and some kind of descriptive questions like theory questions are possible in returns. So that's the reason why if you concentrate and listen, you don't have to read it again. Just in the class itself you read, that is enough. Okay. So first we need to understand what are the various returns and what is the due date of each and every return and who is required to file that return. Let's start with GSTR1. GSTR1, what does it contain? It contains the details of outward supply. Who is required to file GSTR1? Every registered person is required to file GSTR1. What is the time limit by which GSTR1 should be filed? If you are filing it under normal scheme, then 11th of the month following every month. If you are under QRMP scheme, what is QRMP? Quarterly return monthly payment scheme. Then it will be 13th of the month following every quarter, because they will be filing returns on a quarterly basis. So see there, GSTR1 section 37, details of outward supplies other than QRMP scheme, 11th of the month following every month, and if it is QRMP scheme, 13th of the month following every quarter. And there is one new return called as GSTR1A. What is this GSTR1A? That is, this month you have filed the GSTR1. For example, July month we have filed the GSTR1 by 11th, correct? July month you have filed the GSTR1 by 11th. Thereafter you came to know that you made some mistake in GSTR1. Maybe you missed adding an invoice, or you made a extra number, instead of 1 lakh you pressed 10 extra, 10 lakhs, like this, some mistake you made. Now you want to rectify the mistake. Sir, before this 1A, you know what we used to do? Next month GSTR1 only we can do the amendment of the previous month. That was the story before. But now what they are telling, you don't have to wait for next month. In this month itself, by 11th you filed, what is the due date of 3B? 20th. So between 11th and 20th itself, you make the rectification. Thereby, in 3B, it will get updated and you can make the payment of tax also if there is any increase in liability. So you can avoid interest. Are you understanding? Sir, GSTR1 I forgot to add the invoice, sir. Then next year GSTR1 only I will do, means there is a delay in payment. Am I right? So unnecessarily interest will come. Don't do that. After 11th and before 20th, what is 20th? Due date of 3B. So before this date, in this 9 days itself, you file GSTR1A. Amend the GSTR1 now itself through 1A, so that in 3B it will get reflected and you can make the payment of taxes. Clear? See there, GSTR1A for amending the details furnished in GSTR1. For amending the details furnished in GSTR1. And when it should be filed? 1A should be filed before filing 3B of the respective month. Due date of 3B, actual date of 3B, actual date of 3B, not just the due date. Suppose if you file the 3B by 22nd, can we file GSTR1A? Yes. If you file 3B by 25th, can you still file GSTR1A? Yes. So before filing GSTR 3B of the respective month, GSTR1A can be filed. Now, one important question you may get. Okay, pa, if you are filing GSTR1A, will the details be reflected in 2B? Will the details be reflected in 2B, or it will not be reflected in 2B? Not be reflected in 2B. Only 2B takes the data from GSTR1 and 2B will not take the data from 1A. Then this 1A details will be reflected in which month 2B? Next month 2B. So only when you see it month wise and date wise, you will get a clarity related to this. If you want, you can just make note. You can just make note for July 2025. For July 2025, that is 1st July 2025 to 31st July 2025. whatever transactions that have happened. What is the due date of GSTR 1? 11th of next month. 11th of next month, that is 11th August 2025. GSTR 1 filed. GSTR 1 filed. GSTR 1 filed by supplier. Correct? GSTR 1 filed by supplier. Can this supplier amend the details of GSTR 1? Yes. Yes, he can amend the details of GSTR 1. By when? By the time they file GSTR 3B. Say, assuming that they are filing GSTR 3B on 20th August 2025. GSTR 3B filed by supplier. GSTR 3B filed by supplier. Now, during this period, can GSTR 1 be amended? But during this period, can the GSTR 1 be amended? Yes. GSTR 1A can be filed. Can be filed by supplier. GSTR 1A can be filed by supplier. During which period, pa? This 11th August 2025 to 20th August 2025, GSTR 1A can be filed. This period, GSTR 1A can be filed. Now, what details will be reflected in GSTR 3B? Respond. GSTR 1 details also will come in GSTR 3B. Okay. GSTR 1 details also will be reflected in GSTR 3B. And GSTR 1A details also will be reflected. GSTR 1 details also will be reflected in 3B. Plus GSTR 1A details also will be reflected in GSTR 3B. Both the details. GSTR 1 plus GSTR 1A. Both details will be auto-populated in 3B and we can pay the liability. Is it clear? Now, so for July month, when the 2B will be reflected, when the 2B will come for July, this is supplier point of view, pa. This is supplier point of view. Understood up to this? So, you can quickly make note, July 2025, by 11th August, GSTR 1 will be filed by the supplier, and by 20th August, say GSTR 3B is filed by the supplier. Now, when the 1A can be filed between 11th August to 20th August, 1A can be filed by the supplier. So, in 3B, what details will be reflected? Not only 1 details, but also 1A details. Understood up to this? Now, for recipient, 2B will come. By when 2B is generated for July? For July month, the 2B will be generated by 13th of August. By 13th of August, 13th August 2025. By 13th August 2025. By 13th August 2025, GSTR 2B to recipient. GSTR 2B to recipient. By 13th August, means he can see it only on 14th August. By 13th August midnight it will come, means he can watch it only on 14th August. Now tell me, in this, which details will come? Only 1 details or 1A details? Only 1 details will be reflected. Only 1 details will be reflected. Only 1 details will be reflected. Then 1A details, when it will be reflected? What is the next 2B? What is the next 2B? So, the next 2B will be 13th of September. 13th of September 2025. This is GSTR 2B of which month? August month. The previous one is GSTR 3B of July. This will be GSTR 2B of August, okay, to recipient. Now in this place, what details will come? This GSTR 1A details will be reflected in GSTR 2B of next month. Clear, appa? So one detail only will come in 2B, 1A detail will be reflected in next month 2B. Next month 2B, not in this month 2B. This is This is 2B. Next month 2B, GSTR 2B of August. Then related to this, they gave a RTP question, and that RTP question I have included in my T50. We will discuss that. Before that, you tell me whether you finished making note of this. This question 38 we completed. Question 39 you see. Question 38 we completed. Look into question number 39. Question number 39. Mehul Enterprises, registered under GST in Uttar Pradesh and a monthly return filer, is engaged in making taxable supply of goods and services. It furnished the details of its outward supplies in GSTR 1 for the month of January on 11th February. So for January, by 11th February, they filed GSTR 1. However, on 14th February, the accountant of Mehul Enterprises noticed that one invoice issued to Vaishali traders registered in Gujarat for supply of goods of value rupees 1 lakh, taxable at 18%, pertaining to January, has been inadvertently missed to be declared in GSTR 1 furnished for January. But right now they are in which date? February 14th. Okay, rather than enjoying the Valentine's Day, they are telling that, we missed an invoice. So what they need to do now? One already filed, na? Yes or no? One already filed. So can they file 1A? He has approached you for the advice before furnishing form GSTR 3B for the said month. You are required to briefly discuss whether Mehul Enterprises can amend the details of outward supply furnished in GSTR 1 of January. Okay. Can they add the invoice? Can they add the invoice? GSTR 1 they can't do anything, but can they do it in 1A? Yes, but it will be reflected in January month 3B itself, or it will be reflected in next month 3B. January month 3B, not 2B, 3B. Just now we discussed. GSTR 3B of the same month. Same month 3B it will be reflected, same month. That is July month 3B itself it is reflected, like that. In January month 3B itself it will be reflected. Okay. He has approached you for the advice before filing 3B. You are required to briefly examine whether Mehul can amend the details. If such amendment is permitted, if that amendment is permitted in details of 1 are amended, whether the details of said invoice will be available in 2B of Vaishali traders for the month of January. No. If you do 1A for January, it will be reflected in only February month 2B, but January month 3B of the supplier. Now, remember the logic here. Government want money. So that's why 1A detail will be reflected in the same month. Give money, give money, give money. Same month, same month. So 3B same month. Recipient, if you give in 2B, he will enjoy ITC. ITC means loss to government, correct? So defer it. Defer it. When? Next month. Are you understanding this? Defer it. So this logic you remember. So you will remember this time limits. Okay. So 1A will be reflected in same month 3B for supplier. But for recipient, Actually they can give, but they will not give. You understood? They will not give. So next month the 2B only it will be reflected for the recipient. Is that clear? See the answer. As per proviso to rule 59 sub rule 1. Sir, suppose I don't know the rule number. Definitely not possible. Section number itself is difficult. Then rule number is not possible. You write as per the laid down provisions or as per the provisions contained in CGST rules. Section means you can remember. So rules means as per CGST rules 2017. Like that you start. Okay. A registered person may, after furnishing the details of outward supply of goods or service or both in form GSTR1 for a tax period, but before filing of return in GSTR 3B for the said tax period, at his own option, amend or furnish additional details of outward supplies of goods or service or both in form GSTR 1A for the said tax period. Correct? Thus, therefore, Mehul Enterprises has the option to furnish the details of invoice issued to Vaishali traders in form 1A on or after 14th February, but before filing 3B for January. Why 14th February? Because 14th February, 11th February they filed the return. On 14th February only accountant has identified. Got it? So after 14th, on or after 14th February, but before filing 3B for January. The corresponding effect of the changes made through form GSTR 1A on the liability of Mehul Enterprises shall be reflected in GSTR 3B for January. Got it? Understood? Next paragraph. Further, Rule 60 provides that the additional details or amendment in details of outward supply furnished by supplier in form 1A filed after the due date of GSTR 1. Correct? 1A can be filed only after GSTR 1. Filed after GSTR 1 for the previous tax period shall be reflected in the 2B for the current tax period. This implies that ITC for the supplies declared or amended by supplier through 1A will be available to the recipient in 2B generated for the next tax period, which means here January month 2B or February month 2B. Next month 2B is February 2B. So continue. Thus, the details of missing invoice of Vaishali traders will be available in its form GSTR 2B for the month of. Got it? So, whenever I am explaining some things, you may think, will it be questioned or not in exam, etc. and all. Usually, students will not trust the teachers. This is the basic problem in this generation. In the previous generation and all, because you are Gen Z, no? Gen Z, yeah, you are not Gen Z. Mixture, Gen Z, okay, fine. You are a mixture of millennials and Gen Z, I think. And this generation problem is that trust is not there. Trust on the faculty is not there. When the trust on faculty is not there, you will think, whatever he is telling and all will not come for exam, like that one idiot will tell. Don't listen to idiots, okay? Don't listen to your friends. Please don't listen to your friends. Listen to your teacher, please. My sincere advice. Out of experience, I am telling you. Because your friends, what? They have completed CA or they have achieved something. Then why are you listening to them and you are not listening to your teachers? They will tell. He will tell lot of things, all those things are not important. Some 6 hours, one faculty will put GST marathon. You read that and go, definitely you will clear like that. If you are not clearing, will he come and answer to your parents? Will he come and answer to you? Will he or she will take up the responsibility? Are you understanding this? But marathon is only for revision purpose. In our YouTube channel also, marathons we will put. Not only mine, other faculties also. But I am openly telling that marathon alone will not serve the purpose. If 6 hours or 7 hours video is going to serve the purpose, then everyone can watch that only and go for exam, na? Understood? Then why hours and hours of classes people are required to take? So every concept, because we are dealing with CA exam, this is one simple concept, na? One simple chart I have drawn. While explaining this, you might have thought, why this guy, why is telling all these things? One 5 marks question you will get like this, because it's an RTP question. Copy paste, RTP of May 25, not May 25, before that attempt, January 25. RTP Jan 25 they gave this question. I expected this question for May 25, but they did not ask. So there is high possibility that they may be asking it now. Are you getting this? Copy paste, literally they will copy paste the same question and they will give. At that time you don't know what to write. You will write this part correctly. This first paragraph you will write correctly, because you will know some information. But this second part you will mess. You will write January only, it will be available like that. Because of which whatever you have written also correctly, they will not give marks. You got it? Because don't make blunders in exam. If you make blunders in exam, for whatever correctly you have written also, they are not giving marks. Be careful. Okay. Next. So you understood about 1A implication, respond. So now when will be filed? 11th or 13th of the month following the month or following the quarter, correct? Then 1A after GSTR 1 of the current tax period, before GSTR 3B of the current tax period. There is something called as IFF, Invoice Furnishing Facility. Who is required to file that invoice furnishing facility? QRMP. A person who is under QRMP is required to furnish that invoice furnishing facility. That is for the first month and second month of the quarter. Because quarterly they will be going for GSTR 1. See the disadvantage of quarterly GSTR 1. Concentrate. If you are filing GSTR 1 quarterly, what will happen? If you are filing GSTR 1 quarterly, what will happen? In 2B it will be reflected quarterly, correct? If it is reflected in 2B quarterly, means your recipient cannot take ITC on monthly basis. Your recipient should wait for the quarter. Ayya, Jan, Feb, March, for these 3 months you will file GSTR 1 quarterly. By when you will file GSTR 1 quarterly? 13th of April. Then for those people who purchased from you, Jan, Feb and March, they cannot take ITC in Jan, Feb, March. They can take ITC only in, means just because you are going for quarterly, why your recipient should suffer? So due to that reason, you have an option to file B2B supplies, that is sale to registered persons, in one return called as IFF for first month and second month by 13th of next month. What about third month? Anyhow, for all these 3 months you are going to file GSTR 1, there you will report the details. Is it clear? So IFF in case of QRMP scheme for the first 2 months in the quarter, by when? 13th of the month following every month. And GSTR 3B, next return. First we saw GSTR 1 and 2A, 2B and all we will not file. It will automatically come. And 3B, next return 3B. 3B is a consolidated return that contains the details of inward supply, outward supplies, everything will be there. And every registered person has to file GSTR 3B. By when? By when it should be filed? If it is normal, by 20th of the month following every month. If it is QRMP, 22nd or 24th of the month following every month. Which case is 22nd, which case is 24th? Remember, GMCA and states below. G for Gujarat, M for Madhya Pradesh, C for Chhattisgarh, A for Andhra Pradesh, and states below, it will be 22nd. What are the states below this? Telangana, Karnataka, Kerala, Tamil Nadu, okay. All those states it will be 22nd. For other states it will be 24th, okay. You can remember these states. If you know the India map, na, easily you will remember. You take this, see the middle point, Gujarat, Madhya Pradesh, Chhattisgarh, don't take Orissa, then Andhra Pradesh, like 7, okay. Gujarat, Madhya Pradesh, Chhattisgarh, Andhra Pradesh, okay. And all states below that. What are all states below that? Maharashtra, Telangana, Goa, Karnataka, Tamil Nadu, Kerala, Pondicherry. For all these things, the number of, like second, 20, Second. What about others, including union territories? That's it. Easily you can remember. So 22nd of the month following every quarter for notified states. What are those notified states? Remember GMC and below. Gujarat, Madhya Pradesh, Chhattisgarh, Andhra Pradesh and states below that. And for all other states it will be 24th. Then look into the next one. Outward taxable supplies in GSTR1. How you need to report details in GSTR1? Invoice wise or consolidated? Invoice wise. Majority of the cases invoice wise only we need to report. So see this chart carefully. If it is B2B supplies, B2B means what pa? Business to business means what? Sale to registered person. Sale to registered persons will be always invoice wise. Let it be interstate or let it be intrastate, etc. Always it will be invoice wise. Whereas B2C, so B2B always invoice wise. B2C we need to check interstate, intrastate. If it is intrastate, always consolidated. Means no need to put invoice wise. Total all invoices and put one number itself. Got it? If it is B2C, B2C means what? Sale to unregistered. Interstate means interstate supplies when we are making. Check the invoice value. If the invoice value is more than 1 lakh per invoice, then we need to do invoice wise details. If the invoice value is less than 1 lakh rupees per invoice, then it will be state wise consolidation. Is it clear pa? First point what you need to remember? First point B2B. B2B always invoice wise. Then B2C consolidated when? If it is intrastate. B2C interstate, 2 points. More than 1 lakh invoice wise, less than 1 lakh state wise consolidation. Understood? Next, previously this 1 lakh rupees was 2 lakh 50. Earlier this limit was 2 lakh 50 and now they reduced it to 1 lakh. Then see the next return. We completed 1, we completed 2 and 3 and then 4. GSTR 4. Who will file GSTR 4? A person who is opting for composition scheme. What is that GSTR 4? GSTR 4 is an annual return. That annual return will be filed by 30th June of the succeeding financial year. Previously it was 30th April, now they amended to 30th June. And CMP 8. CMP 8 is also a quarterly return which will be filed by composition scheme. So people who are opting for composition scheme will file 2 returns. One is quarterly return, CMP 8. Another is annual return, that is GSTR 4. Quarterly return time limit is what? 18th of the month following every quarter. Annual return time limit is what? 30th June of the succeeding financial year. GSTR 5 is a return filed by a NRTP, non-resident taxable person. When they will file this? 13th of the month following every month or 7 days from expiry of registration, whichever is earlier. So concentrate. NRTP. Who is NRTP? Yesterday only I told you. Chris Hemsworth. Okay. So all those people who come from outside India to India to provide goods or services and they don't have any fixed place of business in India are called as NRTP. And the type of registration that they get is a temporary registration because they are not going to live here permanently. They will come and provide the service and they will leave. So the type of registration will be a temporary registration. So due to that reason, every month till the time the registration is active, 13th of the month following every month or 7 days from expiry of registration, whichever is earlier. For example, their registration expires by say 2nd of December, then 2nd December plus 7 days, 9th December or 13th December, whichever is earlier is what? 9th December itself, they need to file the return. Is it clear pa? So 13th of the month following every month or 7 days from expiry of registration. Which return? GSTR 5. GSTR 5A is a return to be filed by OIDR supplier located outside India. What is OIDR means? Online Information Database Action Retrieval Service. Remember, any online service which is provided through internet is known as OIDR services. Example, this Amazon Prime, Netflix, then even YouTube Premium, and then the even this music apps like Spotify, Apple Music, and even this Kindle ebooks, that is also coming under OIDR. Your Instagram marketing, even Instagram or Meta, everything will be coming under OIDR service, online services which is provided, including the ChatGPT or Gemini AI, etc. Everything will be OIDR service. And that OIDR supplier, where is he located? Outside India. Are they required to register and pay GST? Yes, they are required to register and pay GST. But what is the time limit by which they need to file the return? 20th of the month following every month, just like 3B. Okay. Then GSTR 6. GSTR 6 by a input service distributor. Yesterday I told you input service distributor invoice concept. What is that? There is a head office. That head office will receive the common services. I told you there is a head office with 4 branches. A chartered accountant will do the audit of 4 branches, but will raise invoice to the head office. Head office will take the credit and distribute the credit to branches. And for that purpose, they should also file the return. What is that return? GSTR 6. By when they need to file GSTR 6? By 13th of the month following every month. Then GSTR 7 and GSTR 8 contains TDS and TCS details. GSTR 7 by a TDS deductor, GSTR 8 by a TCS deductor. And what is the time limit by which they need to file the return? 10th of the month following every month. Okay. So GSTR 6 return is 13th of the month following every month. Who should file? Input service distributor. 7 and 8 TDS TCS. By when? 10th of the month following every month. GSTR 9 and 9B by a e-commerce operator. Normal is 9, e-commerce operator is 9B. This is annual return. 9 series is annual return. All 9 series, what is the time limit? 31st December of the succeeding financial year. 9C also is there. That is reconciliation statement, self-certified reconciliation statement. Why there is a mismatch between turnover as per accounts, turnover as per GST? Why there is a mismatch between ITC as per your books versus ITC as per GSTR 2B? So like that, we need to do the reconciliation and we need to submit that. 9C. But to whom 9 is applicable, 9C is applicable? To whom 9 is applicable? If their turnover during previous year exceeds, and if their turnover during previous year exceeds 5 crores, then 9C will be applicable. Can you remember this part? Mainly useful for MCQ purpose. 9 when it is applicable, if the turnover exceeds, means for the completed year for which you are filing. That is the previous year, na? Aya, what is the year for which you are filing annual return now? Now. 24, 25, correct? 24, 25 means that is your previous year only, na? So for that, if it exceeds 2 crores, then 9 is applicable. If it exceeds 5 crores, 9 also applicable, 9C also applicable. Annual return also you need to file because 5 crores means it exceeds 2 crores. Annual return also you need to file. Reconciliation statement also you need to file. But both time limit is 31st December of the succeeding financial year. GSTR 10 is a final return. Who will file this final return? A person whose registration is cancelled. That is a final return, na? Yeah, once his registration is cancelled, thereafter why he will file return? He is an unregistered person. Means final return who will file? Whose registration is cancelled. When they need to file this final return? Remember, 3 months from the date of cancellation or 3 months from the order of cancellation, whichever is later, not earlier, whichever is later. Now, you have one homework. What you need to do is that you need to take a sheet and you need to write all the cases where we have whichever is later as the provision. Okay, because in exam we will get a confusion between whichever is earlier and whichever is later. If you know whichever is later clearly, rest of the case is whichever is earlier, that you will know easily. So whichever is later alone, hardly 10 points like that, not more than that. Hardly 10 cases it will come, not more than that. This is one place, then one more place we saw whichever is later yesterday, where time limit for availment of ITC in case of revocation of cancellation of registration. the regular time limit, or 30 days from revocation order, whichever is later. Okay, like this, wherever we have whichever is later, that alone you document somewhere. In the same book, last also I gave some note space, there also you can write. So everything will be in one book itself. And if there is any extra information also, if you want to write, you just buy a sticky note. You buy a sticky note, like some decent size, like half size of this, okay? Buy a sticky note and you write the extra information in that and you paste it in this book. So that one book only you are going to read, repeatedly you are going to read, definitely the flash memory gets activated. Because in exam, I don't know whether it happened for you or not. If you have written May exam, so definitely you might be knowing, while writing the provision, if you are not able to recollect, if you close the eyes, that page will flash in your mind. Whether it happened, Appa, for you? How many of you experienced it? Super. So happy to see. Very good. So it will happen. You know when it will happen? When you follow 10 books, it will not happen. When you follow 10 books, it will never happen like this. When you follow only one book, it will happen. Now your target is to fix one book. And that book only you are reading, that book only repeatedly you are reading. It's not about many books. Sir, I already purchased this one faculty's book, or already I have one faculty book. Go with this. It's okay. Even for GST, I'm telling, it's okay. See, I'm a teacher first. And then only, entrepreneur, businessman, etc. and all. But I'm a teacher first. As a teacher, I am telling you, even if you don't buy my book, it's okay. But follow one book, any one book, whichever book you have already got, follow that book. And make note of everything in that book, whichever book you read already. Suppose you are not, sir, I did not read this book only, I am going to read, then you buy this book, it's okay. And prefer color book. Why color book? That is out of the research I am telling you. Because black and white versus color. Color has high chances of retention than black and white. Simple pa. You will see one girl or you will see one boy who will look good. You will see only once. But if he looks good or she looks good, the image gets stored in the brain because the brain will release a chemical at that time. We think that it is love, etc. and all, nothing of that sort. It's just a chemical reaction. And this chemical reaction happens so that face you will remember. You will think, okay, then this is the destiny. So that boy or that girl is only, no, nothing of that sort. There is nothing like that. No, don't blame God for your chemical reactions. You understood? God will not agree for all these things. So like that, when you see some colorful chart or colorful notes, etc. and all, that will be retained more chance of retaining than black and white. That's the reason. Okay. So follow one book, repeatedly follow the same book, and whatever extra points you write in that book, and one day before exam also see that book only and go for exam. It will work out. You understood? Then coming back to this, 3 months from the date of cancellation or 3 months from the order of cancellation, whichever is later. What is date of cancellation? The date on which they gave you the order is the order of cancellation. But in that order, they will mention the effective date of cancellation. Is it clear? So, date of cancellation is the effective date. Date of cancellation is effective date. But order of cancellation is order date. The date on which order has been passed. The date on which order has been passed is cancellation order date. But the date of cancellation is the effective date. There is a difference. Sometimes today they will give order to give the cancellation retrospective, backdated. Then whichever is later. 3 months is common for both? Yes, 3 months is common for both. Then GSTR 11. Who will be filing GSTR 11? A UIN holder. Person having UIN. What is UIN means? Unique identification number. In registration chapter, we will come across this. unique identification number. Sir, who is a person having unique identification number? Carefully listen. UN agencies like UNESCO, UNICEF, WHO, or embassies like foreign countries will be having embassies in India. So whenever their people are coming here to provide the services to their nationals, like in India we have Russian embassy and Singapore embassy, like that, that is embassies. Then consulates again, foreign countries will be having consulate in India to give visa to Indians to travel to their country. So these embassies and consulates and UN agencies are called as unique identification number holders. Why it will be called as UIN, not GSTIN? Regularly registered people are called as GSTIN. But why these people are UIN? Because these people are not required to pay any GST on their outward supplies. Who? UN agencies, embassies and consulates are not required to pay GST on their outward supplies. But on their inward supplies, they already paid GST, na? They will procure, na? They will have some inward supplies or not? Example, they will take property on rent, means renting of immobile property, they will buy the stationery, they will buy the computers, they will buy the system, etc. and all. All these are inward supplies on which can the GST paid be taken as ITC? No, because they are making exempted supplies. When your outward supply is exempted, you cannot take ITC on inward supply. So that GST paid they will get as a refund. To claim that refund, they need a identification number, that is this unique identification number, which means how they will be able to claim refund? They need to submit GSTR 11. What does GSTR 11 contains? Come on, tell me, what does GSTR 11 contains? Inward supply details, because on which they need to claim refund. So details of inward supplies to be furnished by a person having unique identification number, and when they need to file this GSTR 11 at the time of filing refund claim. So we completed now so far what are the various returns and who is required to file that return, what is the due date of filing that return. Mostly it will be useful for MCQ questions. Okay. Next. In this, one descriptive question possibly is related to 1A, which already we discussed. Look into the special points on returns. There is something called as sequential filing of returns. That is, if you are not filing GSTR 1 of this month, you cannot file the 3B of this month. Same way, if you are not filing 1 and 3B of this month, you cannot file the GSTR 1 of the next month. Like that, we have a sequential filing of returns. Without filing GSTR 1 of a month, 3B cannot be filed for that month. Also, without filing 3B of previous month, 1 cannot be filed for the current month. Then next. So, can government ask a person to file GSTR 1 even if they have not filed the GSTR 1 for the prior periods? Yes, that is an exception to this. Generally, without filing GSTR 1 of the prior period, you cannot file the GSTR 1 of the current period. But government may permit a person to do so. Government on the recommendations of GST Council may allow a person to file GSTR 1 even if GSTR 1 is not filed for prior periods. This is about section 38, already we discussed this in last class. Then, who are not required to file GSTR 1 and GSTR 3B? Remember, tonic. In the tonic T square, 2 ml tonic, okay? Remember 2 ml tonic in the T2, okay? So, what is that? T? TDS, TCS. TDS, TCS. Why they will not file 1? Because they will be filing 7 and 8. Okay. Then OIDR supplier. OIDR supplier will be filing GSTR 5A. That's why they are not required to file 1. Then NRTP, because they are filing 5A. So they are not required to file this. Then TON, input service distributor, because they are filing GSTR 6. That's why they are not required to file 1 or 3B. Then C, composition scheme. Composition scheme, they will be filing CMP 8. That's why they are not required to file 1 or 3B. Can you remember this tonic? Then who are not required to file annual return? Remember CAG tonic. Tonic same. CAG tonic. What is CAG? Comptroller and Auditor General. Those people whose books of accounts is subject to audit by CAG? Who are the people whose books are subject to audit by CAG? Government departments, public sector undertakings, etc. They are not required to file annual return. Then tonic, only 1 ml. There is no 2 ml here, 1 ml. T, that is TDS deductor, TCS deductor. TDS deductor, because TCS deductor will file GSTR 9B annual return. Correct? Sir, who is TCS deductor in GST? E-commerce operator. They will be filing GSTR 9B. As they are filing GSTR 9B, so this will not be applicable. Is it clear? And so TDS deductor only. Then O for OIDR supplier, same. Then N for NRTP, same. I for same, input service distributor. But C is not composition scheme. C is casual taxable person, because composition scheme will file GSTR 4 as the annual return. Check, check. GSTR 4 they will be filing annual return by 30th June of the succeeding financial year. That's why this relaxation is for casual taxable person. Sir, who is a casual taxable person? Who come from other state to this state? You know, recently Nagarjuna is a casual taxable person. Napa? Correct? So he is from other state to this state. Recently he acted in 2 movies. One movie, Kubera like that one movie, and another this Coolie like that one movie. Same way, Dhanush will become, you know, casual taxable person in Andhra Pradesh. You got it? Means what? A person who enters into a state where they don't have any physical place of business. Then they will be called as casual taxable person. Okay. And this casual taxable person will be occasionally making supply, and they are also required to get registered, but their registration will be temporary. They come for a purpose, they complete that, and they will be leaving. So they are called as casual taxable person, and they will get a temporary registration. 2 people will get temporary registration. Who are they? NRTP and CTP. That's why they are not required to file annual return, because throughout the year they will not be in India. Got it? So input service distributor, then casual taxable person. Again, for descriptive question you may get, but don't write tonic and all in exam. Write like points. Okay. Next, annual return for TDS deductor, that is GSTR 9B. Sorry, annual return for TCS deductor. Annual return for TCS deductor. What is TCS deductor's annual return? GSTR 9B is yet to be notified. GST not payable at the time of filing GSTR 1. However, GST is payable at the time of filing GSTR 3B. Then, if a person is not required to file GSTR 9, but has an unpaid liability. Sir, I am not required to file 9, sir, but I have some liability. How to pay that liability? Through DRC 3. The same can be discharged using form DRC 3. Then, a taxpayer need to electronically sign the submitted returns, otherwise it will be considered as not filed. Because lot of people, what they do, they will go up to filing of GSTR 3B, but one EVC, e-verification needs to be done, or digital signature needs to be given, but they will not do that. They will think return has been filed. No, only after completion of verification, electronic signature, the return is said to be filed. Taxpayers opting for voluntary cancellation of GSTIN. What is this voluntary cancellation of GSTIN? Sometimes, you know, like I wanted to come out of the registration. Unnecessarily, without crossing threshold limit, I got registered. Now my turnover is hardly 10 lakhs or 15 lakhs. It did not cross the 20 lakhs threshold limit. But before that, I don't know, so voluntarily I got registered. Now I want to cancel the registration. Till the date my registration is active, should I file the GST returns or not? Yes. Taxpayer opting for voluntary cancellation of GSTN has to file GSTR 1 for the active period. Then HSN details for goods. What is HSN means? Harmonized system of nomenclature. HSN means harmonized system of nomenclature. Harmonized system of nomenclature. That means harmonized system of nomenclature. That means all the goods are converted into numbers. All the goods are converted into number. For example, tea is 0901, coffee is 0902, pepper 0904. Like that, they converted all the products into numbers, and that numbers are called as HSN, Harmonized System of Nomenclature. For goods, we need to enter that HSN. And SAC, what is SAC? Service Accounting Code. Service Accounting Code. For all services, they have given numbering. So for coaching, one number will be there, like 9971, like that. For renting, so 9936, like that. For every service, one number is there. That number we need to enter. For services, needs to be updated in the returns. Got it? Next, look into the next area, late fee for delay in filing return. Again useful for MCQ. What is the late fee for filing GSTR1 and GSTR3B? That is important. Mostly GSTR1 and 3B only, repeatedly they will be asking late fee. See the late fee part. If it is nil return, what is the meaning of nil return? Means all the details in the return will be nil. That is called as nil return. If it is nil return, then the late fee will be 10 rupees per day. If it is other than nil return, what is the late fee? 25 rupees per day. But nil return, what is the maximum amount? 10 rupees per day, okay, but what is the maximum amount? 250, means this is under CGST. The same late fee is payable under SGST also. Now concentrate. Nil return, there is a delay by 15 days. So 15 into 10, 150, maximum 250. So 150 rupees only we need to pay. Suppose if the nil return delayed by 30 days, 30 into 10, but maximum, so therefore we need to pay 250. Is it clear here? If it is other than nil return, how much is per day late fee? 25. Maximum we have different numbers. If your aggregate turnover during the previous year exceeds 5 crores, you remember, exceeds 5 crores, how much? 5,000. Exceeds 5 crores, how much pa? If it does not exceed 5 crores, if it does not exceed 5 crores but exceeds 1.5 crores, then half. What is half? 2,500. If it does not exceed 1.5 crores, then half of that. What is that half of that? 1,250. Ignore 250, 1,000 rupees. You understood? Napa? So per day late fee no change here, 25 rupees only. But maximum, if the aggregate turnover during previous year exceeds 5 crores, 5,000. Exceed 1.5 but does not exceed 5, 2,500. If it does not exceed 1.5 crores, then it will be 1,000. Okay. Then next, GSTR4 return. GSTR4 nil return 10 rupees per day, subject to maximum 250, other than nil return 25 rupees per day, subject to maximum 1000. You tell me who are required to file GSTR4? And for composition scheme, what should be the aggregate turnover during previous year? Should not exceed. If your aggregate turnover during previous year does not exceed 1.5 crore, what is the maximum late fee for GSTR1 and 3B? 1000. So copy paste. You understood? So this copy paste here, nil return 10 rupees per day, other than nil return 25 rupees per day, subject to maximum 250 and 1000. Got it? Next, 5, 5A and 6. Nil return same, 10 rupees per day, other than nil return also same, 25 rupees per day. But what is the maximum? 5,000, flat 5,000 in both the cases. Okay? Next, GSTR7. GSTR7 who will file? TDS deductor. GSTR8 who will file? TCS deductor. For GSTR7 what is the late fee? GSTR7 what is the late fee? 25 rupees per day, subject to maximum 1000. TCS what is the late fee? TCS return GSTR8 100 rupees per day, subject to maximum. So here if you see TDS return who will file? Government. So lower late fee. And TCS return who will file? E-commerce operator, private. So higher late fee. You understood the disparity? TDS will be 25 rupees per day subject to maximum 1000. TCS is 100 rupees per day subject to maximum 5000. And whether TDS nil return has to be filed? Yes. For TCS nil return has to be filed? No. Where we need to file nil return? TDS. TCS we don't have to file nil return. This is an amendment for September 25 exam. So what is the amendment pa? TDS return, whether we have transactions or not, whether TDS is deducted or not, they have to file the nil return. But if they are not filing nil return, is there any late fee? No, there is no late fee, that has been waived. Whereas TCS, if they don't have any TCS transactions, TCS not deducted, are they required to file nil return? No. Then next one pa, GSTR 9, 9B, 9C etc. What is the late fee? See there, per day late fee is 25 rupees per day if it is up to 5 crores. Previous year turnover up to 5 crores, how much? 25 rupees. If it exceeds 5 but does not exceed 20, double. What is a double? 50. If it exceeds 20 crores, again double. 50 double is what? 100. Is it clear? And what is the maximum late fee? First two cases, the maximum late fee is 0.02%. Last case, what is the maximum late fee? 0.25%. Easily try to remember, because big chart and all of no use. Because if you remember that way, you will never be able to remember. Try to remember easily with logic. Up to 5 crores. So who is required to file? Only 9. 9C will not come, correct? Up to 5 crores means 9C will not come, am I right? Because 9C will come only if it is more than 5 crores. So up to 5 crores, 25 rupees per day. Beyond 5 crores and maximum 20 crores, how much? Double, 50. 50 double, more than 20 crores, 50 double, 100. 25 per day, 50 per day, 100 per day. Maximum, first two cases, 0.02% of turnover. Last, 0.25% of turnover. Apart from this, any other return, the late fee will be 100 rupees per day subject to maximum 5000. But we don't have any other return, already we covered everything. Maybe for the GSTR 10, we have final return, GSTR 10 etc. For that they have given this, okay. An equal amount of late fee is payable under SGST Act also. Late fee under IGST Act is not applicable if late fee is paid under CGST SGST Act. Be careful in MCQ. They will ask compute the late fee under CGST. But in options they will give CGST plus SGST late fee also. Ayya, are you getting this? But you need to select the option only CGST. Suppose if they give compute the late fee payable, but they are not specifying which act, then both, okay. Next, late fee for returns is automatically computed by the portal and reflected in the subsequent return. How the late fee should be paid? Using credit ledger and cash ledger or only cash ledger? Only using cash ledger. Can we file nil returns through SMS? Yes. So GSTR 1, GSTR 3B and CMP 8, we don't have to log in and file the return, just send a SMS. Say for example, that month you don't have any transaction. No need to log in into the portal and enter 0000 and file the return. Just send a SMS. Okay, there is a format they have given. You type nil return, GSTIN, and you send SMS to one toll-free number so that your return is deemed to have been filed. Simple. The following returns can be filed through SMS if all the entries in the return are nil. What are they? GSTR 1, GSTR 3B and CMP 8. Then, notice to return defaulters. What is that? Sometimes you are not filing the returns. When you are not filing the returns, they will be issuing a notice. After the notice, within 15 days you need to file the returns. This is there even in income tax also. In income tax also, section 139 subsection 1, we need to file the returns. And who is required to file return? Every person whose taxable income exceeds the basic exemption limit is required to file income tax return. If they are not filing return, there will be a notice served to them and if that notice served then also they are not filing return, then it will lead to best judgment assessment, like that we have in income tax. Maybe you might have left it in choice, but it is there. Same way in GST also, a notice will be given to you in GSTR 3A if you are not filing the returns. After issuance of notice, return should be filed within 15 days from such notice. If returns not filed within 15 days after notice, officer recovers GST based on the information available with him, that is using the bank statement. Then next, rectification of returns. Already I told you, what is the time limit for rectification of returns? Same time limit pa, 30th November of succeeding financial year or date of filing annual return, whichever is earlier. What are the places where the time limit is same? Come on. Availment of ITC, issuance of credit note, rectification of GSTR 1, rectification of GSTR 3B, and rectification of GSTR 8. So you can write here rectification of subsequent return of GSTR 1, GSTR 3B, and GSTR 8. Even GSTR 8 also pa. Even GSTR 8 also the time limit is same. Then tell me what are the cases your GSTR 1 or 3B will be blocked. Means you cannot file return. Already we studied two situations, 88C, 88D. What is that 88C? Liability in GSTR 1 exceeds liability in GSTR 3B. A notice is issued and within 7 days you have not replied to the notice, and till the time you pay the differential amount, what they will do? They will block your GSTR 1 and GSTR 3B. Second, ITC in GSTR 3B exceeds ITC in GSTR 2B, and they gave a notice and within 7 days you have not replied or paid, till the time you are making the payment, they will block your GSTR 1 and GSTR 3B. Is it clear? Those 2 points, that is intimation under 88C, intimation under 88D. Then one more point also we studied now only, sequential filing of returns. Without filing the returns of previous month GSTR 1 or 3B, we cannot file the GSTR 1 of the current month, correct? So without filing 3B of the preceding month or without filing 3B of the preceding quarter, we cannot file the GSTR 1 of the current month or current quarter, correct? And one more point only you need to remember. For first 2 points already we studied in sequential filing. Next 2 points we studied in 88C, 88D. Here extra one point you need to remember, not furnished bank details within the time limit. Actually after registration you need to furnish your bank statement, bank details within 30 days from the date on which you got the registration or the date on which you filed the GSTR 1, whichever is earlier. You have to furnish your bank details. If you have not furnished the bank details, this point we will come across in registration chapter. If you are not furnishing bank details, that is the reason for the purpose of blocking your GSTR 1. So total 5 situations. Mark it as important for theory. Already they tested this once. What are the 5 situations where your GSTR 1 will be blocked? GSTR 3B not filed for preceding month, GSTR 3B not filed for preceding quarter, not furnish the bank details within the time limit, then that 88C and 88D. So this is the new GST return structure involving GSTR 1A and IMS. Now they brought in a new concept of IMS, that is invoice management system. 1A already I explained to you. What is that 1A? A supplier files the GSTR 1 by 11th of the month following every month and he add the invoice in GSTR 1. Suppose if he need to amend that by 20th, he will be filing GSTR 1A, correct? GSTR 1A he will be filed by 20th, and so this 1A details whenever he is filing, whether it will be reflected in the 3B of the supplier in the same month, yes, but it will be reflected, what will be reflected in the 2B of the recipient? Only GSTR 1 will be reflected in the 2B of the recipient by 14th, correct? So GSTR 2B reflected by 14th. Only GSTR 1 data, 1 year data will not come. Am I right? 1 year data will not come, but 1 year data will come when? Next month 2B. Okay. Now, here what recipient should do? Recipient will open his IMS, Invoice Management System. Whatever purchases he has made, all the purchases will be reflected there, and there will be 3 options: accept, reject, and then pending. Accept, reject, pending. Accept, if we click, it will be added to 2B. Reject, if we click, it will not be added to 2B. When he will reject? If it is a blocked ITC, if it is inward supply used for non-business purpose, or if it is inward supply used for exempted outward supply. Are you getting this? He need to reject. Pending when? Sir, this month invoice, sir, next month only they are going to receive the goods, means this month it will be pending now, because he can take ITC only on receipt of goods. So this month it will be pending. So action will be either accepted or rejected or pending. If it is accepted, it will be transferred to 2B. If it will be transferred to 2B. What if it is rejected? It will not be transferred to 2B. If it is pending, what will happen? It will be transferred to next month invoice management system. Like that, it will be keep on transferring, bending. Up to when? Up to 30th November of succeeding financial year, because that is the time limit for availment of ITC. So you can keep on forwarding it. Is it clear? That is about this IMS. So when you get a theory question on IMS, you just convert into this chart into theory form and you write points. Okay. Rarely you will get. If at all you are getting, you write like this. Okay. All returns including annual return except CMP8 can be filed belatedly within 3 years from due date. So like income tax, we have in GST also belated return concept. But when you can file belatedly, 3 years from the due date. Which return? Every return you can file late. But should we pay late fee? Of course we should pay late fee. Belated return means there is a late fee. What is belated means? After. Okay. So therefore belated returns, what is a late fee pa? We have to pay. We already discussed 10 rupees, 25 rupees, etc. and all. But what is the maximum time limit by which belated return has to be filed? 3 years from the due date. Next. We have one small concept, that is GST practitioner, section 48. So who can become GST practitioner? First we will see. Then we will see what are the activities that can be done by a GST practitioner. Now look into that page and tell me who can become GST practitioner. What are the conditions? Number 1, citizen of India. So foreigners don't have any other work, no. So they can come and become GST practitioner. That's why we are telling only citizen of India can become GST practitioner. And second, person of sound mind should be there. Means in his mind sound should come, not that. Sound mind means what? Sound mind means he has analytical ability or cognitive ability for taking the decisions. That is the meaning of sound mind. Means he should not be lunatic, or he should not be a psycho, or he should not be having some mental sickness, etc. and all. Got it? So normal person. We are all normal people. Okay. Pa, have you ever got some kind of depression when you fail in exam? You got depression. You failed in exam, you got depression. 1 day, 2 day, 1 week. Yes. And many times you feel like frustrated when you are reading something you are not able to understand. Yes or no? Yes. And sometimes you will get dreams and all that you will fail in exam, or you will forget to go to the exam hall. You got that? You are normal only. There is no mental problem for you. You understood? All these are normal. People will tell that, lot of psychiatrists are there. What they will do? This is some mental issue. Mental health, like that. One new word now it is being coined in many places. There is no issue at all. You are all normal people. Unnecessarily don't think that you have some issue and go for any consulting. Not required, pa. You are all normal. Seriously, I am telling you, you are all normal. Everyone will have this kind of things. If you are not getting things on like this only, if you are not getting frustrated, if you are not getting anger, if you are not going into depression, then only some problem is there for you. You understood? Seriously, these are all normal. Okay, so people will try to do many things for the sake of money. You don't fall for it. Okay, you are all normal. Don't think about all those things. And everyone will get this kind of frustration, irritation, and even now depression. This all shunts normal. You understood? There is no problem. Unless otherwise you are, a kind of psycho or mentally retarded person or some kind of lunatic, etc., then only you are not of sound mind. Otherwise you will be of, got it? Third point, not adjudged as insolvent. Not adjudged as insolvent means not declared as insolvent, and not been convicted by a competent court for an offence with imprisonment not less than 2 years. Means imprisonment more than 2 years, you cannot become GST practitioner. Imprisonment up to 2 years. Say you made one murder or some crime and you went to prison, and up to 2 years you coming out. Can you become GST practitioner? Yes, you can. Beyond 2 years only not possible. Okay, pa? So tell me who can become GST practitioner. Number 1, citizen of India, sound minded, not adjudged as insolvent, not convicted for more than 2 years. What work they will do, sir? So not collector work and all, small simple work only. First, if a person wanted to, come into GST, what is it they need to do? GST registration. That registration GST practitioner will do, pa. Second, what's next after registration? Filing of returns. That rather than you filing the returns, they will file the returns. Then next, you may be going into composition scheme, correct? You may want to opt for composition scheme or exit from composition scheme. That work also they can do. Next, making payment of tax, and if you paid tax in excess, application for refund. Then they can act as an authorized representative. If department wants to meet you, if department officer wants to meet you, they can act as an authorized representative. And they will furnish the information for generation of e-way bill, data entry. E-way bill data entry also they can do. And goods sent on job work, receipt from job work, they need to enter the details in one form, that is ITC4. That work also GST practitioner can do. And making an application for unique enrollment number or amendment of unique enrollment number. Certain people are required to get unique enrollment number in GST. Who are they? Unregistered transporters, unregistered warehouse keepers, and unregistered people who want to supply goods through e-commerce operators, or unregistered people who want to generate e-way bill. They are all required to get a unique enrollment number. Later we will discuss in accounts and records chapter, I will tell you that. But these people has to get the unique enrollment number. That application for unique enrollment number or amendment or cancellation will be done by GST practitioner. These are the 8 activities that will be done by GST practitioner. If you get a question, theory question, who can become a GST practitioner, you need to write these 4 points. If you get a question, what are the activities or roles and responsibilities of GST practitioner, you need to write this. Got it? Then one simple point. Sir, returns are filed by GST practitioner on our behalf, correct? I am a taxpayer. On my behalf, GST practitioner will file returns. In that returns, if there is any mistake, carefully listen, in that returns, if there is any mistake, who is responsible? GST practitioner is responsible, or taxpayer is responsible? Taxpayer. Then why GST practitioner is required? The responsibility for correctness of any particulars furnished in the return or other details filed by GST practitioner shall continue to rest with the registered person on whose behalf such return and details are furnished. For who is having responsibility? Pa? Taxpayer. For every statement furnished by GST practitioner, a confirmation shall be sought from the registered person. So GST practitioner, before filing return, they have to show it to me. And I should tell, yes, everything is correct, you file. Then I myself can file now. Correct or not? You need to, that is GST practitioner should get a clarification, a confirmation. The registered person before confirming should ensure that the facts mentioned in the return are true and correct. Failure to respond request, suppose if I am not telling anything, then deemed to be confirmed. Okay, so that is you are going and telling I love you, the other person keeps quiet, confirmation, like that. However, failure to respond to request for confirmation shall be treated as deemed confirmation. Super, no? And this is one of the stupid concept that is there in GST. Mainly they wanted to remove the work from chartered accountants and cost accountants, so they brought in this GST practitioner concept. So but they don't understand that GST practitioner, whatever returns they file, will not be always perfect. You cannot compare a doctor's experience with Google search. Agreed? Many times, no, my shoulder will be painful sometimes because of the stress. I will search in Google. So left shoulder, there is some pain. It will tell, you will have a heart attack. You will get a heart. Seriously, you search in Google, no, that is a symptom for heart attack. Immediately I went to doctor for checking. Sir, pain is there, sir. I might be getting heart attack, like that. He asked me one question. Did you Google it? Yes, sir. So immediately he said, nothing normal. This is not a problem at all. Because of the stress. What have you done in the last 10-15 days? Continuous classes, sir. That is because of the stress. You might not sleep properly, and you would have kept your hand or shoulder in some position and you would have slept, because of which it will happen. So he gave some painkiller, etc. No heart attack and all. You understood? Like that, GST practitioner, some donkey, monkey who is going on roadside, if you make them GST practitioner, no proper qualification. This is a qualification, citizen of India, sound mind, not adjudged as insolvent, hours and hours, like pigs you are reading, correct? Morning to night, and no rest. There is nothing, no festival, no enjoyment. You are the most unfortunate, unluckiest person on earth. This much you are reading. Now can they compare with you, Appa? You tell me. They cannot, na? This is a qualification of, first of all, to become GST practitioner. How trusting them the returns can be given, and they will file. Again, who is responsible? Taxpayer is responsible. Nothing of that sort. Practically no one will give. Everyone will be giving it only to, people who are qualified enough. Okay. But GST practitioner per se is a good concept for those who could not clear CA intermediate. Because what happens, these coaching centers and all will boast like anything. You become CA, you will be coming in flight, you will get down in flight, and in this hand you take the certificate, and in this hand you will get marriage, dowry and all, you will get 2 crores, 3 crores, and you take your parents and all in flights. Which flight, which chartered accountant is taking in flights here? And some people will tell, just because I became CA, you don't do any other course, just to do CA only, BCom also don't do. But now they are only promoting BCom also. Okay. So, therefore, sorry, nothing intentional, just I told it. But what happens here is that they boast this course so much, and lot of students are joining into CA not doing BCom. How many of you joined in CA without BCom? Very, very risky. You are taking a high risk. What is that risk? That till the time you complete CA final, you don't have a qualification. Do you know that? No qualification. Who are you? Unqualified. You got it? And seriously, till the time you complete CA and get the membership, who are you? Unqualified. What is your qualification? 12th pass. Okay. That is your qualification. Seriously. And at least in distance mode, get some BCom. because degree is something which is crucial. Now I know many people joined into CA/CMA course, they thought BCom and all not required because they believed in these coaching centers, and they flunk in CA intermediate 2-3 attempts. See, this is an art, not everyone will be able to get it, and because of that reason, see, there is a limit now, like 5 attempts, 6 attempts they will give. Beyond that they will feel like no, it will not work out. Is there any way, sir? At least GST practitioner you can become, but for becoming GST practitioner at least BCom is required. You understood? Degree is required. Without degree you cannot become a GST practitioner also. Is it clear? Whatever the professions that we have, in that the lowest profession itself is GST practitioner. But to become the GST practitioner itself, you need to get a BCom degree. Okay, fine. It's okay. Now that if you are in CA intermediate, also it's not late. Please get a graduation. At least IGNO, you know na? IGNO is offering some kind of graduation, and you can join there. They are giving some exemptions also if you have completed foundation, if you complete inter, etc. and all. Tomorrow if you need to go to abroad, graduation is must pa. Without graduation you cannot go abroad, or you have to wait till the time you complete your CA final and get the membership. It's a long time. For that reason only this piece of advice I am giving. Now coming back to this discussion, QRMP scheme. What is QRMP full form? Quarterly return, monthly payment. Name itself says you will file returns on a, but you will pay tax on a. What is the use of it, sir? No use. Seriously, no use. When you pay tax on a monthly basis, why you will file returns on a quarterly basis? Happily you can file return on monthly basis itself. Say this. To whom this QRMP scheme will be applicable? To whom? A person whose aggregate turnover in a previous year does not exceed 5 crores, then they can go for QRMP. And QRMP, they will file GSTR 1 by when? Already we discussed. By when? 13th of the month following every quarter. GSTR 3B by when? 22nd or 24th of the month following every quarter. Is it clear? And when they file returns on a quarterly basis, then whether tax also they need to pay on a quarterly basis? No, they have to pay on a monthly basis. How, sir? How they can pay? Because you said GSTR 3B when you file only we need to pay tax. Then how I can pay on a monthly basis? They have given 2 methods. What are the 2 methods, pa? Fixed sum method and self-assessment method. What is that fixed sum method, self-assessment method? Carefully listen. In fixed sum method, last 3B you would have filed na. Concentrate please. Last 3B you would have filed. In that last 3B, you see monthly or quarterly. If it is a monthly 3B, then you take 100% and you pay it for this month. Is it clear or not? If it is quarterly 3B, means it is for 3 months. So total divided by 3, 33.33, round off to 35. So you pay 35% of your last quarter liability as this month liability. That is fixed sum method. Is it clear? How to compute tax under fixed sum method you see below. Under fixed sum method, you need to check whether you are a quarterly filer of 3B or monthly filer of 3B. If you are a monthly filer of 3B, then 100% of tax liability, that is previous quarter, you filed 3B, monthly or quarterly, we need to check. Monthly means 100% of tax liability, net liability. If it is quarterly 3B, then 35% of net liability you need to pay. This is under which method? Fixed sum method. Whereas under self-assessment method, you compute how much is your actual liability and you make the payment. That is self-assessment method. Is it clear? And this you need to pay by when? This you need to pay by when? Read that. This we need to pay by when? 25th of the month following every month in the first 2 months of the quarter. For example, April to June you are under QRMP. For April month when you need to pay? By 25th of May. And for May month when you need to pay? 25th of June. What about June month? Anyhow, for all these 3 months we file 3B by 22nd or 24th. At that time we will pay for the 3rd month. Is it clear? monthly payment of tax through PMT6 using fixed sum method or self-assessment method by 25th of the next month for 2 months in a quarter. And when you file GSTR1 on a quarterly basis, means your recipient will take ITC on a quarterly basis. So if you want to give ITC on a monthly basis, what you should do? You need to file one statement. What is that statement? IFF. Mandatory or optional? Optional. B2B invoices may be furnished optional on a monthly basis through invoice furnishing facility, which is reflected in 2A, 2B of the recipient. And this QRMP scheme is GSTIN wise. What does it mean? Example, I have 4 registrations. Now for each registration I can decide either QRMP or monthly. Either QRMP or monthly, like that I can decide for 4 registrations. It's not like composition scheme. In composition scheme we have one point, all in, all out. All the registrations will be under composition scheme or all the registrations will be under normal scheme. But it is not like that. QRMP scheme is GSTIN wise, and distinct person have the option to avail the scheme for 1 or more GSTIN. Then by when I should opt in for QRMP? Simple pa, I am right now on April 1st. By end of April I should decide, or 2 months before. What is 2 months before? What is 2 months before April? March, February 1st. So from February 1st to 30th April I should decide whether to go for QRMP or not. So within 1 month after, 2 months before commencement of the quarter. Next, July 1st you are there. What is the time limit for opt-in? 2 months before. What is 2 months before? May. What is 1 month after? June. July 31st. Sorry, June 30th. Correct? July 1st. Am I right? So 1st May to 31st July. You remember like this, A for after, B for before. 1 month after, 2 months before. Alphabet A is 1, alphabet B is 2. So 1 month after, 2 months before. Okay? Condition to opt in, you should have filed the last return before going into QRMP, because all monthly returns you need to file, then only you can go for QRMP. GSTR1 or IFF facility, I will give break, concentrate please, you are not at all listening. Listen, so hardly 10 minutes to 15 minutes only. Okay, we will complete. After this portion got over, returns chapter got over, we will complete it. Come on, you are sleeping. So what is that GSTR1 or IFF? Come on, what is that? Either they can go for IFF for the first 2 months of the quarter, and what details they will enter in IFF? Only B2B details. What if they are not going for IFF? That first month return, that first month data, second month data, third month data, all these 3 month data they have to put it in GSTR1. Suppose if they go for IFF, first month and second month, anyhow they are going to add the data, only the third month information they need to add. Is it clear? Read it. The scheme provides the IFF facility for first 2 months to furnish the details of outward supply till the 13th of the succeeding month, and this facility is optional. Details furnished using IFF need not require to refurnish in GSTR1. Therefore, only invoices of last month of the quarter is required to be furnished in GSTR1. So what is the exception for this? How much data we can enter every month? 50 lakhs. Why 50 lakhs? Logically you add 1 month 50 lakhs, 12 months 6 crores. But if your turnover is 6 crores, means you are not in QRMP na. That's why they said maximum we can add up to 50 lakhs in a month. On non-opting of this facility, what will happen to the details of outward supply? Should we enter that in GSTR1 quarterly? Yes. If you go for IFF, the only advantage is first month, second month already you furnished, only third month data you need to furnish in GSTR1. Otherwise, all 3 months. So we already discussed the fixed sum method. What is self-assessment method? You will calculate what is your actual liability and you will make the payment. Any change in the manner of filing 3B? No change. No change in the manner of filing 3B, the regular way only we will file. Compulsory opt-out. When you will opt out of QRMP? Respond. When you will opt out of QRMP? whenever your aggregate turnover crosses 5 crores. For example, first quarter 3 crores, second quarter 3 crores. So you crossed 5 crores. So third quarter onwards, you will not be into QRMP. You have to file monthly returns. Understood? Then levy of late fee. Whether late fee is applicable for QRMP also? Yes. So even for QRMP also there is a late fee for delay in filing returns. The regular late fee whatever we have discussed so far, that will be applicable for QRMP as well. But for late payment of tax there is no late fee. There is only interest. Now this interest concept is what we need to understand in QRMP, concentrate. This is important. So far what we discussed in QRMP may not be tested in exam, but this concept can be tested in exam. Carefully listen. Listen pa, first April, May, June you are going for QRMP. April, May, June. April month you have fixed sum liability. You opted for fixed sum. April month you have to pay by 25th of May. May month you need to pay by 25th of June. If there is a delay in payment beyond 25th of May, beyond 25th of June, whether interest is applicable or not. Yes. Is it also delay in payment of tax? Sir, please sir, listen sir. That is April, May, June you went for QRMP pa. April month you have to pay by 25th May pa. May month you have to pay by 25th June pa. If you are not paying by 25th May and 25th June, are you required to pay interest? Yes. At what rate? 18%. For how many days? For the number of days there is a delay in payment of tax after 25th, correct? So say this, you are under fixed sum method. Tax with respect to first month and second month of the quarter not paid by 25th of next month, you need to pay interest from 26th of next month till the date of payment. Clear? This point. Next, concentrate. April, May, June, you are under QRMP. April month, you paid 40,000 under fixed sum method. April month, you paid 40,000 under fixed sum method. But your actual liability is 50,000. Means there is a shortfall, correct? April month, you paid how much under fixed sum method? 40,000. What is your actual liability? 50,000. What is the difference? 10,000. Is there any interest on that? No interest, because you are going under fixed sum method. If you go under self-assessment method, on the 10,000 rupees you need to pay interest. Is it clear? Understood the difference between fixed sum and self-assessment? Because fixed sum method is a system calculated method, already past liability, based on that you are paying. But self-assessment method, you yourself calculating, wantedly you can pay lesser amount. When you pay lesser amount, there is no possibility of escape. You have to pay interest on the difference. Got it? If you follow what we say, don't pay interest. If you follow what you want to follow, then you end up paying interest. That is the difference here. Got it? Next. Now, April, May, June, all 3 months put together, you have to discharge the liability by when? 22nd or 24th. 3B due date is what, pa? 22nd or 24th. What if you have not filed return by 22nd or 24th? You filed it late. Whether you need to pay interest? Yes. So say this. Tax with respect to first and second month not paid by 25th of next month. You need to pay interest from 26th till the time you pay the tax. This is common between fixed sum method and self-assessment method. Are you with me? Difference tax, that is actual tax minus tax paid. Actual tax minus tax paid with respect to first month or second month of the quarter, if there is any difference. What is difference? How much ever you already paid versus actual liability. Okay. If you paid by the due date of 3B, there is no interest, correct? Under fixed sum method. But you need to pay under Self-assessment method, interest at 18% per annum from 26th of next month till the date of payment on what? On the difference. Suppose if the GSTR 3B for the quarter, if you have filed late, then 18% interest from which date? 22nd or 24th. So means the interest will count from 23rd or 25th. Correct? This is common for both. FSM are the same. Interest at 18% per annum from 23rd or 25th of the month following every quarter till the date of filing 3B. And as there is a delay in filing 3B, interest is always computed on net liability. Net liability. We learned that now only, today only. Whenever there is a delay in filing 3B, interest is computed on net liability. So this you just have to concentrate, read it once again, because there may be questions on this. Okay, this is a neglected area. They have not asked so far questions. This area they can test. So what is the one line summary you need to remember? Interest not payable on differential tax under fixed sum method if such differential tax is deposited by the due date. Correct? Here there is no interest. Then last one concept is there, that is first returns. First returns means when you will file the first return immediately after registration. Immediately after registration, when you are filing your first return, that first return should not only contain the details of the month for which you are filing the return, but also the details before the date you got the registration certificate. Carefully listen. Sir, you are liable to get registered from 15th November 2025. You are liable to get registered from 15 November 2025. You got this is liable to register, You got the registration certificate on 5th December 2025. You got the registration certificate on 5th December. Clear? Now tell me for which month you will file first return. November month or December month? No, December month. How can you file return before getting registration certificate? Simple logic here. Without getting registration certificate, how can you file the return? You cannot file the return. So therefore, you can file the return only for December month. This December month when you are filing the return, not only December month details, but you also include the details of November, that is from the date you are liable to get registered. Is it clear? Read that. Every registered person who has made outward supply in the period between the date on which he become liable for registration till the date on which registration has been granted. When? From which date to which date? From the date the person is liable to get registered till the date on which registration has been granted, shall declare the same in the first return furnished by him after the grant of registration. Understood? So with this we completed returns and payment process today. Okay, so far. And this two topics I think last time I did not take. For May I did not take, so that's why primarily I wanted to focus on this and I have completed it. And so next topic we will see after the break. That will be, you tell me which topic you want. Definitely not registration, you will sleep. Exemptions, then you will not sleep at that time. Fine. So what we will do, we will discuss TDS TCS, because that will be little computation based, and then we will see value of supply. TDS TCS we will complete, and value of supply. Then after that break and all, if time permits, we will see accounts and records. Okay. And now we are not going for lunch break. Please wait for some time. So I wanted to introduce one person to you. Sir, please. So his name is Surya Kumar. Please, sir. Please stand here. Come. And he is a CA, CMA, CS, LLB. So all four qualifications, and amazing person. That too cleared everything in first attempt. And he is here today not to give any lecture about CA course or etc. Because even though he did all these things, he is so much relevant today because of his focus on skills. Tomorrow future qualification will not be respected. The skills only respected, because attempt after attempt, last attempt 14,000 chartered accountants were released by ICI. Before that, around some 15,000 and odd chartered accountants were released. This many CAs are coming, means the competition is going to increase. Just like it will become like BCom. And articleship also, like they are finding it very, very difficult to take the students. So skills is something which is required. So therefore his domain is completely into skills. So he recently completed our articleship readiness program, where he taught Excel, Power BI, etc. for the students. So he just wanted to take 15 minutes of your time. So please listen to him, definitely it will be useful, okay. And after 15 minutes you can go for the break, and we will meet at 2 o'clock, 2 o'clock or 2:10 like that, okay. Fine, thank you. Over to you, sir.
Um, Good afternoon, students. So I like teaching. So it's really a wonderful moment to see a lot of students here. And first of all, pat yourself, because you're not wasting your time. I mean, the people in your age group right now are engrossed in social media, watching reels after reels, shorts after shorts, getting instant dopamine hits. And they're waiting for the next coolie update, and trying to say where I need to book. So all those things. But you are here on spending your time somewhere worthwhile. So I think that itself is a very big thing. And I wish and I pray to God that all the students here score exemption in indirect taxes, as well as clear your CA inter examinations in flying colors. Probably if some people are getting rank, we'll be even more happier. And second, I wanted to know, in fact, I'm really inspired by Sir's dedication, because I have been in touch with him for almost the past 6 months. And I knew that when he got accident of his legs, and how we went through the surgery, and how painful it is. It's not easy. Someone who have undergone a similar surgery, you would have known it takes 6 months to 1 year to even recover from the actual impact. And he is coming here and again spending his time here, teaching you, giving almost everything to the people. And every time I interact with Sir, his discussion will never be around money. His discussion will be around how best we can do for the students and what best quality we can offer. And I'm really proud to say that I was one of his students 11 years back, and I scored 60 in my final indirect taxes. So that helped me clear my CA in first attempt, and that helped me clear my second group, and then that subsequently helped me clear the CA in first attempt. So really, one of the beneficiaries of his teaching. And second most important thing, that from the time I have been listening to his lectures and classes, it has been the same. The quality has never come down. Even now I was sitting in the room, I was listening to his teachings about QRMP scheme. So I'm actually filing one of the returns for one of my clients, and we are doing it on a QRMP scheme basis. So I was just revising of what he was speaking, what he was teaching here, and I was making sure that I was doing it right. So it's really an amazing thing to be his student. So the point I'm trying to, I wanted to come and talk with you. I know it is very difficult before a lunch where you guys are wanting to have your lunch so fast. In fact, I have been into legal internship for some time because I've completed my law. I did some legal internship on one of the top lawyers in Chennai. And the lawyer would say, never give your bail application before the lunchtime to the judge. So it will be obviously be rejected. So, so we used to make sure that the bail application goes after he takes his lunch. Probably in the mood of, usually old people only they become judge, right? So a bit little after lunch, they will have that sleepy kind of thing. They will issue bail. So we used to do that. Okay. So I know that how difficult it is to hold you on before the lunch time. But I just wanted to know how many of you here use ChatGPT regularly? Okay, decent enough. But still, why not others? It's like it is free tool, right? Okay, so if you're going to use something worthwhile in your computer and your mobile, I think ChatGPT is one of the things which you can use, because you can use that to further your studies. See, for example, if a concept is being taught in the class and you want to remember it better, there are few techniques we do, correct? When I used to study, there is a method used to be a paper called ISCA. It's called, now I think the name has changed. There is a computer science paper. So remembering it is a very difficult thing because there is a lot of theory to remember and you cannot mince words. You cannot use your own language. You have to write the language of the book. So I used to have this technique called mnemonics. You know what is a mnemonics technique? Like, for example, use the word apple. The A indicates one particular part of the keyword. P indicates another part of the keyword. So mnemonics is a very good technique if you want to remember something. So the point here I'm trying to say, if you're very bad at, some people are very good at memory. Once they read, they are able to, but given that we are all normal average people, so if you are not very good at memory, even I was very bad at memory. I was good at maths and other things, but my memory with respect to theory subjects was not that great. So I used to use this concept called mnemonics. So I used to remember these words based on certain words in the start of the sentence. So you can use ChatGPT to generate mnemonics for the words you want to remember. And second, sometimes it becomes difficult to identify keywords in a particular paragraph. So even then, ChatGPT will be useful for you. I don't want to demonstrate it. I want to demonstrate another tool. The second method in revision, like when you read, the moment class gets over, okay, and then you go back home, within the time your mind is fresh, and whatever you read, see, for example, the class is for a duration of say 3 hours to 4 hours. So if you are able to read that within the next 30 minutes, you will have a better remembrance. So what we need to do, the first revision should happen immediately after going back home, and the next revision should happen the night before you sleep, which means like you spend another half an hour to 45 minutes in reading, and next revision should happen the morning of the next day, and the fifth, I'm talking about the first, second and third revision, and the fourth revision should happen within the week of when you studied, and the next revision should happen within the month you have studied. So if you are going to have so many revisions revisions in the sense you're not going to write everything again and again. I'm talking about trying to remember things, like where you read, close the book and try to remember the thing. This is a very proven scientific technique if you want to remember theoretical subjects. So practical subjects, of course, if you're going for FR and all those subjects, you have to practice in the notebook. Please don't audit questions. Like you see the question, put tick mark there. That will not work out, and that answer will, I'm very much sure, when you go to examinations, when you do this tick marking work, the answers will not come in the paper. Okay, that is because your system itself never gets trained to it. Okay, so writing an examination is art. If I ask me something, whether qualifying CA means you are very knowledgeable, actually I will say no. There are far more better people who are knowledgeable even without being a CA in the same finance domain. Okay, but they may not be able to complete CA. Why? Because writing an examination is different from acquiring knowledge. Writing an examination is an art. Correct? You have to practice it. See, it comes out of practice. If you're getting trained day in and day out, I think that is more important than having a practical knowledge right now. So that is what I wanted to tell, and I just wanted to demo one particular particular AI tool. How many of you heard about this thing called Notebook LM? Okay, I'll just do this demo because it gives me a thing like most of the class doesn't use. It's a very much a free tool. You guys can use it. It's a very much a free tool. So if you just type Notebook LM in your Google browser, you will get it. See, I'll just do a demo of what this particular AI tool is capable of. I think then you can actually appreciate it better. See, I go to create notebook and I just have this option called upload sources. In this, you can put it in Google Drive and upload. You can put a link, or a link of the website or web page. You can put paste text. You can give YouTube channel a link, website link, and Google Slides. If you have presentations, you can put slides in it. You can put Google Docs, which means if you have a lot of text, you can put it in it. And this will ensure that this gets uploaded. So I don't want to upload it right now because it will take some time. So I will show whatever I have done already. Okay. So yesterday, Sir has taken one particular session on GST. Like he has taken an 8-hour session. Okay. Can we get the summary of it? Yes. Here, there is a tool where you can go and upload this. This is the summary of the lecture of 8 hours which he has taken. One of the beautiful things about this is you can get the the summary of everything what he has spoken in a paragraph way. And there's one important, I like the most thing, like in THARUN'S book, what I used to like the most is the mind maps. So I used to emphasize a lot on mind maps. So here you have an option called mind maps that I have generated it already. If you look at it, so the topic starts with exam oriented batch, and he has set overviews and expectations, correct? In the initial stages of his teaching, he would have set and he would have told about the basic structure of GST and all those things, and he would have taught you about the important topic called ITC. It will give you, if you just click it, so what all he has covered in that topic, that will be given as mind map. So if you can actually dig deeper, see for example in exam performance, he was talking about May 2025 success in GST, correct? And then he would have talked about income tax scores, low scores reason, all those things he would have discussed, right? So this particular AI tool, what it does, it takes all your YouTube data and it converts into a summary and it gives you the mind map. So I think this is one of the most important tools. If you are able to use it rightly, it will be very, 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 very useful for your exam preparation. So it is also free. That's the most important part. You don't have to pay a lot. If you have to pay, if people have said that they have to pay, people will pay because it's very useful. So, but it's given free for you. So use this for your exam preparation. Try to use this for your exam preparation. Any lecture you are going to see, you think that you don't need the entire lecture to be seen. You can just pull that YouTube link and you can put it across and try to listen to that particular lecture. And there is another tool, but I don't want to demo that here because of the lack of, okay, we'll try to see what does that particular thing do is it converts them into a podcast kind of model. Like for example, you have this is something related to company formation and incorporation. This particular PDF has been taken from your CA website, the study material. I have put it in this, and this has been converted into a audio. I mean, it has been converted into a file. You can actually look at mind maps also. Okay. Before that, I'll just show you some audio here.
Beyond the big idea, the branding, the cool product, what are the actual legal steps that bring a business to life?
It's the stuff happening behind the scenes, isn't it? The legal machinery giving it structure, power to act. Its very existence in the eyes of the law. Most people don't think.
Are you getting it?
It's absolutely fundamental.
Exactly. So today we're doing a deep dive. We're going into the intricate world of company and corporation, all the legal bits and pieces that come.
And we're drawing heavily from India's Companies Act of 2013, a really comprehensive piece of legislation.
Right. And while our source is specific to India, a lot of these core ideas, like separate legal identity, the need for founding documents, these are pretty universal concepts.
So sometimes you can in fact go and intervene in between and ask question yourself in English. So that option is also given, but I don't want to demonstrate it right now. So go and explore this particular tool. That's my request for you. So it can be useful, very much useful for your CA exam preparation. I think I will also go and try to introduce to what we are trying to do in FinSkills so that you will be having an understanding of what where we are helping at. So this is me, and I do these services. I'm a virtual CFO service, and I do also ERP strategy and process implementation. Apart from this, I'm also teaching at FinSkills of THARUN'S Brainery. We are teaching skill courses. So right now, the world is moving beyond your qualifications. So right now, I think you can, since last time, 14,000 people qualified CA final. So when I passed, the CA final pass rate was 3%, which means only 2,000 people actually passed. At that time, it is almost 7 times the people are passing. So the competition of getting a job is becoming heavier. The competition is becoming heavier day by day. So, and what can be done to differentiate yourself is that everybody has a qualification. Right now, the differentiation will be a skills which you get. So here we are actually, we both discussed, sir and myself, on what to do with respect to skills. And we are building a comprehensive list of skill programs, starting from Excel, Power BI, low-code automation, and Python for finance professionals, and agentic AI tools for finance professionals. And we are coming up with a lot of skill programs. And one of the programs we announced recently got completed. The Articleship Readiness Program we announced right now, and we covered almost 100 hours of training. So we were teaching them Excel, Power BI, all those skills. And the best part of this is, so this is what we are covering in Articleship Readiness Program. The Excel program, Power BI program, GenAI for CA practice, Tally ERP, Zoho books, GST compliance. And one thing you will not even get in an articleship is ROC compliance. So ROC compliance is also something we are trying to train the students for, and we are also teaching them soft skills like communication skills, how to be a professional, like professional etiquettes, time management, networking skills, and interview skills. And what will be your takeaway from this program? You will be earning a certificate from us and some prestigious certificate awarding body. And then you will be receiving an assessment of your skills and a feedback to improve them, and get mentored by CAs who have already qualified and achieved something in life. So they are the ones who are going to mentor you. And then we are also looking at securing your placement at reputed CA firms in Chennai. So we are making you articleship ready. That's what the program is about. And the updates about this you'll be getting here. So if you have your mobile phone, please scan the QR code and be part of the group. Okay. So I hope the QR code is big enough. கொஞ்சம் வந்து பண்ணி கொடுங்க, எனக்கு சரியா தெரியாது. நீங்கள் ஸ்லைட் ஷோ போட்டுருமா மேலையா? Are you guys able to scan? Yeah. Okay. So we at THARUN'S Brainery and Film Skills, we are not just looking you as some another CA who will pass out. We want to get you future ready, and that's our vision. And we will be happy if you are getting placed in the best of the company and doing your working for best of your potential. That is our aspiration, and we are going to reach more and more students, not just the CA, CMA students, even the BCom, MCom, and MBA and BBA students who want to get skilled and be a part of good companies and contribute to the development of the society. So that's our aspiration, and I thank you for patiently listening to my 15 minutes of speech, and I hope it was very useful. Thank you, guys.
Okay, welcome back. We will start with TDS and TCS, but related to TDS and TCS, there is one area, that is section 9 subsection 5, which we need to know. As per section 9 subsection 5, there are total 4 services which are supplied through e-commerce operator. The liability to pay GST is on e-commerce operator. Okay, so let's try to understand that first. So kindly go to page number 38. Kindly go to page number 38. Section 9 deals with liability to pay GST, that is, who is liable to pay GST, whether it is supplier or recipient, or who is liable to pay, that is given in section 9. So in section 9 only we have FCM, RCM, etc. But in that section 9 we are not going to discuss fully now. We are going to take 9 subsection 5. Liability to pay GST is on e-commerce operator. There are a lot of transactions nowadays which are happening through e-commerce operator. That too with the advent of quick commerce also. So like Blinkit, Zepto, or even Amazon or Flipkart. There are a lot of goods which are sold through e-commerce operator. Same way, lot of services also provided through e-commerce operator. Examples like Oyo, Goibibo, Make My Trip. Then even for ticket booking also we have Ixigo, correct? Train ticket booking we have Ixigo, train and bus ticket bookings. And next we have even Book My Show, Ticket New, like this. Lot of platforms are available today for the purpose of provision of goods as well as services through e-commerce operator. But in all cases, liability to pay GST is not on e-commerce operator in case of only 4 services. Only 4 services provided through e-commerce operator, liability is on e-commerce operator. Rest of the cases, it is the supplier who is liable to pay GST. Is that clear, pa? What are those 4 notified services where liability to pay GST on e-commerce operator? You remember this with a mnemonic HATE. H-A-T-E. H for housekeeping services. Example, Urban Clap, Quicker, etc. In that, who is the service provider? The AC technician or the carpenter, plumber, they are the supplier. And Urban Clap is the e-commerce operator. And the household will be the recipient. Then A for accommodation services. In accommodation services, Goibibo, Make My Trip or Oyo, etc. So who is the supplier? The hotel owner. Hotel owner is the supplier, and these people are e-commerce operator, and the recipient will be the guest who stay. Most of the cases your friends who stay there will be coming under recipients. But liability to pay GST is on e-commerce operator. Okay. Then T for transportation of passengers by any motor vehicle. So what are the examples for this? Uber, Ola, Rapido, that will be coming. Transportation of passengers by any type of motor vehicle. Even Red Bus also will be coming into this. Any motor vehicle they said. Okay. So Ola, Uber, Red Bus, Rapido. But there is one important point with respect to that. We will see later. But just we are understanding what are the notified services. H for housekeeping services. A for accommodation services. T for transportation of passengers through any through any motor vehicle, and E for eating food from restaurant, that is Swiggy, Zomato, etc. So in this case, liability to pay GST is on whom? On the e-commerce operator, not on supplier. Is that clear? However, we have certain exceptions. In that case, even though these 4 services e-commerce operator will pay, but for each service there is an exception where 9(5) will not be applicable. When 9(5) is not applicable, who will pay GST? Supplier will pay GST. Where 9(5) is applicable, who will pay GST? E-commerce operator will pay GST. When 9(5) is not applicable, who will pay GST? Supplier will pay GST. Is that clear? Now, look into this. For housekeeping services, the supplier should be unregistered. What if the supplier is registered? For housekeeping service, say there is a plumber who is providing services through urbanclap.com. Now that plumber is unregistered. So e-commerce operator UrbanClap will pay. What if the plumber is registered? The plumber only should pay GST, means 9(5) not applicable. Is that clear? Same way, second condition, accommodation services. For accommodation services, the supplier should be unregistered. What if the supplier is registered? The liability to pay GST is on supplier. Okay. Example, there is a hotel which is listed through Goibibo, and if the hotel is unregistered, who will pay GST? Goibibo will pay GST. What if the hotel is registered? Hotel only will pay. So for the first two cases, common condition, supplier should be unregistered. If the supplier is registered, it will not come under 95. So supplier will pay GST. Are you understanding this? Then third one, T. T for transportation of passengers through any motor vehicle. In this case, how the supplier should be? Supplier may or may not be registered. May or may not be registered. So they may be registered supplier or they may not be registered supplier in case of transportation. But always who will pay GST? E-commerce operator will pay GST. However, we have one exception. What is that? If there is a company which is transporting passengers through omnibus. What is omnibus? Capacity greater than 6 passengers. Capacity greater than 6 passengers. While determining this capacity, including driver seat, excluding driver seat, excluding driver seat. Only in that ITC blocked credit, I told you capacity includes driver seat. But here capacity greater than 6 passengers means excluding driver seat. Excluding driver seat, how many seat pa? 7 seat. Then only it will be omnibus. You tell me which is 7-seater vehicle, means including driver it should be 8-seater vehicle. Including driver it should be 8-seater vehicle. Innova, first will be 2, in the middle will be 3, last will be 3. So that will be coming under omnibus, correct? 8. Same way Safari, correct? Tata Safari, and even Scorpio. These are all the cases, and any vehicle above that. Above that. So like this XUV 700, that will also be coming under 8-seater, correct? More than 6, excluding driver seat, means more than 6 means 7. Including driver seat it will be 8. Any 8-seater vehicle will be coming under omnibus. What about bus? Normal minibus, tempo traveler bus, that anyhow will come under omnibus. Okay. So there is a company which is transporting the passengers through omnibus, then 95 will not come. Then who will pay GST? Supplier. Supplier will pay. What is the condition pa? First it should be a company and it should be transporting passengers through omnibus. Then E for eating food from a restaurant. So suppose if there is a restaurant, let it be registered or unregistered. If it is supplying food through e-commerce operator Swiggy or Zomato, the liability to pay GST is on Swiggy or Zomato, e-commerce operator. However, again here we have an exception. What is that? If that restaurant is in the specified premises. What is the specified premises? Specified premises means a hotel. Specified premises means a hotel which is having declared tariff per day greater than 7,500 rupees. So means what type of hotel it is? 4-star, 5-star hotel. What is the stay cost per day? Easily more than 7,500 rupees na. In that hotel there is one restaurant. For example, Taj. In Taj hotel there will be one restaurant. In this ITC Grand Hotel there will be one restaurant. Are you understanding this? This restaurant will be supplying food through e-commerce operator. Is it there or not? Yes, it's there. You just check in Swiggy, ITC Master Chef Hotels is there. Yes, ITC group of hotels is supplying food through e-commerce operator, Swiggy. It is there, and wherein the cost of the food is so high, like 400 rupees, 600 rupees, biryani and all will be like 800 rupees, 900 rupees, like that they will be charging. But still people are buying that and eating. Are you getting this? Now in that case, who will pay GST? Whether it is e-commerce operator Swiggy or the restaurant, which will pay GST? Restaurant will pay GST. Is that clear pa? Okay. So tell me first, what are the 4 services which are covered under 9.5? Accommodation services, transportation of passengers. No, HATE, housekeeping, accommodation, transportation of passengers through any motor vehicle and eating food through restaurant. And what are the exceptions where 95 is not applicable? For H and A, if the supplier is registered, then it is not 95. Next case, if the transportation is by a company through omnibus, then also it will not be covered under 95. Correct? And next, what we have? Restaurant, where the restaurant is in the specified premises. What is that specified premises? That is a hotel having a declared tariff greater than 7,500 rupees per day. Okay, then in that case 95 will not come. Understood up to this? Wherever 95 is applicable, where liability to pay GST is on e-commerce operator, TCS under section 52 is not applicable. Sir, what is this TCS, sir? We are going to discuss anyhow. TCS means whenever I make supply through e-commerce operator, where e-commerce operator is not paying GST, I have to pay GST. E-commerce operator will give me money na. Carefully listen pa. Supplier through e-commerce operator. Example, I am a seller selling goods through Amazon. Now, who will pay GST? Seller will pay GST, Amazon will pay GST on the transaction. Huh? Yo, only 4 services e-commerce operator will pay. First of all, is it transaction in goods or transaction in service? Transaction in goods. Is it covered under 95? If it is not covered under 95, who will pay GST? Correct? Now I am a supplier selling goods through Amazon.com or .in. Now who will pay GST on these goods? Seller or Amazon? Seller, supplier, correct? Supplier or seller will pay the GST, not Amazon. Got it? Now who will collect money from the customer? Seller, Amazon? Amazon will collect the money from the customer and will be remitting the money to me. Am I right? I may suppress the value. I may suppress the value. Suppression of value means if I receive 10,000 from Amazon, I will tell I received only 4,000 rupees. And it will be difficult for the department to track and collect. For that reason, what they are telling, Amazon, while remitting the money to the supplier, they will be deducting 0.5% as TCS. Means 10,000 into 0.5%. What is 10,000 into 0.5%? 500 rupees, 50 rupees, 50 rupees pa. Where from you learn mathematics pa? 500 rupees. Calculate. If you don't know, you calculate and tell me. 10,000 into 0.5%, 50 rupees. 50 rupees who will deduct? Amazon will deduct and remit it to government. Now the government knows for 0.5% if it is 50 rupees, then for 100% how much? 10,000. So if the seller shows less than 10,000 rupees in the return, immediately the seller will get a notice from the GST department stating that, boss, your e-commerce operator is telling that 0.5% 50 rupees is being paid, then you should have got 10,000 rupees. Why are you reporting lesser amount? So show us the reason. This kind of audit check is required. For that reason, they created the concept of TCS. Is it clear, pa? So when TCS will be applicable? Only when the GST liability is on supplier. But when the GST liability is on e-commerce operator, why TCS will be applicable? TCS will not be applicable. So remember, section 9 subsection 5 and section 52 is mutually exclusive. Okay, so say this. Important points. When e-commerce operator is liable to pay GST on above services, they are not required to deduct TCS. Okay, tax collected at source under section 52. So section 9(5) and section 52 are mutually exclusive. Understood this point? Why for TCS not applicable? Because the liability to pay GST under 9(5) is on whom? What is the reason why they have brought in TCS? To identify the value of supply made by supplier. But when liability is on e-commerce operator, why should they check the supplier? They don't have to check the supplier. That's the reason why TCS is not applicable. Understood? Second point. Only in case of notified services. What are these notified services? This HATE. Only in case of notified service under 9.5, e-commerce operator is liable to pay GST. In other cases, who will pay GST? Supplier shall pay GST. Then e-commerce operator shall pay GST on what? Now when I sell goods through Amazon or Flipkart, etc., what is the benefit that Amazon or Flipkart will get? Commission. On that commission only they will pay GST. Plus they will also charge some delivery charges, correct? On that they will pay GST. Plus they will also charge some promotion charges. What is this promotion charges? My product, when you do the search, will come on the top. In Amazon, when you search for some product, sponsored like that, one product will come on the top. Have you seen that? Just check for a mobile case. So recently you purchased one mobile, you just search for the mobile case, so automatically this Python will be coming on the top. Why? Because it is a sponsored ad. You got it? So that will be coming on top. For that also I need to pay some extra money. Got it? All these are the considerations to e-commerce operator on which they will pay GST. But on the sale of mobile case, who will pay GST? The supplier only will pay GST. Understood, Appa? So, only in case of notified services, ECO is liable to pay GST. In other cases, supplier shall pay GST. E-commerce operator shall pay GST on the commission. Then, every e-commerce operator who is liable to pay GST or who is liable to deduct TCS is compulsorily required to get registered. Which e-commerce operator is compulsorily required to get registered? Two e-commerce operators. Number one, who is liable to pay GST. GST of what? 9.5. Means these e-commerce operators are compulsorily required to get registered. Number two, who is required to deduct? TCS is compulsorily required to get registered. Understood up to this? Now carefully listen. I am seller of goods through e-commerce operator. Whether I need to compulsorily get registered? Yes. I am seller of goods through e-commerce operator. Means I am selling goods through Flipkart, Amazon, etc. I need to compulsorily register. However, listen, please listen. If I am making supplies only within the state, means what type of supplies I should be making? Intra-state supplies. Then I don't have to register compulsorily. Still I can supply through e-commerce operator. Is it clear, pa? General rule is that every seller of goods through e-commerce operator is compulsorily required to get registered. Every seller of goods through e-commerce operator is compulsorily required to get registered. However, if they make only intrastate supplies, they are not compulsorily required to get registered. They need to register only when aggregate turnover exceeds threshold limit. That's the reason why in Meesho, when you are selecting a product and give your delivery code, PIN code, they will tell this product cannot be delivered to your location. Have you ever saw that? The product you will add to the cart, but the PIN code, the moment you give, it will say this product cannot be delivered to your location. Why? Why like that? Because those sellers are making only intrastate supplies and they are not registered. So they cannot make interstate supplies. Understood? So see that. Also, every supplier of goods through e-commerce operator is compulsorily required to get registered. However, if such supplier is making only intrastate supply of goods, then they should register when? As and when aggregate turnover exceed threshold limit for registration. Understood? Next point. What about supplier of notified service as well as other services? Supplier of services through e-commerce operator. Are they compulsorily required to get registered? No. Any supplier of service through e-commerce operator. Only 3 points are there. Irukkurade 3 point dhaan pa. First, e-commerce operator pa, compulsorily register. Second one is supplier of goods through e-commerce operator pa. Third one is what? Supplier of services through e-commerce operator. Whether that supplier is compulsorily required to get registered? No. When they should register? Only when aggregate turnover exceed threshold limit. Can you tell me these 3 points for registration requirement? Come on. Every e-commerce operator should register. Which e-commerce operator? Who is liable to pay GST under 9.5 and who is required to deduct TCS under section 52. TCS is 52. Okay. Next, second point. Every supplier of goods through e-commerce operator is compulsorily required to be registered. However, if they make only intra-state supplies, are they compulsorily required to get registered? When they should register? Aggregate turnover exceed threshold limit for registration. What is threshold limit for registration? Depends. 10 lakhs, 20 lakhs, 40 lakhs, like that we have. Got it? Third point, supplier of services through e-commerce operator. Compulsorily required to get registered? No, but when they need to register? Only when their aggregate turnover exceed threshold limit. Are you clear? Then, whenever e-commerce operator is liable to register and pay GST, if they have a physical presence in India, they will register and pay GST. Example, Ola is liable to pay GST on transportation of passengers. Is Ola an Indian company or a foreign company? Indian company. It's not a foreign company, it's an Indian company. And whether they have physical presence in India? Yes. Will they register and pay GST? Yes. What about Uber? Uber is Indian company or foreign company? Foreign company. Do they have any physical presence in India? No. Do they have a representative office in India? Yes. They have a representative office which will enter into contract with drivers for listing the drivers with the Uber platform for transportation. Got it? So they have a representative office in India. So that representative office will register and pay GST. What if they neither have a physical place nor they have a representative office? Then what they should do? They should appoint a agent, representative in India for the purpose of payment of GST, and that representative should register and pay GST. Is it clear? 3 points. Point number 1, if e-commerce operator is having physical presence in India, then they shall register and pay GST. If not, their representative in India shall register and pay GST. In the absence, what they will do? They shall appoint a representative, and that representative shall register and pay GST. Is that clear? Now we have this circular on restaurant services through e-commerce operator. Say this. What is the rate of GST applicable on restaurant services? 5% without ITC. Means, can restaurant take ITC on its inward supplies? No. Restaurant cannot take. Carefully listen. The rate of GST applicable on restaurant is how much, pa? 5%. With ITC or without ITC? Without ITC. Means restaurant, what and all they will buy? Ingredients. Correct? Ingredients they will buy. So different ingredients. Dal, rice, masalas, oil. Correct? On all these ingredients, whether they pay GST? Yes. Can they take ITC? No. Because 5% is without ITC. So restaurant cannot avail ITC on inward supplies. But if the restaurant is supplying food through e-commerce operators, Swiggy, Zomato, who will pay GST? That's what. Swiggy and Zomato will pay GST. At what rate they will pay GST? 5%. You can check later also. Order food from Swiggy. Correct? When you go to payment, it will show 5%. Napa. They will pay na 5%. Restaurant will not pay. Swiggy will pay 2.5%, 2.5%, CGST, SGST, 5%. Now, generally when restaurant pay GST, they cannot take ITC. If Swiggy and Zomato pay GST, can they take ITC? Yes. The restriction is only to the restaurant. Ayya, if Swiggy and Zomato is paying GST, is Swiggy and Zomato buying the ingredients or restaurant only buying ingredients? Simple, pa. Now you order, which restaurant you like for chicken biryani? Yes, Hyderabad. Anything else? Zaitun. Next, Talapakatti. You eat non-veg, then? Na, Swami. How it will be like that? Okay. So, therefore, no, nothing wrong. Nothing wrong. See, religion is different from having the food habit. I am Brahmin, but I eat non-veg. Yes. So that is my choice. That is my choice. That doesn't mean that I have to carry my religion everywhere. My religion stops at my home. Seriously. Before I was telling, did you ever felt? Did you ever felt? No, because I did not bring my religion. Religion we should stop at house and come out of that. You got it? And outside everyone is equal. Everyone is equal. There is no difference between religion, caste, creed, color, etc. Everyone is equal. So therefore nothing wrong in having a religious belief versus having the food habits, etc. and all. That is up to me. It's my choice. And therefore he wants to order from Talapakatti. Nothing wrong. You order. Now you told me 3 restaurants. SS Hyderabad, Zaitoon, Talapakatti. These 3 places you are ordering biryani. Is it clear? Now, who will buy basmati rice? Swiggy, Zomato will buy or a restaurant will buy? Correct? Who will buy chicken? Restaurant will buy or Swiggy, Zomato will buy? For them only restriction. You got it? Not for e-commerce operator. E-commerce operator will have some invert supplies. What are the invert supplies of Swiggy, Zomato? Enapa? Oh, the invert supply. Which one? I didn't hear. Sorry, I didn't hear. What you said? People who drive. Correct. They will be paid incentive. But usually they are all not crossing 20 lakhs. So they will not charge GST. Correct. No, they will not charge GST. Drivers will not charge GST. If drivers start charging GST, better quit CA and start Swiggy. Okay. Not that. Not driving. Different. Advertisement. Advertisement, crores and crores of money they are spending on advertisement. Zomato roped in Anirudh and all for the purpose of brand ambassador. And they will be roping in big celebrities and big hoardings you will see. I am yummy, won't you eat me? Like that and all it will mention. Okay. You understood? And many times, one notification also will come. I am waiting for you when you will keep me in your mouth. Like that and all. Seriously. Adi ennan open pani paatha. So like adult, suppose if you are having some apps and all, APK files if you have installed, some notification will come. Like that it will come. And if you see they will be talking about gulab jamun. Okay. They will be talking about burger. You got it? This much branding they are doing. All these are advertisement services. Can they take ITC on those advertisement services? Yes. App development. Correct? Because have you ever felt app getting hanged? No. You buy video lecture from us, app will hang. Understood? App will hang. You buy video lectures from any faculty, app will definitely not work for some time. I am admitting, because we don't have that much of sophisticated technology. But have you ever heard the Swiggy Zomato app being hanged and we are not able to order the food? No. Means that many people will be working for it. Are you getting this? Small bug comes also, immediately they will rectify. And server capacity, they need to buy the server space. All these are invert supplies of Swiggy Zomato. Can they take ITC on that? Yes. E-commerce operator can avail ITC on invert supplies even though they pay GST on restaurant service at what rate? 5%. But that GST payable by e-commerce operator is using only cash ledger but not electronic credit ledger. So Swiggy Zomato will pay 5% now. They have input tax credit or they don't have input tax credit? They have. But they cannot use that for payment of 5% GST. Then they can use it for what purpose? What other services Swiggy Zomato will do? Instamart. They collect delivery charges. Correct? Then even Swiggy, Genie, like that one is there. Courier. They will transport the courier parcels from one place to another place. For that they collect some charges. Correct? Dine out, like that one option is there, wherein you can book the table. So the restaurant or the hotel will pay commission to Swiggy for doing the reservation system. Is it clear? All these are other incomes of Swiggy, Zomato, on that they will pay GST, and that GST they can pay using input tax credit. But 95 whatever GST they pay, that they have to pay only using cash ledger. Previously, this point was given only to restaurant. Now they have made it applicable to all services under 95. You just write down, that is a September 25 amendment. That is a September 25 amendment. That is GST payable under section 95. GST payable under section 95. All services pa. What are the all services? Housekeeping, accommodation, transportation, eating food in restaurant. GST payable under 95 only by utilizing what? Only by utilizing electronic cash ledger. Only by utilizing electronic cash ledger. Balance in electronic credit ledger. Balance in electronic credit ledger cannot be used for payment of GST under section 95. For payment of GST under section 95, but can be used for payment of other liability of e-commerce operator. Other liability of e-commerce operator. You understood this phrase, pa? This is a September 25 amendment. GST payable under section 95. What is a GST payable under 95? What are the services? Housekeeping service, accommodation service, transportation of passengers and eating food in restaurant. GST payable under 95 only by utilizing what? Electronic cash ledger. Only by utilizing electronic cash ledger. Can they use credit ledger for payment of this GST? No, they cannot use. So balance in electronic credit ledger cannot be used for payment of GST under 95, but can be used for payment of other liability of e-commerce operator. What other liability of e-commerce operator? That is commission, correct? Commission, delivery charges, convenience fee, platform fee. Yes, pa, Zomato is charging. They are charging a platform fee. BookMyShow is charging convenience fee, internet handling fee, like that. Yes, if you book the ticket, you will know. Where we will see all those things? We are all rich kids, no? How much money I'll pay. So if you see the invoice, what and all breakup is there, you will know. So commission, delivery charges, convenience fee, platform fee, etc. and all, they will pay na GST on that. For that they can use. Understood? Previously this restriction was only for restaurant, but now they extended it to all cases. So e-commerce operator shall also pay GST on delivery charge, platform fee and advertisement charges at 18%, and they can utilize ITC for payment of this GST liability. E-commerce operator, if supplies goods along with restaurant service through their platform, they shall issue separate invoice. Why? For example, you are buying food as well as some commodities through Instamart at the same time. Okay. So many times it happens at my house, morning, my wife will be cooking for afternoon lunch. For that some commodities will be required. That she will remember only morning. So she will be previously and all she used to send me to the shop to buy and come. And now, thanks to Swiggy, Zomato, Blinkit, etc., wherein I don't have to go, I installed the app for her and I added my credit card also for that. So she will happily order. And morning she will remember that some masala will be missing or turmeric powder will be missing, this will be missing, etc. She will order from Instamart. And morning breakfast we need to eat. She will be cooking for afternoon lunch. But morning breakfast, we cannot live without breakfast, na, everyone. So breakfast, some restaurant, she will order idli or dosa, something. Now, same time ordered and restaurant will be here, that shop will be here for Instamart. But even then, Swiggy has to generate two separate invoices. Why? Why? Even they will not do in single delivery. They will take it like two different orders. Correct? Have you observed? You cannot order at a time product from Instamart and product from restaurant same time. That's why the moment you open Swiggy app, there will be 4 boxes. Food, Instamart, like that you need to select. When you select food, that is a separate order. When you select Instamart, that is a separate order. Why they are maintaining a demarcation like this? Because on food, they should pay GST. On Instamart, the supplier will pay GST. They will pay GST only on commission. Is it clear? Understood or not? That's the reason why e-commerce operator, if supplies goods along with restaurant service through their platform, they shall issue separate invoices. Clear? So this is the latest circular. Definitely this can be tested in exam. Related to this, I have given one question in Mighty 50. We will solve that question. Kindly look into question number 24. Kindly look into question number 24. Page 16. Question number 24. Urban Stay Private Limited is an e-commerce operator facilitating short-term accommodation services through its platform, a notified service under 9.5. Correct? Accommodation service through e-commerce operator is a notified service 9.5. In the month of April 2025, it had the following transactions: booking charges for homestays provided by unregistered persons through the platform. So, unregistered persons who are providing booking of hotel or house, etc. Even Airbnb, like that one platform is there. Have you heard of Airbnb? For example, you have a house and that house is in an area which is like lot of commutation will happen. I mean, like lot of people will be coming and going. For example, like Pondicherry or Goa or Tirupati or Madurai, like these places, you are having house, but no one is staying in that house. What a smart person will do, they will not give this house on rent. Rather, they will put it in Airbnb. If they put in Airbnb, monthly how much if you give rent, if it is rent of house 20,000, 25,000 like that. If you put in Airbnb, you will generate 1.5 lakh to 2 lakhs because per day you can give the house for 3,000, 4,000 rupees. You understood? So 30 days into 4,000 also 1,20,000 rupees. Is it clear? So therefore a lot of people uses this as an investment option. Even you also think of this, if your parents are having money, make them to buy a house or a flat somewhere in these areas where lot of people will be coming and going, and they can list it with Airbnb. Airbnb will take 30%, means per day 5,000 rupees like that if you give, they will take 30%. Remaining 70% they will be giving it to you. Is it clear? And you are unregistered person or registered person? Unregistered person. Then on that 4,000 or 5,000, who will pay GST? Airbnb will pay. That is this example. Is it clear? So booking charges for homestays provided by unregistered persons through the platform, 10 lakhs excluding GST 12%. As the supplier is unregistered, who will pay GST on accommodation service? E-commerce operator, that is urban stay, will pay GST on 10 lakhs, correct? How it should be paid? Partly credit ledger, partly cash ledger, fully through cash ledger? Fully through cash ledger, because it comes under 9.5. Keep that in mind. Next, platform usage fee charged to the property owners. So sometimes they are charging commission. How much commission they are charging? 2 lakhs. On that 2 lakhs, again, urban stay will pay GST, correct? 18%. Am I right here? This is under 9.5 other than 9.5. Other than 9.5 means for payment of this 2 lakhs into 18%. For this payment of 2 lakhs into 18%, can they use credit ledger? Yes. Only for 9.5 they have to pay using cash ledger. But other time they can use credit ledger. But why they will get only commission? Why not full amount? Because if the supplier is registered, and providing accommodation service through e-commerce operator, the liability to pay GST is on supplier. Then e-commerce operator get only commission. Then advertising space sold on website to brands. So what they will do, their website, lot of people will be visiting. So therefore some ads and all will come. Have you seen some app when you open, ads will come in the below? Yes or no? And that too game apps and all, if you download, for every 1 minute one ad will come. Correct? Any game app if you download, definitely ads will be coming, like 1 minute, one ad will come. And that ad we need to skip and we need to watch. And this is the revenue for the app developers. So therefore, this advertisement income also they have got. Advertising space sold on website to brands. How much? 1 lakh into 18%. Mainly this. Online rummy, rummy circle, 1x bet, parry match. Okay. So like that, this kind of ads only we will be getting. And these people will pay money to the urban stay. How much? 1 lakh. Again, is it 9.5? No, it's not 9.5. So therefore, this 2 lakhs and 1 lakh they pay GST. Can they pay using credit ledger? Yes. Now, what are the inward supplies of this e-commerce operator? First, Google Ads and marketing services. They need to promote, Napa. They need to promote. They need to do marketing. They also need to advertise. Then only they will get the customers. So, actually, Meesho is a very, very good platform. But miserably it failed. It's an Indian based. Meesho is Indian based. Flipkart is not Indian. Amazon is not Indian. But Meesho is Indian. You know why it failed? Marketing. Poor marketing. So if the marketing is good, less number of people only will know about it. And people will be comfortable with one app. And they will not be unnecessarily downloading other app, etc. and all. But if they have done the marketing so well, like first order up to 500 rupees, whatever you buy free, then almost, every person will download it. Correct? Yes or no? So therefore, they have not done anything of that sort, marketing and all. That's why. So every e-commerce operator need to do marketing. Without marketing, things will not happen. And for that reason, they need to spend on advertisement. That is their inward supply. Can they take ITC with respect to that? Yes. Anywhere in the block credits we saw advertisement is a block credit? No. So they can take ITC. Office rent commercial property 70,000. Can they take ITC? Renting of immobile property, they can take ITC now. We don't have any blocked credit. Yesterday only we discussed here. Then laptop purchased for marketing team. Yes. Food and catering for in-house training. No. Food and beverages is blocked credit. When they will take ITC? If inward supply, outward supply in the same category. Same category, No. Inward supply part of outward supply. No. Therefore, they will not be able to take ITC on food and catering for in-house training. If it is food and beverages purchase for giving it to the guest who is staying, then it will come under eligible for ITC, because inward supply is part of outward supply. Are you understanding this? If they buy food and beverages, because as soon as you go into the place, they will give a welcome drink. Correct? What is that welcome drink? Nothing. One juice bottle they will give. And this they need to buy now. If they buy for giving it as a welcome drink to the people, definitely can they take ITC on this? Yes, because inward supply part of outward supply. But here what they did, they purchased the food and beverages for in-house staff training, that is block credit. Okay, is it under a statutory obligation? 3 exceptions pa, inward outward same category, inward part of outward supply, or employer to employee under statutory obligation. Is it under statutory obligation? So ITC available or not available on this? No, ITC not available. Cloud server subscription. Cloud server subscription means they will take subscription of a cloud in order to store their app. I have app, but what is the use of it? You need to access it na. I have developed an app, but you need to access it. How you can access it? Only if I put it in one place, correct? What is that place? Some server, web server. It can be Amazon web server or Microsoft Exchange server, or it can be Google server. You understood? But somewhere I need to host it. Only when I host it, you will be able to access, which means I need to pay the hosting charges, correct? That is this cloud server subscription. But anywhere in the blocked credit? No. Used in the course or furtherance of business? Yes. So they can take ITC. On all these things they can take ITC except food and beverages, correct? Determine the net GST payable in cash after adjusting eligible ITC against liability. Clearly bifurcate the amount payable under 9.5 and own supplies. Come on, start. What is their liability? 9.5 liability, other liability. Calculator you tell, calculate and tell. What is their 9.5 liability? 10 lakhs into 12%, 1 lakh 20 is their 9.5 liability, correct? What is their other liability? Other liability, 3 lakhs into 18%. What is 3 lakhs into 18%? 54,000. What is their ITC? 1 lakh into 18%, 18,000. 70,000 into 18%. 12,600. 1 lakh 20 into 18%. 19,000. 21,600. Food and beverages they cannot take. What about 60,000 into 18%? 10,800. So what is the total ITC? 60. What is their liability? 1 lakh 20 and 54. Can we use 63 for 1 lakh 20? No, that 63 we can use only for payment of 54,000. Correct. What about the excess ITC? Carry forward. Can we use it for payment of 1 lakh 20? No. That 1 lakh 20 we have to pay using the cash ledger. Is it clear? We cannot, use it. We can carry forward it. Whether 86B is applicable in this case, because we have lot of ITC than the liability. We have lot of ITC than the liability. Whether 86B is applicable in this case? No. Because 86B is applicable when? Only if the taxable turnover exceeds. Morning only we discussed, if the taxable turnover exceeds 50 lakhs. What is their taxable turnover? It exceeded 50 lakhs, No. That's the reason why rule 86B is not applicable in this case. Is it clear? And see the answer, that 1 lakh 20 they have to pay using cash only, but the platform fee and ad revenue 36,000 and 18,000 they can pay using this 63,000. So therefore the excess ITC to be carried forward is 9,000 and GST payable will be 1 lakh 20,000. Is that clear? That's how you may get a question related to this 9.5. Okay. Now, so after completion of this 9.5, we are moving on to TDS and TCS. Kindly look into page number 151. Page number 151. Already I gave you the background of TCS. So when TCS will be applicable, you tell me? When TCS is applicable? Whenever we supply through e-commerce operator. What is the objective of TCS? To identify the value of supply made by the supplier. Okay. Then what is TDS? Same logic, same logic. whenever we are making sale to a government department or a PSU, they will be remitting us money na, they will deduct 2% as TDS, just like income tax TDS. Whenever we are providing services to a company and the company while remitting the money to us under 194J, they will deduct 10% as TDS, correct? For an employee, they will deduct TDS under 192. Like that, rent, they will deduct TDS. Innapa, rent more than 50,000, they will deduct TDS, correct or not? All these TDS, logic is what? We have to pay tax that they deduct. We have to pay tax that they deduct. Same way, I am making sales to government department. Government department will deduct how much TDS? 2% TDS towards GST and remit the money to me. If I suppress the turnover, for example, 1 lakh is the turnover, I may suppress it and show 50,000 only. So, but how the government will catch? Same way. If 2% is 2,000, you understood? If 2% is 2,000, then 100% will be how much? That is 1 lakh. So, they will identify that, and if I report less than 1 lakh as turnover in my return, they will be giving me a notice. Understood? For that purpose only we have TDS. So, when TDS is applicable, supply to notified recipients. When TCS is applicable, whenever we are making supply through e-commerce operator. So, first we will complete TDS pa, and then we will see TCS. Now, we will compare at that time. Got it? First TDS. Look into this TDS. TDS section is section 51, and when TDS is applicable, supply to notified recipient. Who is that notified recipients? Government, that is central government, state government or local authority, or government society. Government society, so like a cooperative society created by government. Then PSU, public sector undertakings like ONGC, IOC, Steel Authority of India, etc. Okay. Then government body or authority where equity participation of the government is greater than or equals to 51%. Means it's not completely owned by government, but in this government has invested more than or equals to 51%. Example, TNPL, Tamil Nadu Paper Limited. So in that company government has invested. Tamil Nadu government has invested. Is it clear pa? That also will come. Government body or authority where equity participation of government is greater than or equals to 51%. Registered person receiving metal scrap from another registered person. That is newly added now for May 25 amendment. That is, I am a registered person. I am selling metal scrap to you. Now in this case, you are remitting money to me now. So you need to deduct TDS 2%. So non-government. It is not for government. It is for non-government. Government anyhow it is covered. If I am selling metal scrap to government, anyhow it will be covered under first point pa. If I am selling metal scrap to any registered person, that will be covered under the last point. Understood? So you need to remember 5 notified recipients to whom if you are making supply, TDS will be applicable. Who are those 5 notified recipients? Number 1, government. When you say government, central government, state government, local authority, then government society, government body or authority in which government has invested more than 50%, 51%, then PSUs, and finally metal scrap to a registered person. Understood? And these notified recipient is liable to deduct TDS at what rates? What is the TDS rate pa? 2% TDS rate. What are the situations where TDS is not applicable? Point number 1, supplier is unregistered. Why supplier is unregistered, TDS not applicable? If supplier is registered, is there a liability on supplier? Supplier is unregistered. Is there a liability on supplier? No. Even though the service is taxable, but if the supplier is unregistered, they don't have to pay GST. Is that clear? So when supplier is unregistered, there is no GST liability. When there is no GST liability, what is the point in deducting TDS? Is it clear? So when TDS is applicable only if supplier is registered. If the supplier is unregistered, TDS is not applicable. Are you understanding this? Then second point, supplies are, when supplies are exempted or non-taxable, is there a GST liability on this? No, so TDS not applicable. Yeah, are you understanding the logic? See, this you don't have to by heart. You understand with a simple logic so that you will remember. Supplier unregistered, no GST liability, so no TDS. And supplies are exempted or non-taxable, no GST liability, so no TDS. Got it? Then GST payable by recipient under RCM. Who is having liability? Supplier or recipient? So then also no TDS. Why? What is the purpose of TDS? To catch the supplier, to catch the misreporting by the supplier. When supply is under RCM, who is having liability? Recipient only. Means supplier is not having liability now. So no need to deduct TDS. Clear? Tell me 3 points. Number 1, supplier is unregistered. Supplies are exempted or non-taxable. Supply is covered under RCM. For small transactions also, whether TDS is applicable? No. For bigger transactions only. So what should be the contract value of supply? More than 2,50,000. Invoice value or contract value? Not invoice value, contract value. Contract value versus invoice value, what is the difference? Sir, I enter into contract to sell the goods to you throughout the year and the contract value will be 10 lakhs. But the first delivery I will make, correct? Throughout the year I need to supply you the material, but first delivery I will make. For this I will give a invoice. That invoice will be only 1 lakh. Total throughout the year I need to supply 10 lakh worth of goods. But first delivery I am supplying 1 lakh worth of goods. Now in this case I will raise invoice for 1 lakh. TDS is applicable or not applicable? Applicable. You should not see the invoice value. You should see the contract value. If the total value of supply under the contract exceeds 2,50,000, then TDS is applicable. If it does not exceed 2,50,000, TDS not applicable. Understood? Next supply between notified recipients means what? Central government department making sale to state government department, PSU making sale to government departments. Between the notified recipients, if there is any transaction, TDS is not applicable. Who are the notified recipients? These 5 people we saw na. Between these people, if there is any transaction, TDS not applicable, but other than metal scrap. If the supply is metal scrap, definitely TDS is applicable, even though it is between the notified parties. Is it clear? For example, when PSU is supplying metal scrap to government, whether TDS is applicable? Yes. If PSU is supplying some other goods to government department, whether it is applicable? No. So read this. Supplies between notified recipients other than supply of metal scrap. Then next one, location of recipient and place of supply not in the same state. Location of supplier or recipient? Recipient, and place of supply not in the same state. So then TDS not applicable. Let's try to understand this with the help of an illustration. Carefully listen. There is an architect. Where is this architect located? In Tamil Nadu. There is an architect who is located in Tamil Nadu. Okay. And state government of Andhra Pradesh. State government of Andhra Pradesh is having a building in Tamil Nadu. Possible? Sir, can state government of Andhra Pradesh, Andhra Bhavan owned by state government of Andhra Pradesh, owned by state government of Andhra Pradesh. Where is it located? Tamil Nadu. Clear appa? Sir, there is an architect in Tamil Nadu. That architect in Tamil Nadu is providing some services, some repair services. To whom? To the Andhra Bhavan. So architect is providing repair services to Andhra Bhavan, which is in Tamil Nadu, but which is owned by state government of Andhra Pradesh. Now the architect will raise invoice to state government of Andhra Pradesh. Agreed? Will raise invoice to state government of Andhra Pradesh. Now you tell me, what is the nature of supply? Intrastate, interstate? We need to know what place of supply. What is the location of supplier? Tamil Nadu. What is the place of supply? Tamil Nadu. Why Tamil Nadu? Any service in relation to immobile property. Remember this. Any property related services, what will be the place of supply? Location of property. Any property related service. Any property related service means what? Construction, renovation, repairs, or interior decoration, painting, flooring, any kind of services, even renting of immobile property. For any property related service, what will be taken as the place of supply? Respond. Location of property. So what will be taken as the place of supply in this case? The place of supply will be Tamil Nadu. The place of supply is Tamil Nadu. What is the location of supplier? That is also Tamil Nadu. Now tell me, what is the nature of supply for these repair services? Intrastate, interstate? Intrastate. Intrastate. Then what is the type of GST that will be there in invoice? CGST plus which SGST? Tamil Nadu SGST. Is it clear? CGST plus Tamil Nadu SGST. Now, state government of Andhra Pradesh should deduct TDS. Correct? Should deduct TDS. What is the TDS? 1% CGST as TDS and 1% Tamil Nadu SGST as TDS. Clear? What is the rate? I told you 2%. If it is an intrastate supply, they need to deduct 1% and 1%. Please concentrate. Everyone listen. 1% and 1% they need to deduct. Can they deduct 1% and remit it to central government? Yes. Can they deduct 1% and remit it to Tamil Nadu government? No. Why? Because they are not registered in Tamil Nadu. Is it clear? They are not registered in Tamil Nadu. Where they are registered? Only in Andhra Pradesh. They are not registered in Tamil Nadu. Due to that reason, TDS itself is not applicable. Got it? What is the location of recipient? Recipient kumutta, recipient. Ulunga kadala vaangu. Recipient. Where recipient is located? Andhra Pradesh. What is the place of supply? Same state or different state? That's why TDS not applicable. Is it clear? Now you read. Location of recipient. Andhra Pradesh. Place of supply, Tamil Nadu. Not in the same state. Correct. Due to that reason, TDS is not applicable. But it should be what type of supply? Intrastate supply, interstate supply? Intrastate supply. That's what I told you now. Got it? What is the reason also I told you? Because the recipient is not in that state. When the recipient is not in that state, how can he remit the TDS? He cannot remit the TDS. So TDS itself is not applicable. Understood? So somewhere you write down this. Or don't worry, all these notes, okay, even if you are not writing, don't worry. These notes and all, we are having the videos, YouTube. In that video itself, in description, I will upload. I already instructed my team. They will upload every day, daily handwritten notes they will upload from this, okay. If you are not written also, it's okay. But what you need to understand is that if it is an intrastate supply, and location of recipient and place of supply is not in the same state, okay, then TDS is not applicable. So tell me, what are the cases where TDS is not applicable? Supplier is next. Supplies are exempted or non-taxable. Number 3. Value of supply under the contract does not exceed 2,50,000. Then supplies between notified recipients other than metal scrap. then supply is covered under RCM, and location of, it's an intrastate supply, okay, it should be an intrastate supply, it should be an intrastate supply, but recipient and place of supply is not in the same state, recipient and place of supply not in the same state, understood? Next. Now look into below two special points. TDS is computed on amount remitted by the recipient. TDS is computed on the amount remitted to supplier by recipient. Again I am repeating. First example I told you. Throughout the year I need to supply to you goods worth rupees 10 lakhs. First I am delivering one consignment. In that how much you need to pay me? 1 lakh. So on that 1 lakh only TDS will be calculated. Sir, you said contract value. Yeah, contract value is to check whether TDS is applicable or not. But how much ever money that you are remitting, on that only TDS will be computed. Is that clear? So TDS is computed on the amount remitted by recipient. TDS not applicable if it is an intrastate supply and recipient is in the another state. That's sixth point. Okay. It's an intrastate supply, but where the recipient is located in another state. Now look into the next. What is the value on which TDS is computed, including GST or excluding GST? For example, I raised you invoice for 1,12,000, 1 lakh plus 12,000. Now you will compute TDS on 1 lakh or 1,12,000? 1 lakh. Value excluding GST. TDS is computed on value of supply excluding GST. And whatever TDS that you have deducted, your government department or PSU, you have to remit that. By when you should remit it? GSTR 7 due date is what? Today only we discussed. GSTR 7 due date is what? 10th of the month following every month. So therefore you have to pay by 10th of the month following every month, and you need to file one return. What is that return that you need to file? GSTR 7. TDS deducted shall be payable to government, and a statement in GSTR 7 shall be filed by 10th of the month following every month. And TDS deductor should give a certificate also, that is GSTR 7A. You will deduct and you will remit in GSTR 7, but you need to give a TDS certificate, like form 26A, like that is there na. Form 16A have you heard of? That is, you have to, employer has to give form 16 to the employee to show how much TDS is deducted, calculated, etc. and all like that. The TDS deductor has to give one certificate. What is that certificate? GSTR 7A shall be issued to the supplier. And is there any time limit, or there is no time limit for that? No time limit for that. Only for 7 there is a time limit. What is the time limit? 10th of the month following every month. Next. And whether TDS deductor is required to file a nil return even if there are no transactions? Yes, that's the latest amendment I told you. Then what is the late fee for delay in filing TDS return? Respond. We studied all these things, we studied now only. 25 rupees per day subject to maximum 1000. Government department, that's why lesser late fee I told you. 25 rupees each day subject to maximum 1000. This is under each act, CGST and SGST. Are they required to file annual return, or they are not required to file annual return? Not required to file. Tonic, CAG tonic, T for TDS deductor. Got it? They are not required to file annual return. And for any delay, are they required to pay interest? So delay in paying TDS, sir, by when they should pay TDS? Deducted TDS by when they should remit? 10th of the month following every month. What if they are not remitting? Are they required to pay interest? Yes. At what rate? 18% per annum is payable for the period of delay in payment of TDS TCS. And there is a general penalty. This point is not for exam, just for your information, that there is a general penalty of up to 25,000 CGST, up to 25,000 SGST, not for exam, because penalty related provisions you don't have in exam, okay, only interest. Final level you will be learning. Whatever TDS, TCS that is deducted by the recipient, where it will come to the supplier? You are deducting TDS pa. Where will I see it? 2A or 2B? 2A, very good. We discussed 2A versus 2B difference. Just turn the page. Input tax credit. 2A versus 2B, like that one difference we discussed. Huh? Which page? Page number 95. Can you see there? TDS, TCS details is reflected in where? 2A or 2B? 2A. That's what I have given the connecting provision here. TDS, TCS deducted shall be reflected in 2A of the supplier, which is reflected in cash ledger and is used for payment of GST liability. Can we use it for payment of all liabilities? TIPFO. It will come in cash ledger or credit ledger? We discussed that in payment process also. Correct? Open payment process chapter, first page. Page number 159. In page number 159, you see there TDS, TCS deducted will come in credit ledger or cash ledger? Cash ledger. Means can we use it for payment of any liability? Yes. It can be used for payment of interest, penalty, late fee also. Is it clear? Then, so that is about TDS pa. These are all the points you need to remember for TDS. Now we will move on to TCS. See there, come back to page 151. TCS, who will pay TCS? E-commerce operator. So when TCS will be applicable? Whenever we make supply through e-commerce operator. And what is the logic I told you? What is that? They need to catch the supplier if he is doing misreporting, correct? If he reduces the value. And supplier should be different from the e-commerce operator. Then only TCS is applicable. I am selling my own video lectures through my own website, whether I need to deduct any TCS. No. Am I an e-commerce operator? Yes. Am I a supplier? Yes. Same supplier, same e-commerce operator. TCS not applicable. Flipkart will sell its own goods called as Smart Buy through their own platform. TCS is applicable or not applicable? Not applicable. Amazon Basics. Amazon will sell Amazon Basics, their own products through their own platform. TCS is applicable or not applicable? Not applicable. Are you understanding this? Whenever I am selling my goods through my own platform, example, one more example, Max Garments, Ajio, they are selling their garments through their own app, Max app, Ajio app, whether TCS is applicable? No. Suppose if Reliance Trends or Max Garments sell the garments through Myntra, whether TCS is applicable? Yes. Are you getting this? If I sell my video lectures through some other person's website, whether TCS is applicable? Yes. If some other faculty sell their video lecture through my website, whether TCS is applicable? Yes. Are you understanding this? So supplies through e-commerce operator, supplier should be different from e-commerce operator. And such e-commerce operator should not be a mere agent. Who is mere agent? Mere agent. Courier agencies. When you buy a product, they will deliver it through delivery or e-cart logistics. Like that, some people are there, Ship Rocket, like that, a number of people through that, Express Bees. All these are what basically they do delivery only. Does they become e-commerce operator? No. Payment gateways, just for payment. Do they become e-commerce operator? No. For example, in our website, we have Razorpay, Razorpay and I think PayU, these two are there. Now you made the payment for purchase of video lecture through Razorpay. Now we have not delivered the video lecture to you. Now whom will you ask? Supplier or Razorpay? You did not pay money to me. You ask Razorpay, no? No, Razorpay is mere agent. They are not e-commerce operator. Is it clear or not? So, if e-commerce operator is only an agent like payment gateway or logistic operator, then TCS is not applicable. Understood? Next, what is the rate at which TCS should be deducted? 0.5%. And non-applicability of TCS. In case of TDS, we discussed now non-applicability. In that first point, same. What is that? Supplier is. Second point also same. What is that? Supplies are exempted or non-taxable. Third point, supplies are notified under 9.5. I told you already. Whenever supplies are notified under 9.5, liability to pay GST is on e-commerce operator. So TCS is not applicable. Then last point, payment not collected by e-commerce operator. Then how can they pay TCS? Payment already collected by supplier, then e-commerce operator cannot pay TCS na. So when TCS applicable? Only when payment is collected by e-commerce operator. Tell me what are the 4 cases where TCS is not applicable? Come on, respond. Supplier is unregistered. Supplies are exempted or non-taxable. Then supplies are covered under 9.5. And next, payment is not collected by e-commerce operator. Then next, see the next page. While computing TCS, we need to include GST, exclude GST. For example, I am selling a mobile worth rupees 10,000 plus 1,800 GST through Flipkart. Now Flipkart will compute TCS on 10,000 or 11,800. 10,000. While computing the TCS, the value will be excluding GST. Also, sales return should be deducted because every e-commerce platform, the sales returns will be common, correct? For example, you order some dress from Myntra, correct? You ordered or not ordered? You ordered. And can you return it? Yes, you can return it. And therefore, what some people will do, they will order, they will get it, they will wear it, they will not cut the tag, etc. and all, they will hide it and they will wear it, they will take photo, okay, selfie, different photo, put it in Instagram, thereafter they will open, close, put it in cover, return. You understood? Again they will buy with one investment 10-20 dresses also they will buy, they will wear. Now they went to next level. The next level is they are wearing it and attending the functions also. Because this gown and all is there na, the pasharwani something, kurta. So a lot of north people and all weddings or receptions, they will wear that gown and they will go. The chudidar they will wear and go pa. I am talking about male, okay. So these chudidars when they are wearing, you have seen or not seen? A lot of people are wearing pa. Even in nowadays Tamil Nadu also big people will be wearing the chudidars pa, because that has become a trend now. Wearing chudidar means you are a big person, okay. Seriously pa, lot of people will be wearing, okay, chudidar without chunni. If you are wearing means you are a big person. Seriously pa, naya theriyada, lot of people will be wearing that, okay. So this chudidars and all we will wear only one time, when that reception, correct? For the sake of that, why should we buy? Normal, you think of, I am wearing the chudidar and going on road, won't the dog bark at me or not? That too the chudidar full of jigna, etc. and all. Female wearing, okay, but when male is wearing and going, won't the dog bark at me? Yes or no? Yes. And if possible, some people will take stones and also they will throw at me. Possible. Therefore, I will not wear it on a daily basis. Sorry, leave it. This, normal, this shiny dress and all are there na. Daily I cannot wear. Only for the party I will wear. So for that reason, why should I buy? I will order. Wear it. The tag and all I will pin, staple it. I will wear it. I will go to the function. And once the function is over, I will close it and I will send it. Will the delivery boy Like that he will sniff and take, no, he will take. You understood or not? Therefore, whether sales returns are possible or not possible through e-commerce operator, possible, then why should they pay TCS on that? Because for the seller it is not a turnover. Your sales returns is not a turnover of the seller. So therefore, e-commerce operator should compute TCS on sales, sales minus sales returns. That sales returns may not be of the same month. The sales returns may be sales of some previous month. Last month, before month sales also, this month there will be sales returns. So on the net amount only they need to compute TCS. Is that clear? So TCS is computed payment towards contract value excluding GST less returns during the month. TDS deducted shall be payable to government and a statement in GSTR 8 shall be filed by 10th of the month following every month. What is the TCS return? GSTR 8. And I wanted to just clarify something, that whatever examples, all those things are given are purely out of fun only, and not about a particular person, etc. and all. You don't add. I have enough of my problems in my life, okay, and I don't want to think about others. Seriously, I crossed that stage. Previously and all, I was thinking about others, but now I crossed that level. Seriously, I crossed that level. I am not at all bothered about anyone. Anyone, let them die and they go in Bay of Bengal and fall also, I am not bothered, because I have to think of myself now. You understood or not? Therefore, nothing. Previously at least I was talking about some X, Y, etc. and all. Now nothing, seriously, I crossed that stage. So, just to make you awake in the class, 3:30, all of you like pigs you are sleeping, and what should I do then? I should dance, that too very good auditorium, here I should dance, or I should make you dance. Got it? And I don't want to waste that time. Like that, just because of that, some fun I am making and I am coming back into the class, okay? No, nothing coincidental, etc. Anything happens also, I am not responsible for that. Say this. GSTR 8 is the return. What is the time limit by which GSTR 8 should be filed? By 10th of the month following every month. Whether any certificate is required for TCS? No. And next, what is the late fee for TCS? 100 rupees per day, subject to maximum 5,000. There is a difference in the late fee. Whether TCS deductor is required to file annual return? Yes. What is that annual return? GSTR 9B. By when? 31st December of the succeeding financial year. Whether any interest is payable? This is common between TDS, TCS. Yes. If you are not making payment by 10th, you have to pay the interest. And what about the TDS, TCS? Both will be reflected in 2A. That is common point. Can the TCS return be rectified? Yes. Can the TDS return be rectified? No. Only TCS return can be rectified. What is the time limit for rectification of TCS return? Come on. 30th November of the succeeding financial year, or date of filing annual return, whichever is earlier. And the same time limit is applicable for availment of ITC, credit note, rectification of 1 and 3B. Correct? Now look into this. This is one working example on TCS. There is a supplier, MI Mobile, Xiaomi, e-commerce operator, Amazon, and there is a buyer. Step number 1. Supplier will enter into contract with e-commerce operator to sell the mobile with a commission of 1000 rupees plus GST. And what will happen? Amazon will receive an order from a buyer for mobile. Step number 3. Supplier will deliver the mobile to Amazon along with invoice 10,000 plus GST 28%, that is 12,800 rupees. Now Amazon will deliver the mobile to the buyer, correct? Up to step number 4 you understood? Step number 5, Amazon will collect the money from the buyer. So Amazon will collect a payment of 12,800 rupees from the buyer. Understood? Now Amazon has to pay GST on their commission plus TCS on the mobile, correct? What is the GST on commission? How much commission they will be getting for selling one mobile? 1000. So on that 1000, GST 18%. So what is their GST liability? 180. Plus they also should deduct TCS. What is TCS? 0.5%. 0.5% of what? Value including GST, excluding GST? Excluding GST. So on this 10,000, 0.5%, 50 rupees they will pay as TCS. Now take your calculator. Take your calculator. You are Amazon. How much money you got from the customer? How much you got money from the buyer? 12,800. So the 12,800 rupees minus. First you need to deduct your commission, correct? What is your commission? 1000. Deduct 1000. Next you need to deduct the GST on commission. What is the GST on commission? 180 minus 180. Then TCS 50. What is the balance left? That you will remit to supplier. You understood how we got the amount remitted to supplier? Now what supplier will do? He has to pay GST, or e-commerce operator should pay GST on mobile? On mobile, supplier should pay GST, or e-commerce operator should pay GST, supplier. This is not 95. So therefore supplier will pay GST. So how much GST supplier has to pay? 2,800. Now carefully listen, that 180 rupees GST paid by e-commerce operator Amazon can be taken as ITC by the supplier, and that 50 rupees deducted by e-commerce operator will be taken as TCS credit, and they can adjust it against their liability. Got it? What is the supplier liability? 2,800. So from this 2,800 they can deduct 180 rupees GST paid on commission and 50 rupees TCS. So what is the balance? 2,800 minus 180 and 50. What is the balance? That is the net liability. Understood or not? This ITC they will get in which ledger? Credit ledger. This 50 rupees they will get in which ledger? You got it? Next. Look into one clarification in the next page. When there are multiple e-commerce operators in a particular transaction, which e-commerce operator will deduct the TCS? Why will there be multiple e-commerce operators, sir? Listen. Just now I told you, Meesho is one e-commerce operator. They may not be able to get good sales directly, but there are some suppliers who listed their products in Meesho. What they will do? Meesho will list those products in Amazon. You got it? Meesho will list the products in Amazon. Certain customizable products. Customizable products means simple pa. Your house, you are living in a house or a flat, etc. Outside the house, your flat number and your name should come. Your father name should come. Name board. Correct? Where you will go for name board in Chennai? Where? Carpenter will write. Where you will go for name board? You need to search for one shop and go na. Sitting at home you want. Go to Amazon. Search for name board. Search for name board. Definitely you will get. You need to order. But the problem is, how can I give the details? What number, what name should come, etc. and all. Customization not possible in Amazon. Now what they are doing? Amazon will take up the order. Carefully listen. Amazon will take up the order. Will give it to Meesho. Will give it to Meesho. Meesho has the seller listed. Now you will get a call from that seller. Sir, what type of name board you need? I mean, what is the name to be written? What is the number to be written? Like that. Everything they will give you a sample, and if you say okay, they will be sending it to you. You understood? Clear apa? Which means small traders cannot list it with Amazon, because Amazon deals only with big traders. Amazon will not deal with small traders. So the small traders, what they wanted to do, they will find some small e-commerce operators like Meesho. Now Meesho will in turn list the product in Amazon, and now you will place the order from Amazon. Now how many e-commerce operators are there in this transaction? 2 e-commerce operator. Which e-commerce operator will deduct TCS? Which e-commerce operator? Read that and tell me. First point, such e-commerce operator who finally releases the payment to supplier is liable to deduct TCS. So in this example, which e-commerce operator will deduct TCS? Amazon or Meesho? Meesho. See this. There is a seller ABCD who is listing their product with Meesho, and Meesho will in turn list the product with Amazon, and a buyer is buying from Amazon. Now in this case, buyer will make payment to Amazon, Amazon will deduct their commission, and they will remit money to Meesho after deducting their commission and GST on commission. Now Meesho will deduct a commission and remit the money to seller. While remitting the money to the seller, they should not only deduct their commission but also deduct TCS. So such e-commerce operator who finally releases the payment to supplier is liable to deduct TCS. That is which side e-commerce operator pa? Supplier side e-commerce operator. What if supplier and supplier side e-commerce operator is same person? Means the seller as well as this e-commerce operator is same. Then in that case, how many e-commerce operators are there? Only one. That is Amazon. Then Amazon only will deduct the TCS. That is buyer side e-commerce operator. If supplier and supplier side e-commerce operator is same person, then the recipient side e-commerce operator is liable to deduct TCS. Each e-commerce operator is required to pay GST on the commission earned by them. Understood? Next. Filing of nil GSTR 8. Mandatory or not mandatory? Not mandatory. Only TDS return is mandatory if there is no transaction in a particular month. Then next. Listen to this. This is a very, very important point. Supply made in October month. So I made a sale through e-commerce operator in October month. So means I raised the invoice in October month. But the payment is collected in November month. That is October 29th, I gave the product to Amazon. Carefully listen. October 29th, I gave the product to Amazon. I raised the invoice on October 29th. But Amazon may take 5 days to deliver the product to you. So they delivered the product to you on October, that is November 3rd. I gave the product to Amazon on October 29th. And Amazon delivered the product to you on 3rd November. Is it clear? Now in this case, Amazon would have collected the money in October month or November month from you. Suppose if you select pay on delivery option. If you select pay on delivery option, they will be collecting money from you in October month or November month. But I raised the invoice in which month? October month. So now you tell me whether they need to deduct TCS for October month or November month. If they deduct for November month, then there is a mismatch. I reported in my return October month, but they deducted TCS in November month, means October month they did not deduct TCS, so there will be a mismatch between my return and their return. Agreed? So in order to match this return, you tell me when they should be paying TCS. October or November? When I am reporting sales. So they have to deduct TCS in, see this. Supply made in October month but payment collected in November month, TCS to be remitted for October month. Net value of taxable supplies made during a tax period, not payment received during a tax period. When the supply is made, October month itself supply is made through the platform, correct or not? Therefore, even though they have collected the money actually on November, but the TCS should be deducted for October only. What if the person returns? Exactly at the time of pay on delivery also we can reject the product, correct? Many times I did like this, because my kids will be ordering something, some toys if they see on Amazon, and they will order something, and my son will order something. When they order something, I will not know, and they will select pay on delivery option and all. Previously they used to order, I used to add credit card, they used to order and I used to get the debit and all. Now I removed the credit card and only pay on delivery. So they know, they are smart. They will select pay on delivery. the product will receive. Okay, the product will be received many times. I will receive it and open and check, and then I will come to know that they have ordered. And once it is opened, they will see it, they will not allow me to return. Nowadays what I am doing is that when the Amazon delivery guy comes and knocks the door, I will first take my mobile and check, Amazon, what is being delivered today, okay, and I will tell him, boss, sorry, by mistake I ordered. He will scold me and he will go, but it's okay, I can cancel na, you understood or not, I can still cancel. Then in that case, already considering their sales, they paid the TCS. Then what they will do, this will be like a sales return. So next month they will do the deduction. Is it clear? This will be like a sales return. So in November month, what they will do, they will show it like a reduction, because every month TCS will be based on value of supply made during a month minus sales returns during that month. Correct or not? Next, balance in credit ledger cannot be used for payment of TCS. TCS should always be paid using cash. TCS deductor shall have two GSTINs. Yes, every TCS deductor will have two GSTIN, one for deducting TCS, one for paying regular liability. Both will not happen in the same GSTIN. One for payment of regular liability, another for payment of TCS. Now, who is an e-commerce operator, sir? Basically, e-commerce operator means a person who is making supply of goods or services, or goods and services, and includes digital product over digital network or electronic network. So don't think only goods or service, even digital products if they are selling. What is the digital products if they are selling? Like this Spotify or Amazon Music, or even nowadays, OTT, you have to pay money to watch the movie, correct? All these cases, if they are selling, e-commerce operator, example recently, Amir Khan, so this one Sitare Zameen Par, like that one movie he has released, and that movie he did not give to OTT. OTT offered him 125 crores. That is, I think Netflix or Amazon offered him 125 crores. He said, no, I don't want money. I will release it in YouTube. Like, pay based on the view. Like, you pay 100 rupees and you can watch it in YouTube. Or you pay 100 rupees, you can watch it in Amazon. Like that, he released. Now, the YouTube will become e-commerce operator. How? The digital content is being sold through their platform. Correct? Okay, trust me, sooner or later, that is the future. Almost everything will come in YouTube. Even our video lectures, everything will come in YouTube, and all these things will be like a student can directly buy and he will be able to watch, and some people will pirate the content and they will be making use of it. All these things will happen, future, that is the future of it, okay. And 100 rupees will not be a big deal at that time. Today, it will be a big amount. 10,000 rupees one lecture means it will be a big amount. But in 500 rupees means no one will pirate. It's okay, 500 rupees only na. Who will sit and download that movie and watch? So in one click we will be able to watch like that. So people will be changing. So this is change in the consumer behavior. So that's what he wanted to achieve now. So if it is continuing like this, future majority of the movies will be coming in YouTube itself directly. Don't need to go to the theater, you sit at home and you can buy the home theater big screen and you can watch like that. So things will happen. That's what they wanted to achieve. But again, in this example, whether YouTube will become e-commerce operator? Yes, because including digital products over digital network or electronic network. E-commerce operator means any person who owns, operates or manages digital or electronic facility for e-commerce is known as e-commerce operator. Maybe for a short note question you may get it. What is e-commerce and who is an e-commerce operator? Now look into tax implications on e-commerce operator. There are popular e-commerce models. One is online marketplace model. What is online marketplace model means? The product will be listed in the website, and whenever the order is received by them, they will inform the seller and the seller has to deliver the product. That is online marketplace. Second is direct sales model. Direct sales model means my own app I will create and all the products which I am selling, I will sell it through that platform. That is direct sales model. Then inventory led model. In inventory led model, what will happen? I will be like maintaining the inventory. E-commerce operator will maintain the inventory. Zepto, Blinkit, actually in 5 minutes, 7 minutes, they are delivering the products. Means they only maintain the inventory of it. Next, supply of goods or services through e-commerce operator is divided into 3. Supply of goods through e-commerce operator, example Amazon. Supply of notified services through e-commerce operator, example Swiggy. Supply of other services through e-commerce operator, example Book My Show. In the first case, who will pay GST on the transaction? Supplier. In the last case also, who will pay GST on the transaction? Supplier. But in the second case, who will pay GST on the transaction? E-commerce operator. So GST on supplier by GST on supply by supplier. Here GST on supply by e-commerce operator. Here GST on supply by supplier. Then here if supplier is paying GST, then e-commerce operator will pay GST on what? Commission and other charges. E-commerce operator shall pay GST on commission and other charges. You remember here, this GST on supply by e-commerce operator is only through electronic cash ledger. But whenever supplier is paying that, that can be through cash ledger, credit ledger. But GST on supply by e-commerce operator only through electronic credit ledger. Cash ledger, sorry. But here, first case, last case, both. They can use cash ledger, credit ledger. That you don't have to write. Only through cash ledger, that only you write. Next, look into some special points. When a person is supplying their goods or service through their own platform, that is direct sales model, it is not called as supply through e-commerce operator, and it is normal supplies. Also, agents like Paytm, PhonePe, OLX, etc. are not called as e-commerce operator. Sir, why OLX is not e-commerce operator? Is OLX doing the delivery of goods? No, just a listing platform. So this OLX or Just Dial, all these are listing platforms. They are not called as e-commerce operators. Then look into the next page. Registration requirement in case of e-commerce transaction. Already these 3 points I told you. What is that? There we discussed Napa registration requirement. Every e-commerce operator who is paying GST under 95 and who is deducting TCS under 52 is compulsorily required to get registered. Correct? What is the second point I told you? Supplier of goods through e-commerce operator is also compulsorily required to get registered. But if the supplier of goods is making only intra-state supply, not through e-commerce operator in more than one state, and if they have obtained unique enrollment number, then they need to register only when aggregate turnover exceed threshold limit. What about supplier of services through e-commerce operator? Registration only when aggregate turnover exceed threshold limit. It is not through e-commerce operator in more than one state. It is not through e-commerce operator in more than one state. Tell me what are the 3 conditions to be satisfied so that supplier of goods through e-commerce operator is not compulsorily required to get registered. What are the 3 conditions? Condition number 1, they should be making only intra-state supply, and they should be dealing with only one e-commerce operator, and they should have obtained unique enrollment number. Then look into the next one, complaints to be followed by e-commerce operator. This also they can ask as a short note question. That is, every e-commerce operator should ensure that, please listen, concentrate. Every e-commerce operator should ensure that if the supplier is unregistered, that the supplier has obtained a unique enrollment number, then only they should allow them to supply through their platform. Correct? So what is the first complaints they need to follow? Allow supply of goods only after allotment of enrollment number. Can they make this supplier to make interstate supplies? If they make interstate supplies, they need to get compulsory registration. Here the supplier is a unregistered person. Unregistered person, if he makes interstate supply through e-commerce operator, he need to compulsorily get registered. Correct? So therefore, what e-commerce operator should do? Should not allow that supplier to make interstate supplies through their platform. Should not permit supplier to make interstate supplies. As the supplier is unregistered, TCS is applicable or not applicable? One of the condition we saw for non-applicability of TCS is that what? Supplier is unregistered. So when supplier is unregistered, TCS is applicable or TCS is not applicable? So not required to deduct TCS, but they have to report these details in GSTR 8 just to identify the turnover of supplier. So tell me, what are the 4 compliances to be followed by? You will get a question like this. There is one person who is making sale of goods through e-commerce operator, and that person is not registered. State the compliances to be followed by e-commerce operator in this case. Like that, one 5 marks question they will give. What is that you need to write? 4 points. Every e-commerce operator who is allowing an unregistered supplier to make supply of goods through their platform should comply with the following. Number 1, they should not allow the supplier to make supply without obtaining unique enrollment number. They should not allow the supplier to make interstate supplies. They are not required to deduct TCS as the supplier is unregistered. And next, last point, they should report these details in GSTR 8. Clear? Then next one, there is a supplier who is making supply of goods through e-commerce operator, and this supplier is under composition scheme. This supplier is under composition scheme. What are the compliances to be followed by e-commerce operator? Concentrate. Number 1, this person should not make interstate supplies. Why? Generally, a person under composition scheme should not make interstate supplies. So e-commerce operator should ensure that this supplier who is under composition scheme is not making interstate supplies. Whether TCS is applicable or TCS not applicable? Applicable. Even though the supplier is under composition scheme, but they are registered, which means should deduct TCS and should declare the details in GSTR 8. Be careful. Don't write this answer for the previous question. Be careful. If they ask the question like what are the compliances to be followed if the supplier, unregistered supplier, is making supply through e-commerce operator, the previous chart. If this question is like what are the compliances to be followed by e-commerce operator if a person opting for composition scheme is making supply through e-commerce operator, these points you need to write. Got it? With this we completed TDS, TCS fully, and we have one question. Let's do that question now, then we will take break. Sapna Education Private Limited is receiving supply through e-commerce limited. An e-commerce operator has provided the following supplies during the December 2020 through Ecom Limited. Ecom Limited is the e-commerce operator. Ecom Limited is supplying goods taxable at 12% by registered supplier. Now in this case, who will pay GST on the transaction? Ecom Limited or supplier? Because it is goods, 95 will not come. So who will pay? Then what is the liability on e-commerce operator? 2 liabilities. First, they need to pay GST on. Second, they need to pay TCS on value. Correct? Ayya, supplier is registered. Ayya, TCS will come. Are you getting? 2 liabilities are there for e-commerce operator. One, they need to pay GST on commission. Second, they need to compute TCS. But TCS will be computed on what? 5 lakhs, 4 lakh 50. Why 4 lakh 50? Sale minus sales returns. Okay. So therefore, supply of goods. The question is, determine the amount of tax to be collected at source by Ecom Limited. In the first transaction on 4 lakh 50, there will be TCS. Correct? Second point you read. Supply of goods taxable at nil rate by GST, by registered supplier. Tell me whether TCS is applicable or not applicable. Reason. Nil rate means what? Exempted. If the supplies are exempted or non-taxable, TCS is not applicable. So in this case, TCS itself is not applicable. Supply of housekeeping service by unregistered supplier. 95. HATE, housekeeping services by unregistered supplier. It's 95. Means who will pay GST? E-commerce operator. So TCS is applicable or not applicable? Not applicable. Whenever the transaction is covered under 9(5), TCS is not applicable. So on this also there is no TCS. Got it? Supply of other services by registered supplier. Other services applicable. So 1,50,000. So 4,50,000 plus 1,50,000. Total 6 lakhs. On 6 lakhs, what is the rate of TCS? 0.5%. So how much is the amount of TCS? 3,000. All this transaction happened for which month? December month. Means what is the due date of remittance of this TCS? 10th of. So see the second question. Determine the consequences if the said amount is paid and return is filed on 15 January. How many days delay? Tell me what are the consequences? Interest. Interest for 5 days. On what? TCS. TCS. Not on the value. TCS. What is the TCS? So do the calculation. 3,000 into 18% into 5 by 365. So we can round it off to 7. And what is the late fee? What is the late fee? 100 rupees per day subject, 100 rupees per day subject to maximum. How many days delay? 5 into 100. That is under CGST. So under SGST, so what is the total late fee? That is this. Late fee for belated filing of GST are 8,000. Like this you will get a question on application of TCS. Okay. The same question I have also given in Mighty 50. The same question I gave in Mighty 50 here. It is in question number 36. Same question I gave. Because it's an important question. Actually, they have tested this question at CA final level. Because previously TDS TCS was a chapter at CA final level. So now they have brought it at CA intermediate. When it was tested in CA final, they have given this question at that time. So I thought this question may be coming at intermediate level now because they shifted it from final to inter. So that's why I gave this question. Same question, no change, ditto, copy paste. We'll take a break for 15 minutes from now and then we will continue with the remaining portion. We will see some question and answers and then we will discuss value of supply. Okay. Okay, we'll start. Look into question number 37 in Mighty 50. Question number 37 in Mighty 50. Mr. Boluram, a supplier located in Meerut, UP, supplied the bed sheets, pillow covers and blankets to a governmental agency registered in UP under a contract. So they have made supply to a government agency and the total contract value is 4,61,000. So to government agency also covered under TDS? Yes. Government agency is also covered under TDS. The total contract value is 4,61,000 excluding GST. The value of supply is bifurcated as below. 400 blankets at 600 rupees each, 850 bed sheets for 180 each, 1,700 pillow covers for 40 each. Is government agency required to deduct tax at source while making payment to Mr. Boluram under section 51? If yes, determine the amount of tax to be deducted at source. So who are the notified recipients? First we need to write. Who are the notified recipients? Central government, state government, local authority, government agency or such other notified persons. And what is the value of supply under the contract? The value of supply under the contract exceeds 2,50,000, correct? So therefore TDS will be deducted, and anywhere it is given that these goods are exempted goods? No. So therefore all these goods are taxable. So therefore TDS will be deducted. At what rate? For that you need to check the transaction. What is the location of supplier? Supplier, Meerut, UP. And to whom they are making supply? To a government agency in UP, which means it's intrastate supply or interstate supply? Intrastate supply. Then what will be the TDS that is applicable? 1% towards CGST and 1% towards SGST. So in the given case, first you need to write that. Then about the 2,50,000 point you need to write. Then in the given case, Boluram has made supply to government agency and total value of supply under the contract exceed 2,50,000. It is mandatory for government agency to deduct TDS at 1% under CGST, SGST on the net value of taxable supply. So what is the value? 4,61,000. 4,61,000 into 1% will be 4,610 under CGST and 4,610 under SGST. So that will be the TDS to be deducted and remitted. Okay. Then this question number 39 already we discussed now. So question 39 we discussed, and look into one question related to metal scrap. That is in question number 18, page 12. Question number 18, page 12. Tata Steel Limited, a registered supplier in Jharkhand, sells metal scrap falling under chapter 72 of Customs Tariff Act worth rupees 25 lakhs to Mahindra and Mahindra Limited, another registered person in Maharashtra. Supplier also registered? Yes. Recipient also registered? Yes. Whether TDS is applicable on supply of metal scrap? Yes. The transactions involve scrap of iron and steel. Additionally, BHEL, a public sector undertaking, purchases 15 lakh worth of metal scrap from Tata Steel on June 20. BHEL is also registered person under GST. Now, generally, supplies between notified persons. If I am supplying metal scrap, that is covered under TDS. Even PSU is also covered under TDS. Supply between notified persons, generally there is no TDS, but that excludes metal scrap. So when Tata Steel is supplying metal scrap to a PSU, whether TDS is applicable there also? Yes. In both the cases, what is the value of total value of supply under the contract? Exceed 2,50,000? Yes. So question number 1. For both the transaction, the applicable GST is 18%. Determine the TDS liability for Mahindra Limited and BHEL on their respective purchases from Tata Steel. What will be the TDS applicability? Applicable or not applicable? Yes, that's what we discussed. Because as per section 51, supply of metal scrap by a registered person to any registered person is subject to TDS if the value of supply under the contract exceeds 2,50,000. Now first case, where is Tata Steel located? Jharkhand. Where Mahindra and Mahindra is located? Maharashtra. Same state or different state? Different state. Means what is the nature of supply? Interstate supply. What is the type of GST? IGST. So therefore Mahindra and Mahindra should deduct 2% towards IGST and they need to remit. Is that clear? Then next transaction. Where is supplier located? Tata Steel, Jharkhand. Where is BHEL located? They have not given any information. For your information, all PSUs will have registration in Delhi. Got it? All PSUs, public sector undertakings, will have registration in Delhi. So therefore, we need to take Delhi as the place of supply. Means is it intrastate or interstate? Again interstate. So therefore, BHEL should deduct 2% as TDS. What is the value of supply? In case of Mahindra and Mahindra, 25 lakhs. In case of BHEL, 15 lakhs. So 25 lakhs into 2%, 50,000, and 15 lakhs into 2%, 30,000. That will be the TDS to be deducted. Is it clear? Then second question. Calculate the total GST payable or total amount payable by Mahindra and Mahindra and BHEL to Tata Steel. First, how much is the money that they need to remit? 25 lakhs, but the 25 lakhs is excluding GST. So therefore, they need to add GST 18% minus TDS what you have computed. First you take Mahindra and Mahindra. What is the value of the goods? 25 lakhs. So 25 lakhs into 18%. What is 25 lakhs into 18% or plus 18%? 4 lakh means total comes to 29 lakh 50 minus what is the TDS? 2%, 50,000. So 29 lakh 50,000 minus 2%, that will be 29 lakhs is the amount remitted. Is it clear? Then BHEL. BHEL, what is the value? 15 lakhs. What is the GST? 18%. So on 15 lakhs, what is 18%? 2 lakh 70,000. So 15 lakh plus 2 lakh 70, that is 17 lakh 70,000 minus what is the TDS? 15 lakhs into 2%, 30,000. So 17 lakh 70 minus 30, 17 lakh 40,000. Then third part. If Mahindra and Mahindra Limited fail to deduct TDS on its purchase, what will be the implications under CGST Act? Mahindra and Mahindra Limited is required to pay interest for delay in payment of TDS, plus there will be also late fee for delay in filing return. That will be 25 rupees per day subject to maximum 1000. Okay. So on the amendment related to metal scrap, you may get a question like this. Okay. Next. Look into one more question related to input tax credit. Question number 32. Question number 32. As per CGST Act, it is one past exam question. As per CGST Act 2017, Vishnu Limited was not mandatorily required to get registered. However, it opted for voluntary registration and applied for registration on 12th February 2024. Registration certificate has been granted by the department on 24th February 2024. Vishnu Limited is not engaged in making interstate outward taxable supplies. The CGST and SGST liability for the month of February is 31,000 each. Vishnu Limited provides the following information of goods held in stock on 23rd February 2024. Capital goods procured on 5th February, rate of CGST and SGST 6% each, being intrastate supply 2 lakhs. Now, here what is happening? They are liable to get registered and they are making application for registration or voluntary registration. Voluntary registration means which section we need to refer? 18(1)(b). 18(1)(b). So we need to see the closing stock before the date they get the registration certificate. What is the date on which they got the registration certificate? 24th February. So we need to see the closing stock as on 23rd February. And for February month, they have some liability also. Vishnu Limited provides the following information of goods held in stock as on 23rd February 2024. Capital goods procured on 5th February 2024, rate of CGST and SGST at 6% each, being intrastate supplied 2 lakh rupees. Can they take ITC on this capital goods? No. 18(1)(c), 1D only they can take credit on capital goods, not under 18(1)(a), 1B. Correct? Huh? So on this they cannot take credit. Inputs contained in finished goods held were procured on 13th February 2023. Can we take ITC? No, because the closing stock should have been purchased within 1 year prior. Yes, 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 yes. Whether you understood? Yes. And whether they can take ITC? Yes. So we will tell one yes, so that he will not speak anything. Think here, think here. The closing stock should have been purchased within 1 year prior. What is the closing stock date? 23rd February. When they procured it? Is it within 1 year prior or beyond 1 year prior? So they cannot take ITC on these inputs. Value of inputs received on 10th October 2023 contained in semi-finished goods held in stock. Can they take ITC? Now tell correctly. Yes, they can, because it is within 1 year prior to the closing stock, and inputs in semi-finished goods they can take ITC. So 250,000 into 6%, 6%. How much? 250,000 into 6%, 6%. That is 15,000, 15,000. So you can see the answer. 15,000 CGST, 15,000 SGST. Okay. Up to that it will be nil. Next. Inputs procured on 1st February 2024, same month, lying in semi-finished goods, rate of CGST, SGST 7.5%. Can they take? Yes. 150,000 into 7.5%, 7.5%. How much? 11,000. So 11,250 CGST, 11,250 SGST. Then next. So they can take ITC on this. Inputs procured on 8th February, lying in stock of finished goods, rate of IGST 18%, being interstate supplies. 8th February means same month na? Can they take ITC? Yes. Why they cannot take ITC? They can, because closing stock date is 23rd February 2024 and 8th February is within 1 year prior. So definitely they can take ITC on this, but it will be IGST. 60,000 into 18%. What is 60,000 into 18%? 10,800. So they can take ITC. The only restriction is what you know. Capital goods they cannot take ITC, and even the inputs which is purchased beyond 1 year also they cannot take ITC. Otherwise they can happily take ITC, and even matching is not required. So 26,250, 26,250 and 10,800 they can avail as ITC. What is their liability? Go to the liability place. Vishnu Limited is not engaged in making interstate outward taxable supplies. The CGST and SGST liability for the month of February is 31,000 each. So then in this case, what is their liability? 31,000. How much ITC they have? 26,250. Now first, which credit should be exhausted? So 10,800 you divide equally between CGST, SGST. So 10,800 divided by 2, 5,400 and 5,400. So see this, they are using 31,000, 31,000. First IGST credit exhausted. Thereafter we will utilize CGST credit and SGST credit. So therefore the liability will become nil. Clear? Because the ITC is more than the liability, the liability is 31,000 only, and if you take out 5,400, what is 31,000 minus 5,400? 25,000. So 25,600 you can take from 26,250, 26,250. So the remaining ITC will be carried forward. So the liability will become nil. Now check whether 86B problem will come in this case. All these cases where we have more ITC than the liability, we need to check for rule 86B. When rule 86B is applicable, if our taxable turnover in the month exceeds 50 lakhs, is it given that our taxable turnover in the month exceeds 50 lakhs? First of all, their turnover not exceeded even 20 lakhs because they are voluntarily getting registered. Got it? So therefore rule 86b is not applicable. This you don't forget. That's what I am telling. In the question, the moment you see that the ITC is more than the liability, ensure that you are checking rule 86b. Okay. That is about this. Then we are going to start with a new topic now, that is value of supply. Value of supply under GST. See that in page number 87. Page number 87. Only one section we have in this, section 15, but mostly there will be a question on this. Every 2 attempts once they are asking one question on value of supply. But this attempt I am little doubtful, because last attempt only, that is May attempt only, this B part, the second part of the question, they asked on value of supply for 5 marks. I doubt, but for MCQs definitely it will be helpful again, because in MCQs you know what they are doing, they are giving 2 case scenario MCQs, 2 case scenario MCQs with 3 MCQs. So 3 plus 3, 6, 6 2s are 12, then 1 2 mark MCQ and 1 mark MCQ. That's how your MCQs will be. Seriously pa, 2 case scenario MCQs, and for the 2 case scenario MCQs they will be giving 3 questions, and 3, so 6 questions, 6 into 2, 12 marks. Then you have only 3 marks in MCQ, because 15 marks they will give, 1 2 mark MCQ, 1 mark MCQ. This is how your question paper MCQ also will be. In that case scenario MCQs, definitely it will be helpful for value of supply, because you cannot imagine a MCQ question without touching on value of supply. They will somehow give, at least worst come scenario, that adjustment related to subsidies they will be giving. Okay. So due to that reason we will learn this, whether we get a 5 mark question or not, but in MCQs it will help. So first section 15 talks about value of supply. In that section 15 they are telling that assessable value equal to transaction value. What is assessable value means? The value on which tax is assessed is known as assessable value. Means we follow ad valorem method. Ad valorem method means first we get a value, on that value we multiply a rate, so we will be getting the tax amount. Is that clear? There will be a value, on that we multiply a tax and we get the tax amount. So this method is known as ad valorem method. In this ad valorem method, so value is nothing but the transaction value. What is the transaction value? The price involved in the transaction. Price actually paid or payable will be taken. So see that assessable value equals to transaction value determined in terms of section 15 if the following conditions are satisfied. So what are the 2 conditions? So the price involved in the transaction is transaction value. For example, I am selling you a biscuit packet for 40 rupees. 40 rupees is the transaction value. I am taking a class for 5,000 rupees. 5,000 rupees is the transaction value. Or if a person is providing you a service of transportation, that is a vehicle, transportation, train is providing you transportation for a ticket price of 50 rupees. That 50 rupees is the transaction value. You understood or not? The price involved in the transaction is the transaction value, provided 2 conditions are satisfied. What are the 2 conditions? Price must be the sole consideration. Supplier and recipient are not related. What if price is not sole consideration? When price is not sole consideration? When price is not sole consideration, apart from price, there is some other consideration also. For example, I am a electronics dealer. You are coming to my shop and you selected one TV. That TV rate is 30,000 rupees. Now you have one old TV at your home and you are telling, can I do the exchange? I am telling yes, you can exchange. And you are giving me old TV and you are paying me 25,000. I am giving you this brand new TV. Now, is 25,000 the sole consideration? No. Apart from 25,000, what is that I am getting? Old TV, means price is not sole consideration. Is it clear, pa? Next, supplier, if the price is not sole consideration, what we will do? Can we take the 25,000 as transaction value? No. Then what we need to do? We need to determine the market value, open market value. Be careful. When transaction value is not applicable, we need to take open market value. In exam, they will be giving you transaction value also, open market value also, and they will be twisting and they will be telling like you need to go with open market value or transaction value like that. Be careful. You just check. Is really transaction value applicable or not applicable? If not applicable, then only open market value. Suppose if they give a situation like this, that is partly money and partly in some other form, then we will take transaction value or open market value? Open market value. Again, second point. What is that second point? Supplier and recipient are not related. Then only transaction value. What if they are related? Open market value. How do we know that they are related or not? We have a related definition. That related definition we need to see. Then only we will know whether they are related or not. So please keep this page and go to supply chapter. There I have given what is the meaning of related. Page number 16. Page number 16. In short, we will remember. In short, we will remember what is the meaning of related. Remember this word family scope. Family scope. Generally, related means family only will come into picture. Correct? Family scope is related. Okay. What is family means? As per GST. Don't tell. Family means that's a big definition. Because we will throw seeds many places and many trees will come and all those trees belongs to our seed only. Therefore, you will tell that is also our family. Not that. I am talking about family as per GST. What is the meaning of family as per GST? Parents will come. Spouse. Next. Children. Next. Parents. Grandparents. Grandchildren? No. Brothers and sisters? Yes. So these people are only family. Who are family pa? Spouse, children, brothers and sisters, parents, grandparents. That's it. Whether they should be dependent, then only they will be called as family. Yes. But except spouse and children. Spouse and children, whether or not dependent, they will be treated always as family. But others should be wholly and mainly dependent on that person. So you need to remember this family first. Family. So family. Family means what? Spouse and children of the person, whether or not dependent, and the parents, grandparents, brothers and sisters of the person, if they are wholly and mainly dependent on that person. Whether in-laws will come under family, brother-in-law, sister-in-law, daughter-in-law, son-in-law, father-in-law, mother-in-law. No. In-laws are not family. And whether grandchildren is family? No. Grandchildren is also not covered under family definition here. Is it clear? Then next. Family scope is what you need to remember. Family you understood na? Then scope. Yes, for sole selling agent. A sole selling agent is always treated as related. What is sole means? Not S-O-U-L, S-O-L-E. One agent. There is only one agent. Through that agent only all transaction will happen. Then that agent will be related. Is it clear? Then C for control. In control, total 4 points they have given. Point number 1. Common shareholder between two companies who invested greater than or equals to 25%. Is it clear, pa? Common shareholder between two companies. There are two companies which is having a common shareholder. How much that common shareholder has invested? More than 25%. For example, A Limited, B Limited you take. Two companies. A Limited, B Limited. In A Limited there is a Mr. X as shareholder. B Limited also Mr. X as shareholder. How much Mr. X has invested in A Limited, B Limited? Say A Limited 30%, B Limited 30%. Definitely these A Limited and B Limited will become related. Why? Why like that? Because definitely if any transaction that takes place between A Limited and B Limited, that transaction is influenced by Mr. X, because they need to take it special resolution. Special resolution means without X vote, the resolution cannot be made, because he himself is holding greater than or equals to 25%. Are you understanding this? That's the reason why any transaction between these two companies will be related party transaction. How A Limited will know that X has invested more than 25% in B Limited? As per Companies Act, every person who has invested more than 25% in a company needs to disclose that fact with the other companies also under disclosure requirements. Is it clear? Due to that reason, they will definitely disclose this information that they invested more than 25% in B Limited. They will disclose that fact with A Limited, and they invested more than 25% in A Limited. They will disclose that fact with B Limited. So if A Limited, B Limited makes a transaction, that's a related party transaction. Is it clear? So that is common shareholder investment greater than or equals to 25%. Second point, control. What is second point, control? Normal investment more than 50%. Normal investment itself more than 50. One company or one entity invested more than 50% in the other, then there exists a control. Agreed? Example, holding subsidiary. A Limited is a holding company, B Limited is a subsidiary company. A Limited invests more than 50% in B Limited. So they both are treated as related. Then common control by a third person. What is this common control by a third person means? Two companies are under the same parent company. A Limited is one company, B Limited is another company. These both are under the common control of a third company. For example, Reliance Industries Limited is the parent company. Under Reliance Industries Limited, there are n number of companies. Reliance Trends is one company, Reliance Digital is one company. Are you understanding this? Even though Reliance Trends has not invested anything in Reliance Digital, or Reliance Mart has not invested anything in Reliance Digital, but these three companies are under the common control of a parent company. What is that? Reliance Industries Limited. Due to that, these people are related. Simple pa. Two children pa. Same father pa. Mother different pa. Related or not related? Same logic. You understood? Clear? They both are having the same parent. They both are having same parent means definitely they both are related. Can you remember like this? So common control by a third person. Okay. Next. Majority controlling a third person. The majority controlling a third person. What does it mean? That is two shareholders of a company. Carefully listen. Two shareholders of a company. The cumulative investment made by those two shareholders is more than 50% in that company. Whether those two shareholders are treated as related? Yes. Are you understanding this? There are two shareholders. The two shareholders invested how much? More than 50% in the company. Now in this case, whether those two shareholders are treated as related? Of course, yes. Because majority is with them only. Okay. For example, you take this AGS Cinemas, you know, AGS Cinemas. This AGS Cinemas is owned by three brothers, Kalpati brothers. And these three brothers, you take any two brothers, if the investment is more than 50% in AGS Productions Limited, then definitely they are treated as related. Because generally brothers are related only if they are dependent. Correct? Generally brothers are treated as related only if they are dependent on one another. Am I right? That's what we learnt in family definition. But in this case, these two brothers together control the company, then they both are treated as related. Are you understanding this? That is why they have brought in this majority controlling a third person. Okay. Next. O, officers or directors of one another. In my business, I am appointing you as officer or director. In your business, you are appointing me as officer or director. Now we both have mutual interest in our business, so we both are treated as related. Is it clear? Officers or directors of one another. P for partners of a firm. So there is a partnership firm, L, M, N and Co. L, M, N are the partners. L and M are related, M and N are related, L and N are also related. Every time if you observe, I am taking only two parties because supplier and recipient. You understood? While seeing the relationship, you should see the relationship between two parties only. Generally also. Okay. Threesome, foursome and all is not our Indian culture. Got it? Only two. Only two. Got it? So therefore, while seeing the relationship, we need to see only two parties. That's why L and M are related. M and N are related. And L and N are related. You got it? Again, while checking the shareholders also, we took only two shareholders. Then E, employer and employee are always treated as related. That's the reason why gift given by employer to employee will become supply if the value of gift exceeds 50,000. Now, tell me, Pa, without seeing, what is the meaning of related? Come on. Family scope. Family, spouse and children, whether or not dependent. Then parents, brothers, sisters, grandparents, if they are wholly and mainly dependent on that person. Clear? Then scope, yes. Sole selling agent. C, control, 4 controls. Number 1, common shareholder. How much? Greater than or equals to 25%. Next, investment more than 50%. Then they are under the common control of a third person, or majority they control a third person. Got it? Next, SCO, officers or directors of one another's business. Then P, partners of a firm. Whether partners and firm are related? No. Partners of a firm are only related. E, employer and employee. Clear? Now, whenever there is a transaction between related parties, then definitely transaction value is not applicable and we need to determine the value as per rules, that is open market value. Got it? So, you just write down here, if transaction value not applicable, if transaction value TV not applicable, then value shall be what? Open market value. Then value shall be open market value. If transaction value not applicable, then value shall be open market value. Clear? Suppose if transaction value is applicable, then the price involved in the transaction should be taken. For example, there is a supplier who is making supply of goods or service or both to the recipient, for which the recipient will make the payment for supply. This payment will be taken as the transaction value. Got it? Now, total there are 5 inclusions. That 5 inclusions is what we are discussing now. First inclusion, 15(2)(a). Any taxes, duties and cess other than GST shall be included in the value as per 15(2)(a). Means while computing GST, what we need to do? Any tax which is charged by supplier to recipient should be included. So therefore, while computing GST, whether we need to include the entertainment tax paid to local authority? Yes. While computing IGST, whether we need to include customs duty? Yes. So like that, whenever we are computing GST, GST will always come in the last. And what will be added? All other taxes, duties, etc. will be added. You understood? So any tax other than GST shall be included in the value. That is 15(2)(a). Then next inclusion, 15(2)(b). Recipient is incurring some expenditure. Who is incurring the expenditure? Recipient. On behalf of supplier or on his own account, we need to check. If it is on behalf of supplier, such expenditure is to be included in the value. You got it? Suppose if you are incurring the expenditure on your own account, then it will not be included in the value. Example, say you are attending the classes and you got some coffee or tea for me to drink. Now that coffee and tea is an expenditure which you incurred, correct? Is it included in the value? Yes. Recipient incurs the expenditure on behalf of the supplier. Actually, I should pay for it now, but you paid. Therefore, it should be included in my value on which GST will be payable. How will department will know, sir? Simple. The bill is in my name. The bill is in my name, but I did not pay. You paid. Means, is it an indirect consideration to me? So, therefore, it will be included in the value. Understood? Will the department check all these things? Yes. During audit, they will check. These are all the bills in your name, sir. Why you have not made the payment? Sorry, sir. I have not made the payment. I will pay it later. Then 180 days condition. Reverse the ITC. You got it? 180 days condition. Reverse the ITC. No, sir. I did not pay, sir. But my recipient paid, sir. Oh, very good. Your recipient paid. Then that will be included in your value. Did you pay GST? No, sir. Then include it and pay GST. You understood? You understood? Somehow they will collect. Either if you have not made payment to supplier, if you have availed the ITC, reverse the ITC. If you have not made the payment, they have made the payment, 180 days condition not applicable. We learned there. When the payment is made by recipient to some other person on behalf of supplier, 180 days condition not applicable. Okay, but doesn't mean that it will not be included in my value of service to you. It should be included. On that again I need to pay GST. Is it clear? Then recipient is incurring expenditure on behalf of supplier. Such expenditure to be included in the value. One more example I will give you. I purchased raw material, and using that raw material I made the finished goods and I gave you the finished goods. Who should have made payment to the raw material supplier? Manufacturer. But manufacturer did not pay. I asked my buyer, you are my buyer, to make the payment to my raw material supplier. Why you paid to raw material supplier? On behalf of supplier. Therefore, that payment which you made, should it be included in my value? Yes. Suppose, another example. I need to deliver the goods at my factory gate, means X factory or X works price. And you need to incur the transportation from this place to your place. So, you incur the transportation cost. Who incur the transportation cost? Recipient. Is it on behalf of supplier or on your own account? On recipient's own account. So, will it be included in the value or it will not be included in the value? Got it, pa? So, if recipient is incurring expenditure on behalf of supplier, such expenditure to be included in value. If recipient incur the expenditure on his own account, such expenditure shall be excluded from value. Is it clear? Then, next. Suppose if supplier is incurring the expenditure and recovers from the recipient, then supplier is incurring some expenditure and recovering it from the recipient. Should it be included in the value? Naturally. By whatever name called, if I am collecting money from you, will it be included in the value? Yes. If a coaching center collects money from the student as admission fee, registration fee, book fee, coaching fee, ID card fee, missed classes fee, any amount will be coming under value only, correct? So, therefore, by whatever name called, the expenditure may be recovered from the recipient. But at what stage? At what stage it should be recovered? At what stage? Again, you are actually comparing with someone else. No. Generally, I am saying, sorry, pa. I did not take college example because college is exempted, pa. That's why I said coaching center. One neat coaching center, pa. Okay, va. One neat coaching center. Let's take that way. Not at all a CA coaching center. Neat coaching center. Allen, Akash, like that. Some coaching centers are there. Physics wala, like that. They have collected. Now, will it be included in the value? Yes. They even collect for the T-shirt also. Mandatorily, every student should wear their brand T-shirt. Yes, sooner or later it will come into CA coaching also. Don't worry, it will come. So, if you are sitting in the class, you need to wear the T-shirt only and you need to sit in the class. Okay. But till that time, all these things are commercialized. No problem. But usually what happens, if the T-shirt, you need to buy mandatorily. If you want to join here, you need to buy the t-shirt mandatorily. Then will it be included in the value? Yes. So that's what I'm telling. Not just the tuition fees or not just the coaching fees. Any other amount, if the supplier is recovering from the recipient, it will be included in the value. Is it clear? Expenditure incurred by supplier and recovered from the recipient in the course of supply, such expenditure to be included in the value. What if it is as a pure agent? Means on behalf of the recipient, the supplier is recovering it from the recipient by incurring it. Example, this is income tax filing season. You approached me to file the income tax return. I will file the income tax return and I will also pay some income tax. Whose income tax? My income tax. My client's income tax. And recover from my client income tax filing fees 5,000. Income tax paid on behalf of the client 3,000. Now 5,000 is the value or 8,000 is the value? 5,000. 8,000 is not the value. Actually that income tax who should pay? Client should pay. But who paid? Supplier. So it will not be included in the value. Is it clear? So which will be included in the value? Only if it is in the course of supply. It will be included in the value, that is 15.2c. Then next 15.2d. So first inclusion is what? Taxes, duties and cess by whatever name called other than GST. Number 2, recipient incurs the expenditure on behalf of the supplier. Number 3, supplier incur the expenditure in the course of supply. Number 4, interest, late fee or penalty for delay in receipt of consideration. Interest, late fee or penalty for delayed payment shall be included in the value. What is that? So somewhere in financial management, working capital management, you might have come across this point that if the recipient has not made payment within the credit period, the supplier will collect the interest from the recipient, that is a inflow. Or even in foundation bill of exchange also you would have studied, when the bill is not honored, the bill will be renewed. For renewing the bill, some interest will be collected from the recipient. All these are examples of interest, late fee or penalty for delay in receipt of consideration. Will it be included in the value? Yes, it will be included in the value on which GST is payable. Then 15.2e, subsidy. Subsidy, carefully listen. Subsidy is divided into two. Directly linked to the price, not directly linked to the price. First of all, what is subsidy? Grant. What is subsidy? Grant. That grant is divided into two. Directly linked to price, not directly linked to the price. What is the meaning of directly linked to the price? Directly linked to the price means that subsidy is depending upon my outward supply. Example, for every electric vehicle sold, the dealer will receive 10,000 rupees from government as subsidy to promote electric vehicles. You understood? Is that 10,000 per vehicle sold or irrespective of vehicle sold? Means it's directly linked to price. Suppose if the government gives some 1 lakh or 2 lakhs for promotion of business in backward region, say you are setting up a factory in backward region, or you are giving employment to women, for that reason you got some subsidy from the government or subsidy from some other person, will it be treated as directly linked to the price? No, because it is no way connected to my outward supply. If the subsidy is connected to my outward supply, then it is directly linked to the price. If it is not connected to my outward supply, then it is not directly linked to the price. Is it clear? See this. Directly linked to the price means subsidy is based on outward supply. Not directly linked to the price means subsidy is irrespective of outward supply. Suppose if it is not directly linked to the price, will it be considered in the value or ignored for valuation? Ignored for valuation, because it is not based on your outward supply now. So you ignore it for valuation and you treat it like donation. Got it? You treat it like donations. Some donation you got. That donation, again, will it be taxable or not? Depends. That it is conditional donation, unconditional donation, etc. depending upon that. For example, if it is a conditional donation, then Is it treated as consideration? Yes. And will it be chargeable to GST? Yes. What if it is unconditional donation? What is difference pa? Conditional, unconditional. I have to do something in return to you for the donation. Then it will be called as conditional donation. I don't have to do anything to you related to the donation. Then it will be coming under unconditional donation. Unconditional donation not treated as consideration to the person who is receiving the donation, whereas conditional donation is treated as consideration. Accordingly, it will be taxable or not taxable. Okay, but right now for valuation it is relevant. Is it clear? Ignored and not considered in value, you need to treat it as donations. Then suppose if the subsidy is directly linked to the price, means that subsidy is based on outward supply, check you are receiving that subsidy from whom. Are you receiving that subsidy from government, that is state government or central government? Then it is not included in the value. If you are receiving it from others, others means others, NGO or local authority or a private limited company or any other person, then it should be included in the value. Is it clear? Now, so how to understand this practically based on application? Simple pa. There are two views which are possible here. View 1 is price after considering subsidy. View 2 is price without considering subsidy. What is the meaning of that phrase? Price after considering subsidy means you know that you are going to get the subsidy. You know that you are going to get the subsidy. So which means you will collect money from the recipient. You will collect money from the recipient after deducting that subsidy. So carefully listen. I'll just explain to you. I need your concentration for next 10 minutes. Please listen. That is, I am providing CA coaching. I am providing CA coaching to below poverty line student. Okay, I am providing CA coaching to below poverty line student. My regular fees is 10,000 rupees. My regular fees is 10,000 rupees, say for CA foundation. Okay, for example, I am telling you. And what happens here is that I will get subsidy because of below poverty line student. I am providing at a concessional rate, the fees at a concessional rate. I will get subsidy from state government. What is that subsidy I get from state government? Say 3,000 rupees I will get subsidy from state government. And subsidy from NGO. One NGO will give me 2,000 rupees as subsidy. Now tell me, if I consider the subsidy, how much I will collect from the student? Lapa, the fees is 10. I get the subsidy from the government as well as NGO. If I consider the subsidy, means what? I know that I am going to get it. Got it? If I consider the subsidy, means I know that I will be getting this 5,000. Then how much I will collect from student? Price from student 5,000. I am not asking value, dear. I am not asking the value here. This is first of all not the transaction value. So wait, we are determining the transaction value. Then only we will determine the value of supply. I am talking about how much I am going to collect from the student. This is my regular fees. Okay. But how much I am going to collect from student? Price from student considering subsidy. Considering subsidy. How much I will collect from the student if I consider subsidy? 5,000. How much I will collect from student? Price from student if I don't know that I will be getting the subsidy without considering subsidy. Without considering subsidy, what will be the value? 10,000. Understood or not understood? What is the meaning of price after considering subsidy? I know that I am going to get the money from the government and NGO, so I will not collect it from the student. Without considering subsidy means I don't know whether I will receive it or not, so I will collect 10,000, but whenever I come to know that I will be getting the subsidy, I will return that 5,000 rupees to the student. Is it clear or not? Example, generally electric vehicles, every dealer know that they are going to receive 10,000 rupees subsidy for sale of EV bike. That's the reason why while fixing the price itself, they will consider the 10,000 and they will fix the price. But this electric, this solar panels when you are putting, then in that case also government is giving a subsidy. But the seller of solar panel don't know whether government will sanction subsidy to you or not. So first they will collect the full money from you. If government sanction the subsidy, that amount they will return it to you. Is it clear or not? That is the difference between considering subsidy and without considering subsidy. Suppose if you get in the question price net of subsidy or price after considering subsidy, you got it? If you get in the question price net of subsidy or price after considering subsidy, what does it mean? Which means that let X be the price, from that they reduce the subsidy and then they gave the given price. Is it clear, pa? Whenever you get in question, price net of subsidy or price after considering subsidy, what is the meaning of that? There is some price. From that price, they reduce the subsidy and then you got the given price in the question. Is it clear? So here 5,000 is the given price. 5,000 is the given price. Now you take 5,000 as the transaction value. What is the transaction value? 5,000. Now what is the first point? Subsidy from state government. Subsidy from state government as per provision. Subsidy from state government to be included or to be excluded? To be, and in the given price already we have excluded. From how we got 5,000 rupees? 5,000 rupees how we got? We got it after reducing 3,000 and 2,000. Correct or not? Sir, this 3,000 as per provision to be included or to be excluded? To be excluded. And here while arriving at this 5,000, already we have excluded. Should we exclude it again? No. So, subsidy from state government. Subsidy from state government is to be excluded. Like this only you need to write in exam provision. As per section 15 subsection 2, it is to be excluded. But in the given price it is already excluded. Correct? In the given price it is already excluded. So further exclusion shall not arise. Is it clear? Then subsidy from NGO. Subsidy from NGO. Subsidy from NGO as per the provision, it is to be included or to be excluded? Included. But in the given price what you have done? So what you should do? Add. How much you need to add? That is 2,000. So therefore the answer will be, the value of supply will be 7,000. The value of supply will be 7,000 because subsidy from NGO is to be included. But while arriving at the given price, it is excluded. Therefore, we need to add back. Okay. Thereby, you will get 7,000 as the answer. Understood, pa? Then next, suppose you take 10,000. Means what? This X itself is the given price. Correct? Means you have not reduced any subsidy. If you get subsidy, you will give it to the buyer or give it to the customer or give it to the student. You got it? But 10,000 rupees is what you collected from the student. So what will be the transaction value? What will be the transaction value? 10,000. Subsidy from state government. Means when you need to take this way, when the given question says price without considering subsidy or price without net of subsidy, like that you don't have in the question. Question is simple. Then in that case you need to take the price given in the question is without deducting the subsidy. Now you got subsidy from state government. Now what is the provision say? Subsidy from state government. To be included or to be excluded? To be. In the given price, did we exclude it or not excluded it so far? So what we need to do? Exclude means we need to deduct, minus, correct? How much? 3,000. Then subsidy from NGO. Subsidy from NGO, what is your answer? To be included or to be excluded? As per the provision, to be included. In the given price it is, we have not deducted, correct? We have not reduced, means already it is there. So should we deduct it again or add it again, do anything? No, just ignore. So what is the value of supply? Are you understanding this? So depending upon the question, we need to change the way of interpretation. Got it? The question may be after considering subsidy, or the question may be without considering the subsidy. So we need to change that accordingly. What is the meaning of considering subsidy? That you know enough. What is the meaning of considering subsidy? Means while arriving at the price, they have reduced the subsidy. While arriving at the price, they have reduced the subsidy. If the question is silent, what should we do, sir? They have not given anything, sir. Consider that the price is after reducing subsidy. Means the given price in the question is after reducing subsidy, means this view 1, got it? So say this, if the question is silent, consider the given price as after reducing the subsidy amount given in the question, that is original price minus subsidy is the given price. Now I will tell you another way, another easy way to remember, another easy way. How much we collected from student? First case. Second case also 5,000 only. If we get, we will return, na? Na pa. First case 5,000. Second case, even though 10,000, when we get money, we will return, na? Means effectively how much from student? From state government, from NGO. 5,000 is transaction value. State government should not be included. NGO to be included. So the answer is 7,000. Over. Clear, appa? You do it like this. Sir, previous and all, I was not able to understand, sir. You do like this, but you will not get marks. For cross verification, it will work out. Like this, if you write now in exam, the valuer will not understand anything. You have to present the answer. Okay. This is for cross checking or shortcut. Okay. MCQ, you can use this shortcut. What is that? How much is collected from student? Net. How much is collected from the student? How much is collected from state government or central government? How much is collected from others? State government, central government, don't consider. Others, take. What is collected from the recipient, you take. Add it. You will get the answer. Is it clear? Understood or not? But presentation, you need to present it like this. It is to be included. In the given price, it is already included. So no need to include it again. To be excluded. In the given price, it is already excluded. So no need to exclude again. Like that, you need to write the explanation. Okay. But just to cross check whether your answer is correct or not, you can follow this logic. Okay. So that is about this, and look into two clarifications related to this. First one, generally what happens for UPI transactions, lot of vendors will prefer UPI transactions. You know why? Compared to credit card, debit card, they prefer UPI transaction. Why? There is no transaction fees, which means there will be some intermediary who will do the settlement. You take your mobile, scan and make the payment. Your bank may be Axis Bank or IndusInd Bank or SBI Bank, correct? But vendor will have some other bank. Not necessary that vendor bank account also should be same bank account. Understood or not? Means someone is doing this debit from your bank account and credit into vendor account. Got it? Who are these people called as? These people are the payment intermediaries or acquiring banks. Got it? Payment intermediaries or acquiring banks. What is their job? The moment you scan and make the payment means you authenticate a debit. So that acquiring bank like Paytm, PhonePe or Google Pay, what they do, they instruct your bank. This idiot has authorized, so I will take money from you. So they will take and they will put it into the vendor account. But if it is a card transaction, they will cut 1%, 2% like that. That's why whenever you are making card payment, the shopkeeper will tell if it is card payment 1% extra, because they are not going to get that 1%. Are you getting this? They are not going to get that 1% because this intermediary will cut 1%. That's the reason why they will be telling 1% extra, or they will discouraging you to make the payment by card. Clear? However, if it is a UPI, this 1% is not there. There is no processing fee. Why, sir, there is no processing fee? To encourage people to use UPI system, so processing fee is not being levied, because those acquiring banks will get incentive from Government of India, Ministry of Information Technology and Electronics. Understood? They get incentive from whom? Government, for doing this UPI transaction or facilitating this UPI transactions. Now, these people who get the incentive from Ministry of Information Technology and Electronics, how they should treat this incentive? As like a subsidy, from central government. Subsidy from central government, what is the treatment? To be included in the value or not to be included in the value? Not to be included in the value. So consequently, on that incentive, whether these acquiring banks are required to pay GST or no need to pay GST? No need to pay GST. Is that clear, pa? Read this. Whether incentive paid by Ministry of Electronics and Information Technology, just remember central government, okay, to whom? Acquiring bank. Who is acquiring bank? The intermediaries. The intermediaries who are involved in this. Actually, Paytm, PhonePe, etc. Not only, they are not the main acquiring banks. The main acquiring banks is your, regular banking channels. OK HDFC, OK ICICI, OK Axis, like that you give na. They are the real acquiring banks. Got it? And this Paytm, PhonePe, all these people are also there in the acquiring bank ecosystem. But really incentive who will receive? That HDFC, ICICI, only few banks are doing the UPI pa. HDFC is there, Axis is there, ICICI is there, SBI is there, and Yes Bank is there, YBL, Yes Bank, okay. So these are the minimum banks which are doing the UPI transactions. Even though you don't have bank account with Axis, but you will be having OK Axis as the UPI. Have you observed? I don't have bank account in Axis, but my UPI ID is OK Axis. I can select. You understood or not? Just like email pa at gmail.com. Whichever mail ID is available, I will go for it. If not at gmail.com, at ici.org. You got it? If that is also not available, I will go with that, someone like at zohomail.com. You understood? Some mail ID I can buy, but all these people are the, mail providers like that. Main banks who do the UPI system is these banks. They get the incentive, okay? Acquiring banks under the incentive scheme of RuPay debit card or low value UPI transaction. When they will get incentive? For what value transactions? Low value. What is that low value? Up to 2000. And what is the treatment of that incentive? Usually such incentive is provided if the amount in the transaction is up to 2000. It is considered in the nature of, come on, it is considered in the nature of subsidy by central government and not included in the value. Consequently, GST is not payable. Understood up to this? Then next. Thereafter, another clarification they provided, because practically what happens, this SBI, OK Axis or HDFC, they will in turn share the incentive to other people, because just because of them, the UPI will not work. Everyone need an app, correct? Through the app only we will make payment. So what are the apps we will be using for making payment? GPay, PhonePe, correct? Or Paytm. UPI, if it is required to work, we need one app, correct or not? Directly, even though ICICI, Axis, everyone is doing it, but we will not go to Axis Bank login and we will not make the payment of UPI, correct or not? We can do that also, but we will not do that. Why we will not do that? Net banking, all these things is headache, so we will not do. GPay, PhonePe and Paytm is so comfortable, so we will make the payment through that. Means without them UPI will work or will not work? Will not work. Means they are also important, correct? Not only that, even some people who provide this voice box, Paytm will provide the voice box, correct? And this Pine Labs, have you heard of this? Pine Labs, they will be providing one device. In the device QR code will be visible, correct? All these people are also there who will further receive the incentive from the acquiring bank. Whether the incentive received by these people like Pine Labs, Paytm, etc., whether that is also treated as subsidy from government? Yes. They will not receive subsidy directly from government. They will not receive money directly from Ministry of Information Technology Electronics. They will receive the money from these acquiring banks. See the next point. Whether the incentive amount received by Ministry of Information Technology shared by acquiring bank, which stakeholder is chargeable to GST? Sharing of incentive by acquiring bank with various stakeholders in digital payment ecosystem. Who are they? Example, Paytm, Pine Lab, merchant onboarding agencies. Merchant onboarding agencies means people who go to each and every retailer, will collect the documents from them, give the QR code sticker and they will paste that sticker there, or called as merchant onboarding agencies. All these people are a part of ecosystem as approved by NPCI. So they should be approved by NPCI. Then is also considered as subsidy and not included in the value. Is it clear, pa? Now related to this, there is one question in Mighty 50. Please see that question. Question number 11. Question number 11. HDFC Bank, an acquiring bank registered under GST, participates in the incentive scheme for promotion of RuPay debit cards and low value UPI transaction, a scheme run by Ministry of Electronics and Information Technology. Under this scheme, HDFC Bank receives an incentive of 10 lakhs for promoting RuPay debit card and low value UPI transaction. What is the treatment of this 10 lakhs received by HDFC Bank? Subsidy from central government. So will it be included in value or not included in value? Not included in value. So consequently on this 10 lakhs, are they required to pay GST or no need to pay GST? Understood up to this? Next paragraph. As per NPCI guidelines, HDFC Bank is required to share a portion of this incentive with its ecosystem partners involved in facilitating digital payments. So HDFC Bank distributes the incentive to stakeholders like Paytm, Pine Labs, which helped to facilitate UPI infrastructure and merchant onboarding respectively. In addition to the compliance sharing, HDFC Bank also shares 2 lakhs with XYZ Marketing Limited, a marketing consultancy that is not part of NPCI specified ecosystem. So who are specified? Who are specified by NPCI? Paytm and Pine Labs. Who is not specified? XYZ Marketing Limited. Okay. Now, what is the details of sharing? HDFC Bank retains 4 lakhs. How much they got, pa? 10 lakhs. On this no GST. They retained 4 lakhs. Then 3 lakhs they gave to Paytm, 3 lakhs they gave to Pine Labs. So whether the money received by Paytm and Pine Labs is chargeable to GST or that is also treated as subsidy? deemed as subsidy, correct? Actually, they are not receiving it from central government, but they are receiving it from HDFC, even though it is not received from government, but as per CBIC circular, we need to deem it as, come on, subsidy. We need to deem it as subsidy. So accordingly, on this 3 lakhs and 3 lakhs, there won't be any GST. HDFC Bank shares 2 lakhs with XYZ Marketing Limited, which is not part of NPCA ecosystem. Got it? How much they are receiving? 2 lakhs. What is the treatment of this 2 lakhs? Chargeable to GST or not chargeable to GST? Chargeable to GST. That because marketing agency or XYZ Marketing Limited is not part of NPCA ecosystem. Answer the following questions based on the facts given below. Is incentive 10 lakh received by HDFC from METAY subject to GST? No. It will be treated as subsidy and not included in the value. Is sharing of incentive by HDFC Bank with Paytm Payments Bank and Pine Labs taxable under GST? No. Further sharing as per CBIC circular, further sharing of incentive by acquiring bank with Paytm and Pine Labs also treated as subsidy and not chargeable to GST as they are notified by NPCA, National Payment Corporation of India. Then third, is the further sharing of 2 lakh with XYZ Marketing which is not compliant with NPCA guidelines taxable under GST? Yes. Incentive received by XYZ Marketing Limited is not part of NPCA guidelines. Therefore, it is not treated as subsidy and will be chargeable to GST. Then 4. What is the total taxable value and GST payable? Only on this 2 lakhs, GST will be payable. XYZ Marketing shall pay GST on rupees 2 lakhs. Is it clear? So that is with respect to this circular on that incentive. Then come back to revised book, page 88. Say this. Expenses incurred by supplier and recovered from recipient. Related to that, we are making a little bit detailed discussion. Any expenditure which is incurred by supplier and charged to recipient, I told you first we need to check pure agent or in the course of supply. If it is pure agent, it will not be included in value. If it is in the course of supply, it will be included in the value. Correct? These expenses is further divided into 2, incidental expenses and other expenses. What is incidental expenses means? Without incurring that expenses, the supply cannot be made. That is known as incidental expenses. Other expenses means even without incurring the expenses, the supply can still be made, but it will add value to the product. For example, you go to a restaurant, order for dosa, and if they give only dosa, how will you eat? You cannot eat. So they give chutney and sambar. So the expenditure of chutney and sambar is incidental expenditure. Without that, the product dosa will not be complete. Is it clear? Whereas, if they also give you vadakari when you are asking, you order for vadakari because dosa with a combination of vadakari and 1 dip chutney, 1 dip sambar will be very good. So for that you wanted vadakari or you wanted medu vada or masala vada, you are ordering that. Now that expenditure will be incidental or other. Even without that, the product is complete, but it will just add value to the product. Is it clear here? So incidental expenses means what? Essential to make supply of goods or services. Other expenses not essential but add value to supply of goods or services. Example, one more example, you buy a two-wheeler. For the two-wheeler, the seat cover is incidental or other? Seat cover. Other, not incident. Seat is essential. Seat is essential, pa. Seat cover I am talking. Other. And what about this mud guard or one, there will be one shield, na? If you take Jupiter, Axis and all, one fabricated steel structure they will put, and if it is this Duke bikes or Royal Enfield bikes, one mud guard they will be purchasing separately. These are again incidental or other? Other. Okay. What about the bulb? Light. Incidental or other? That is incidental. Horn. You understood? So like that, which is essential will come under incidental, remaining will be others. Now, if it is incidental, always it should be included in the value, whether you make the payment at the time of supply, whether they will be charging you at the time of supply or after supply, it should be included in the value. Is it clear? Incidental expenses before or at the time of delivery of goods or supply of services. Example, packing charges. Will it be included in the value? Yes. Even if it is, how packing will be incidental? The packing is incidental only, pa. Example, you are ordering for paste. What they will do? Bring one bowl. We will put the paste in that bowl like that, they will tell, or they will only pack and they will give. Correct or not? So that is essential packing, incidental. So it will be included in the value. Then what if it is after delivery of goods or after supply of services? Example, installation charges. You purchase a AC. They will come and do the installation after delivery of AC. Correct? After delivery of AC, they will come and do the installation and they collect the installation charges. But is that installation essential? That is incidental. Others are incidental. Without installation, how the AC will work? Even though it is collected after delivery of goods, but it should be included in the value. Is it clear? So if it is a incidental expenses, at whichever stage it is collected, don't check that, always it will be included. If it is other expenses, now analyze. Is it before or at the time of delivery of goods or supply of service, or after delivery of goods or supply of service? If it is before or at the time of delivery of goods or supply of service, then include it. If it is after delivery of goods or supply of service, don't include it. Example, transportation charges. So customer is placing an order and he wanted us to deliver the goods at his location. Means is that transportation incidental or others? Others. Why others? Because even without transportation, the product is complete, correct? But this transportation is others. But at which stage? Before delivery or after delivery? This transportation charges before delivery. Only if I deliver, it will be delivered, correct or not? Means the transportation what I am doing is before delivery or after delivery? Before delivery. Therefore, it should be included in the value. What about customization charges? Example, you purchased a car and you did not like the color of the car. You wanted to change the color of the car. So you are asking the dealer to change the color of the car and he changed the color of the car and you paid 40,000 rupees for it. Is this 40,000 rupees incidental or other? Others. Is it before delivery of goods or after delivery of goods? After delivery of goods. Will it be included in the value or not included in the value? Not included in the value of car, but that is a separate transaction. Here, not included means your mind will tell no need to pay GST. No, we need to pay GST, but that is a separate transaction, not included in the value of the product we are selling. Is it clear? After delivery of goods or supply of service, example, customization charges to be excluded. Next, look into the exclusion from the value of supply, section 15 subsection 3 of CGST Act. So far what we discussed, 15.1 meaning, 15.2 inclusions, 15.3 we are discussing, that is exclusion. What is excluded from the value of supply? Discount. Discount is excluded from the value of supply. This discount is divided into 3. Discount given before or at the time of supply. What is the discount given before or at the time of supply means? Trade discount or quantity discounts, correct? That is, if you buy more, we will give you more discount. All these will be coming under pre-supply discount. Pre-supply means before supply discount. Is it allowed as deduction? Yes, it is allowed as deduction. And what we need to do? Sale price minus pre-supply discount. On the balance, we will be charging GST to the customer. Is it clear? So this trade discount is allowed as deduction. Suppose if the discount is given after supply, discount is given when? After supply, but the terms are agreed before at the time of supply. Example, cash discount. In case of cash discount, what will happen? Today, at the time of sale itself, I will tell you, boss, you have to make payment within 10 days. If you pay within 10 days, I will give you 2% discount or 5% discount. If you pay beyond 10 days, I will not give you discount. Means whether the terms are agreed before at the time of supply. Yes, but the discount is given at a later point of time. Is it also allowed as deduction? Yes, but for that what we need to do? We need to give a invoice prepared pa. Invoice prepared. The discount is given after preparation of invoice. Then what is the name of the document? Credit note. Who will be giving credit note to whom? Supplier will be giving credit note to the recipient. Are you understanding this? Sir, if the discount is given before supply means before preparation of invoice, so anyhow in invoice preparation we will show price minus discount like that, correct? So on the net amount only GST payable. If the discount is given after supply means already invoice is prepared. So after supply means we cannot alter the invoice now. We cannot do a time travel, go backwards. Are we Doctor Strange or what? We cannot go backwards and change the time. You understood or not? So the invoice is already there. So we have to just give a credit note. Is it clear? We need to give a credit note, and because of that credit note, the liability gets reduced. But recipient should, today's discussion, that is what we discussed today, recipient should reverse the ITC. What if recipient is not reversing the ITC? Credit note will be invalid. Credit note will be invalid. Whatever liability that got reduced to us, it will be added to our liability. Is it clear? Again I am repeating. Who should be giving credit note to whom? When the credit note needs to be given? Post supply discount, provided the terms are agreed before at the time of supply. Because of this credit note, what will happen to the liability of supplier? Reduced. What will happen to the ITC of the recipient? Get reduced. They need to reverse. What if they are not reversing? Credit note becomes invalid. When credit note becomes invalid, whatever liability that got reduced to the supplier will be added back. Got it? Say this. Discount given before at the time of supply, example trade discount allowed as deduction. Discount is given after supply, but the terms are agreed before at the time of supply. What is the type of discount? Cash discount, and it is allowed as deduction. When it is allowed as deduction? If credit note is issued and recipient should reverse the proportionate ITC. Okay. நான் கதறது உங்களுக்காக தான்ப்பா, not for myself. Okay, so don't laugh when I am screaming and all. No, I am getting hurt. Okay, when you are laughing na இப்படி கத்தறான்ட்டு, please pa, I am shouting, screaming, all these things I am doing for your sake. It is free batch only. Why should I do all these things? I never thought 1 minute also. Have you observed me? Have you observed me yesterday and today? Did I reduce 1% effectiveness? No, because I want you to prepare properly. You are not understanding. I can sense that. How can you sense that, sir? Visible, no, before me. That's the reason why I am taking. I can sit at home and take online class. The camera will not react. The camera will not tell whether it is understood or not. Your eyes will tell. You got it? And as a teacher, that's what I have achieved. I can see the eyes of you and I can tell whether you understood or you have not understood. That's why I am repeating multiple times. I am adding examples. I am ensuring that you are getting it. You got it? And when I am shouting, no, some idiots over there are just playing jokes and laughing, etc. and all. You will know. You will know my value. When someone like this is not doing now, you will know the value one day. Got it? I don't have any problem. Seriously. Say this. If the discount is given after supply, but the terms are agreed before supply, is it allowed as deduction? Yes, it is allowed as deduction. But for that, what the supplier should do? Supplier should issue a credit note. And what recipient should do? Recipient should, and very, very important, and recipient should reverse the proportionate ITC. To whatever extent I have given credit note, to that extent the recipient should reverse the ITC. How will the supplier know that the recipient has reversed the ITC or not? You understood? Supplier liability get reduced only if recipient reverses the ITC. So supplier reduced it, thinking that recipient will reverse the ITC. So what if recipient is not reversing? It will be added to the liability of supplier and they will end up paying the tax along with interest, correct? So therefore supplier should ensure that recipient is reversing the ITC. How will supplier ensure that recipient is reversing the ITC? Number one, they need to get a declaration from the recipient that they have reversed the ITC after completion of the financial year. Now this financial year I am giving credit notes, that is 25-26 I am giving credit notes. Now after completion of this 25-26, I need to get a declaration from you. What is the declaration? That you have reversed the ITC. This declaration will give me peaceful sleep. You understood? Because if the declaration I am not getting, then anyhow in future, if you are not reversing ITC, my liability only will get added, correct? So for that reason, I need to get a declaration. And when declaration, if the total ITC that you need to reverse against my credit notes, again I am repeating, against my credit notes, the total ITC that you need to reverse for a financial year does not exceed 5 lakhs, then in that case, declaration. If it exceeds 5 lakhs, CA or CMA certificate. Who CA CMA? Supplier CA CMA or recipient CA CMA? Recipients CA CMA should give the certificate. What is that certificate they need to give? That my client, based on your credit notes, have reversed the ITC. I checked the 3B. I checked the 3RC3. So therefore you don't worry like that. I need to get a certificate. Is it clear? This point they have added now. It's an amendment. How to ensure recipient has reversed the proportionate ITC. If the ITC does not exceed 5 lakhs in a financial year, sir, 5 lakhs in a financial year with respect to one supplier, that supplier who gave the credit note, then supplier shall obtain certificate or undertaking from the recipient. Suppose if the ITC exceeds 5 lakhs in a financial year, then supplier shall obtain certificate from recipient's CA CMA. Got it? Now, certificate or undertaking includes details of invoices along with supporting details. Means where they reverse the ITC. Is it in 3B, DRC3, etc. Because tomorrow when GST officer will come to my premises and will ask, boss, you gave credit note, your recipient has not reversed the ITC. So I will show all these details to him. No, sir. He reversed the ITC. This is the 3B in which he reversed. This is the DRC3 in which he reversed. Like that, I need to get all the details. With supporting details like GSTR 3B, DRC3. And how do we know that certificate of CA-CMA is a true certificate? The recipient may tamper na. You got it? They will take one letterhead of their chartered accountant or cost accountant and they will only put and membership number and all. Previous audit reports and all will be there. So they will create a membership number, stamp, signature. Can't it be forged or what? Signature also they will forge. Understood? Then what is the proof that that certificate given by recipient is true, that it is their CA CMA? UDIN. Every certificate given by CA CMA should have a UDIN, unique document identification number, just to ensure that this kind of malpractice is not happening. So that CA CMA should log in into the ICI website or CMA website and upload this document and get a UDIN number, and that UDIN number will be printed on that, and that certificate will be shared with the supplier. Is it clear? So that the supplier has two-step verification. You understood? First verification is the recipient has reversed the ITC, that is documents. Second, two-step verification. What is that? UDIN of the CA-CMA. You got it? Certificate of CA-CMA shall contain UDIN. ITC reversed in a financial year is sum of everything, total ITC. Against this credit note, it's not headwise 5 lakhs, total. The certificate or undertaking not required to be uploaded in the portal but made available to officer during any proceeding. We don't have to submit it just now, that just like that. When officer is coming for audit, at that time we should make it available. Is it clear? Again, this is an amendment for May exam, but they have not tested in May exam. High chance is there for September exam. Look into this. If the discount is given after supply and terms are not agreed before supply, then when the discount is given after supply, but the terms are agreed or not agreed before at the time of supply, not agreed, is it allowed as deduction? No. Example, end of season sale discount. Carefully listen. I am sending you, I am a garment manufacturer, say Basics, okay, Basics, because Basics is a Tamil Nadu based company, that's why I am telling you this. Basics Limited, like that one company is there. What is it they do is that they make the shirts, pants, jeans, etc. and all they will make, and they will be sending it to the outlets. For example, you are a franchisee, means to the outlet they will be sending. At the time when they are sending, they will raise the invoice normally. But some models may not be purchased by the people. Maybe the design is outdated, or they may not like it, for the price that is not worth. There are many reasons. So some models will become outdated, not sold. Now what the outlet will tell, the retailer will tell to the manufacturer, sir, this is outdated, either you take it back, correct, or give me some bulk discount to sell it. Now the manufacturer will tell, don't return it, I will give you 60% discount. I will give you 60% discount. Now you offer the discount to your customer and you sell. That's where we see buy 2 get 2 free or flat 40% discount. This season is that only, na? Actually right now we are in that season only. July, August, September, October. These 4 months, end of season. And in this season, fully they will give discount and they will push. Again the new stock will come in November. For them the criteria is December, January. December for Christmas, January for New Year, and thereafter all festivals will start thereafter. So therefore that Diwali etc. and all will happen in November only, na? So at that time they will be bringing new stock, October, November. So this time it is in October, I think, Diwali. So which means by September they will stop this discount offer. Are you getting this? Now coming back to this, how much discount I gave to the outlet? 60%. Pre-supply discount or post-supply discount? Post-supply discount. Is it allowed as deduction or not allowed as deduction? Not allowed as deduction. Means will I be able to give a credit note? No. Which means I raise invoice for 1 lakh. How much you will pay me? 1 lakh or 40,000? 40,000. 60% discount pa. 1 lakh I raised you invoice. I am manufacturer. You are the dealer or you are the retailer. I raised you invoice for 1 lakh. I gave you 60% discount. Means how much you will pay me? 1 lakh or 40,000? But I need to pay GST on 1 lakh or 40,000? 1 lakh. Are you understanding? I need to pay GST on 1 lakh. So this post-supply discount, where the terms are not agreed before the time of supply, is not allowed as deduction. So GST payable on value before discount. Sir, what if you are giving discount to your customer? You are giving discount to your customer, that pre-supplier, post-supplier. You are a retailer, you give discount to your customer, na? That is pre-supply or post-supply discount? Pre-supply discount. Is it allowed as deduction? Yes, very much that is allowed as deduction. That is not at all a problem. Got it? So that is with respect to this. And just one question alone is there. We will complete that question and leave for today related to this point. How to ensure recipient has reversed the proportionate ITC. See this question number 12. Question number 12. No. 1 second. Question number 10. Question number 10. PQR Limited, a manufacturer, entered into a contract with DEF Limited, a distributor, on 1st April 2024. The supply was made on 10th May 2024 with a value of 25 lakhs and the applicable GST rate was 12%. Payment terms required full payment within 30 days of invoice date. A post-supply discount of 7% was agreed upon. So terms are agreed before at the time of supply or after supply? Before at the time of supply. But what is the payment terms? That they have to pay within 30 days. If they pay within 30 days from invoice, they will get a discount of 7%. And upon conditional of DEF Limited successfully selling 80% of the goods within the quarter. By 30th June, DEF Limited sold 85% of the goods, making it eligible for 7% post-supply discount. Consequently, on 15th July, PQR Limited issued a credit note for such discount. Is it allowed as deduction, pa? Sir, discount is given before supply or after supply? Discount is given before supply or after supply? Discount is given before supply or after supply? Visible no for you? Post supply. Okay, post supply means what? After supply. Whether the terms are agreed before or at the time of supply? Before. A post supply discount of 7%. Was the terms agreed before or at the time of supply? Yes. Is this allowed as deduction? Yes. For that, what supplier should do? Supplier should give a credit note. Supplier should give a credit note to the recipient. Is a credit note issued? Yes. And DF Limited has availed ITC on the full invoice value as they complied with the condition. And DF Limited is required to reverse the ITC proportionate to post-supply discount. Now, question number 1. How much ITC needs to be reversed by DF Limited? Take your calculator, pa. What is the value? What is the value? 25 lakhs. In that 25 lakhs, what is the discount given? 7%. So 25 lakhs into 7%. On that, what is the GST? Into 12%. So how much is the ITC that they need to reverse? Is it clear? Then second question. What is the consequence to PQR Limited based on such credit note? PQR is supplier or recipient? Supplier. What will happen to supplier liability? Supplier liability get reduced to the extent of 21,000. How PQR Limited can prove that recipient has reversed the ITC? How much is the ITC amount? 21,000. Means assuming that this financial year only this transaction is there. Whether it exceed 5 lakhs or does not exceed 5 lakhs? Does not exceed 5 lakhs. So what PQR should do? Should get a declaration along with supporting documents. From whom? Recipient, that is DEF Limited. See the answer. As per CBIC circular, as ITC reversal in a financial year does not exceed 5 lakhs, PQR Limited shall obtain a declaration from DEF Limited that they have reversed the ITC along with supporting documents, that is GSTR 3B or DRC 3. What will be your answer in 3 above if the ITC to be reversed is 5,50,000? Respond. If the 5,50,000 means in a financial year it exceeds, so they need to get a ITC reversed by DF Limited exceed 5 lakhs, then DF Limited shall obtain certificate from CACMA certifying that ITC reversal along with what? UDIN and supporting documents. Whether this is applicable only for the current period or even for the past periods. Past periods means they made this clarification retrospective. Even for the older periods like 2017, 18, 18, 19 also they need to obtain this declaration or certificate from CACMA. Is it clear? So that is up to this. And in value of supply, we are left with some small points. With that it will be over. Hardly I need some half an hour to 45 minutes tomorrow. With this we will complete value of supply. And tomorrow's agenda, listen, tomorrow we are going to cover exemptions and charge. Exemptions and what are the cases where liability to pay GST is on recipient, that is RCM. And if time permits, we will be starting some other chapter, but otherwise this, because it will take considerable time. That's the reason why we are going to keep this. And tomorrow we are also going to solve this comprehensive question, the 10 marks questions also, because once we know this value of supply, all these things, we can start solving that question. So tomorrow we will solve that questions also. Thank you. We'll meet tomorrow same time. Thank you.